Good morning, everybody. Today is March 20th, 2026. What we will do on this live stream is best analyze the intraday stock market using cyclical analysis, time confirmation, and more to find the real direction, trend direction, and the wind direction. Time is 9:21 on the board. Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. The news we have overnight is that stock futures tick lower as the S&P 500 heads for the fourth losing week in a row amid high oil prices. We have President Trump coming live today at around 12 p.m. Eastern Standard Time or 1 p.m. We will see how that goes today as well. Today is quadruple witching options, bonds, futures. Things expired today on the third week of March. Before the market starts, we're going to watch a quick video from Jim Cramer. When everybody is bearish, there's nobody left who will sell, says Jim Cramer. 13 hours ago. Well, watch this shit real quick.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little bit of money. My job is not just to entertain, but to educate. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Sometimes you just have to hold your nose and buy. It's a tough thing. Often you get the timing wrong, meaning you'll immediately lose money as your stocks keep falling. But when the averages come down too far too fast, history says you need to be a buyer. Because when the market gets oversold, it will inevitably bounce. You know what? I think that's what happened today. The average spent most of the session down big, before rebounding hard in the afternoon as the price of oil pulled back from its highs. The Dow only finished down 204 points.
All they did was gap fill from the day before and yesterday's pop.
Nasdaq shed 0.28%. What a comeback, based on a decline in the price of oil at the end of the day. But I think the oversold nature of the stock market had much more to do with it. The session started out really bad because we got another big rally in the price of oil. This spike, which was felt far more in Europe than the United States, happened because of a volley of attacks on oil fields. First, Israel bombing the giant South Pars gas field, Iran's biggest gas field, and then Iran hitting Qatar's biggest LNG facility, causing some serious damage. Unlike the U.S., which is overflowing with natural gas, the rest of the world doesn't have enough to go around. Qatar is the world's biggest exporter. So the price of that gas jumped globally, taking the world economy one step closer to a recession, even if it didn't impact our price. We're now headed toward our fourth down week in a row, even as most of our companies are doing quite well, and interest rates, they've been tame. The president did say on Truth Social that no more attacks will be made by Israel on, quote, this extremely important and valuable South Pars field, end quote, unless Iran attacks Qatar first. Which, in that case, the whole South Pars field would be wiped out, Trump claimed. Now, is that an olive branch or just some random musings that kind of...
All right, guys. This purple box, there's a range from yesterday. SPY and QQQ has played with. All right, there was a purple box on QQQ that I ended up deleting before I drew this white box again. So there's not a purple box on the Qs, but there is one on SPY. It is hovering right at the bottom of it. QQQ2, it was right before I deleted it, but I don't know where it was. I don't want to redraw it on QQQ. Let's see how the market opens. Today is Friday, the end of the week, and quadruple witching, and the presidential live stream midday. Market is opening in 5 minutes. There's the gap from yesterday. There's a range from yesterday. Clearly, we're at the range from yesterday. I don't have it drawn on QQQ. 591. All right, let's go look around the market. fuck? It's the wrong VIX or some shit. I don't know why my trend lines aren't showing. What the fuck did this shit even close at yesterday? 170. Okay. Oh, wow. Good morning, everybody. Good morning, Zach. Good morning, Scott. Good morning, Garrett. Good morning, RVL. Good morning, Sherman. Good morning, Chris. Good morning, Mels. Good morning, Horatio. Good morning, Sparrow. Good morning, everybody. Good morning, everyone in the WhatsApp group as well. I'm gonna watch QQQ on the 5-minute here. I'm a little worried it's just gonna be fucking range bound that market open. Good morning, everyone. Good morning, everyone. Market is opening in 31 seconds. $656.34. Bottom of the range of yesterday. After the gap filled. Not the bottom of the range, but the purple box. Another gap down open. Another gap down open. Looks like the bears are trying to push lower, but yeah, Another gap down open. The VIX is not even that spiked. Crazy thing is it's at 25. Maybe because of yesterday they moved up before this shit. SPY and QQQ showing bearish at market open. Man, I just did something else. Jesus. I just shorted fucking the cost speed. I've never done this in my life. I'm kind of scared. I just shorted the fucking Cosby. Fuck. My fucking goddamn hands are shaking typing in the goddamn ETF. Fuck. The goddamn options are like $7,000 each. It's crazy. My hands are fucking shaking. Jesus Christ. Fucking 3x fucking Kospi ETF. Market going lower after gap fill of yesterday. The bears are in control right now at market open. The bears are pushing lower on the Qs and the SPYs off of market open. From yesterday's spike, the bears are in control. This is breaking yesterday's range as well. This is fucking 9:30 right now. Fuck, I can't focus right now because my ETF or you shit is so fucking expensive. I'm sorry. This is like yesterday. It's like a slow fucking open for me mentally, but I've been up for 2 hours, so I'm kind of focused. But god damn, this is my fucking computer. It was good, but now I'm bugging out now too. Now it's a fucking type. I'm fucking scared. My hands are shaking. Get turn this fucking fan away from me. Fuck's making me cold. Damn. 9:35. I am not shorting QQQ or SPY right now. I'm watching. I don't care if they show bearish on SPY and QQQ right now. I missed yesterday's close. I was not home, so it is what it is. They pushed up crazy and gap filled down. Not that I would have done anything off it, but it would have gave me more of a fucking understanding into today morning. 9:35 LOD. Bears are pushing from 9:30 to 9:35. Chris said IWM dipped to 247 real fast. 246. Yeah, 240. Holy shit. IWM melting off from yesterday's spike as well. Damn, this is dirty expensive. Fuck. Chill. I almost added to my fucking core U bullshit, but I'm waiting. I might have to wait a couple of days on that. It said Asia overnight. You know what's crazy? Watch this shit. Ready? We go to Asia overnight. It says the Nikkei fell down 3.4%. And it says right down here. Right? Fuck. South Korea's blue chip Kospi was the rare exception, rising 0.31% to end. Fucking Korea. Right, how the fuck does Nikkei go down 4 fucking percent, 3.8%, and the motherfucking Kospi up? A whole different world. Wild. Bears are here. God, my hands are fucking shaking. Fuck. It's fucking crazy. I just added in Koryu. Fuck. I'm in the Kospi for fucking 10k now, $11,000. This might be the biggest trade I've done this month. I ain't go far. This might be the biggest trade I'm gonna do this fucking month. Fuck me. I'm in Koryu for fucking 12k now. I might need to watch this shit all fucking day long. I'm not gonna front, guys. I'm kind of sorry. I'm scared as fuck right now. I'm sorry. I'm gonna go back to the U.S. stock market. I'm just gonna leave this level here. Alright. Time is 9:40 right now. LOD is breaking. The bears are in control on SPY and QQQ. I have no time to draw the thingy right now because the thingy. I'll draw LOD 9:40. Man, I'm expecting a bear trap today too, but I low-key got tempted on fucking Koryu. At some point today, there may be a nice bounce. They're going lower for now. They're bull trapping off of yesterday's spike. There's a gap from yesterday close as well. Market is gap lower right now, pushing. Time is 9:40. RSI oversold. Bulls are trying off 9:40. Until the low of 9:40 breaks, the bears are toast from the bottom of the 3/3 morning cycle. Even though there is no cycle confirmation, the thing could pop up for 5 minutes and trap here or not. This is 0 DT morning cycles. Things happen very fast. There doesn't even have to be a fucking major cycle confirmation until they decide to trap. Or this shit is a trap and it goes lower again. Damn, Core, you really down 6. I might have gotten fucked on this shit. Core, you down 6%. I don't even notice that. Fuck. It really says 6%. The fuck? Damn, it really did say 6% from yesterday close. Holy shit. What if this shit goes up and gap fills? And Core, you has a gap at motherfucking 400 from yesterday close. If this shit rallies up on me, oh my god, I'm gonna be so fucking pissed. I'm gonna be so pissed. Alright, bulls are here. Bulls are here. Time is 9:41. 9:40 low never broke. Wind direction is officially south, but they're bounce trying now off of 9:40. That's what I'm saying. Cycle happening. I'm not saying this is long-term bullish or not, but it's not now long-term bearish. It is not. It's like 50-50, and cycle is creating. We're now at the midpoint, so they can even reject here or go a little bit higher and reject, but this is literally the midpoint of the morning cycle. 9:30 to 9:30. Market loves the 0.5 Fibonacci. It's deciding what to do with a 940 pop to 940. Algo range created as well at the 0.5 Fib. It is happening so fast that, like, as I'm saying, it's happening, right? But like, that's the best thing I could do. That's what I do for myself. This is what I'm doing for myself mentally. I'm talking to myself, but like, this is literally happening live. This is happening literally live. I went higher into 942. Broke the algo range at 940 into 940, and 940 is rejecting into 945. There's 945. There's an algo range at 940. Excuse my, excuse my, burpiness right now. I got out of Mountain Dew after an empty, upset stomach. So morning cycles are happening mad fast. Time is 9:45, 9:50 is coming, 9:55 is coming, and 10 a.m. is coming, 10:05, 10:10, 10:15, 10:20, 10:40, 11. They're all prime time, trap time, morning times. I used to call it Coach Prime Time. Oh, algo range break higher into 9:45. This is morning cycles for sure. Bulls are here just as well as the bears. Back the RSI was oversold. It's now trying to go back to neutral territory or something. Captain said, triple witching day, expect volatility. Today is quadruple witching day. Today is quadruple witching day. Alright, there's something else that expires today. Bulls are here off of 940 at low D. It's actually a really nice fast fucking bounce. Holy shit. Now foam line going. Oh yeah, nice bounce. There may be no, there's not a HOD divergence. It's a 3/3 bullish cycle at the roof. Trying to break the wind direction north on SPY. It's IWM doing IWM squeezing up on the 30. HOD broke on SPY. Now there's a divergence at the roof. Wind direction is officially showing northbound on SPY now. QQQ is not breaking the HOD yet. And that's crazy. There's a divergence at the roof. Cycle is happening. Bearish, slightly. HOD divergence never cleared into 945. 945 rejection happening into 950. 950 is here in 28 seconds. 950 is here in 28. I'm not even going in on this shit. Oh my fucking god. I'm feeling FOMO like crazy. Long and short. I'm just like, it looks like I'm like fucking. Oh yeah. It's like a trigger here. Shotgun, amazing. Oh, miss. Or shotgun, amazing. Miss. Like, this shit happening so fast. Time is 9:50 right now. Bears are in control for literally 2 minutes. 9:45 to 9:50. They're creating a cycle. 9:50 is here in 2 seconds. I'll go range or 9:50 lower. I don't know. I'll go range or 9:50 lower. I'll go range or 9:50 lower. I'll go range. Holy shit. I'll go range at 9:45. Look at the prime time traps times. 9:40, 9:45, 10:10, 10:20, 10:20. Nobody fucking knows 10:40. Nobody knows right now. This shit is crazy. Nobody knows right now. It's nuts. Bears are in control for a minute. I think they have the advantage for like a minute. And 9:50 breaks 9:45, and then maybe not break a LOD or some shit. Maybe LOD test. There's a HOD divergence. So the Bulls are hoping, and the Bears are hoping for that floor to break at 9:40 as well. They got everybody trapped basically. They got fucking everybody trapped. It's wild. Are there more bulls trapped or are there more bears trapped? I don't fucking know. They went down on purpose like this easy. They went up like this easy, and now, oh my god, massive volatility. Can't even blame this on IWM. Like, I don't even know what it is. I think it was just SPY. Chris said contract premiums are moving so fucking weird. Today is Friday, as well as quadruple witching day, as well as the President Trump coming live in like 2 hours. So I just expect some sort of not easy, some sort of fucking trappiness. I was thinking like maybe if I do something, I might do like 1 or 2K on 0DT or 1DT or some bullshit on Swire QQQ, but like I don't know. I kind of did a huge ass position on fucking Cosby, so I guess I broke my own rule of the Friday fucking key profit and Friday rule too. But yeah, what's wrong with me? Fuck. I broke my Friday rule. What the fuck is wrong with me? This shit looks exactly like IWM in the market. Oh my god. I broke my own rule. Alright, there. I'm about to bake Kospi, my hypothetical puppy, or the Kospi about to make me its hypothetical puppy. Hypothetical puppy. I have literally 1 month on my fucking end, so I don't give a shit. I have 1 month on my fucking time. It's been like fucking 6 months or a year since I've done something that's like fucking longer than 3 fucking months or 3 weeks out. So honestly, I guess I'm okay, but yeah. That's still a long fucking time, and I don't know, I guess I'm not used to that long dated shit. Oh, Bears are in control. Time is 9:50. 1/3, 2/3, 3/3. Floor is testing. They could trap the Bears here too at the floor. This is the final floor test. LOD. Oh my god, they're breaking the floor. LOD broke on QQQ. That's so fucked. That's crazy. Divergence at the roof, divergence at the floor. That is so fucking crazy. Divergence at the floor now. Divergence at the roof. They're trapping. They're trapping the bulls for now, looks like. That's so fucking crazy. It looked good, right? It was good right here. 1/3, 2/3, and then 3/3. They trapped the shit out of it in the purple box, and now HOD divergence being used to fucking look. They flipped the wind direction north in 5 minutes, and then they flipped the wind direction south back. This is bearish control. I thought it was going to stop here at the low of the day, but no, it just went. This is bearish control. It's nuts. Quadruple witch and they're just burning fucking today, looks like. The ultimate burn of whatever the fuck burn they did on all fronts. SPX 7000, Nvidia 200. There was so many expiring into today, starting 2 weeks ago. God did core you. God did. Nvidia 200 fucking. There were so many calls on Nvidia 200. They systematically fucking deconstructed it every single fucking week. They literally systematically deconstructed Nvidia and SPX every single fucking week. Bears are in control. I don't want to say this shit, nor am I in right now. The Bears are in control. I'm not going. I know they're going to go lower right now, but I'm not going because I'm in Corey, and Corey is moving with the market. So technically, I'm in with the market, but yeah, I'm not. Let's go! I'm green now. Send this bitch down to 300. That's the dumbest shit I've ever seen. Send this bitch down to 330. Please? Please? Time is 9:50. They made a LOD. They could bounce it here. There's a massive, massive, massive candle. It could be used as a 3/3. They went way lower than I expected, to be honest. I thought there was going to be a floor test, floor hub bounce in a cycle, but no. They just destroyed the HOD fucking hope. Divergence clear. That's insane volatility. Let's see what the VIX is at. 25.27. IWM at 245. SPX at 6,500. Testing yesterday's low. I love Koryu. Korea, here we go. God bless my great country, America and Korea. Wow. Wow. 955 LOD breaking on everything. They could bounce it here too. It's oversold. This is the 3/3 bearish cycle at the LOD. There's no cycle confirmation bounce yet, but look at the MACD. It cycled earlier too. There's no cycle confirmation bounce, however, though, at the floor. Literally, it's been not even a minute. It's been 58 seconds. And the candle not even fucking green yet. This box. I don't want to say it still looks bearish, but like, it sure as hell does not look fucking bullish right now. And with the MACD oversold, I'm just saying like it's oversold, but it sure as fuck does not look bullish right now. LOD divergence cleared or some there was no LOD divergence actually. There's a HOD divergence today. It's so nuts. If they confirmation and never break the floor, I'm gonna try to long SPY here with like $250 on 0DT. But if not, I'll just sit this shit out anyway. SPY was at pre-market low at 6:25 a.m. 6:53. We went up to 6:56 at 9 a.m. in the morning, and now we're trying to go lower to the 6:30 a.m. levels of 653.75. This shit is still bearish looking. I don't see a bounce yet significant, so I'm not trying shit yet. But if there is a cycle confirmation, if there is some sort of a bear trap, I might try a bounce today on SPY. Very, very small. I'm not fucking doing this shit, man. I am not doing 0DT yet. Fuck that. I was thinking about fucking 1DT too with like $250 or fucking 0DT when it's like really, really never. I don't know. If this shit bounce, I might have, but like It looks very fucking trappy. It looks fucking terrible. This shit looks bad. There's no fucking cycle confirmation. This looks fucking terrible. To even try to fucking do anything except fucking watch it go lower at this point. For me, 930 pushing on the Qs, 591 to we are at 587. Somebody go on Robinhood and please check the pre-market low of QQQ as well right now. All right, I am significantly green right now on Core U. Something is going on the Kospi. Core U. Let's go. I have a put into April and yeah, I have a put into April and it's worth fucking $12,000. It's expensive as fuck. 11,500 or some bull. It's expensive as shit. It's very fucking expensive. It's been a while since I've been in something this fucking expensive per fucking contract. This shit's like fucking Tesla and Nvidia earnings times fucking 2 every fucking contract per. It's crazy. And bears are in control right now. 10 a.m. This is 10 a.m. They're going lower and lower and lower. Jesus Christ. Fuck me. There was at some point I wanted to go in fucking 0 DT putty and just run this shit too, but yeah, fuck me. I can't. 3/3. This shit is just extending and extending and extending. I literally can't. The 3/3 chase this bitch. That is insane morning open. 9:45 being used as a prime time trap time for today. 9:45. Time is 10. Let's see if they do anything off of 10 or 10:05 or 10:10 or 10:15 or 10:20. When I was a kid, right, a year and a half ago, before I found out about this time and the cycle shit, I would literally call these times like 9:30, 9:45, 9:50, 10, 10:10, 10:15, 10:20, 10:45. Oh my god. Yo, they're going so much lower today. Oh my god, quadruple. They're fucking going crazy. They're melting. Oh my god, they're melting. Oh my god, they're fucking actually melting on everything. They're melting on everything right now. Core U melting right now. I have a 365 fucking put and 300 on Core U. Fucking shit is melting. Oh my god. Nvidia melting right now. 175 testing yesterday's low. This is disgusting. This is disgusting. Oh my fuck. That $200 could have been like 1K. What the fuck? By now. Oh my god. That's cap, but like, oh my god. I feel like that shit gonna go to 1K because I didn't fucking go. Fuck me. Oh my god, that's crazy. That is such a Woo! I'm up on Core U. It's okay. Let's go. Woo! I'm up on Core U, baby. It's okay. It's okay. All is good. All is well. Life is good. Time is 10. Holy shit. I'm up on Core U. It's all good. Time is 10. God. God damn, quadruple witching crazy today. I'm up 10% on my Core U's today. Fuck, sorry. That's a cap. I got a notification on my Robinhood saying Core U's down 10% today. I thought it was my fucking options. My options are up 4% and 3% respectively. They're fucking huge size don't. One second. Bears are in control. Time is 10 a.m. Holy shit. Alright. I was just on the phone with my mom real quick, explaining to her what the fuck. Bears are in control, folks. This is melting. This is crazy. This is fucking melting. Oh my god. Each fucking candle going down $1. Look, 945 coming in, HOD divergence, and they trap fucking bull hope, and they burn, 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 burn. Every single fucking candle is a HOD divergence hope. Every single candle is a fucking HOD divergence hope. No cycle confirmation going lower right now in the 3/3. That's crazy. Every single fucking candle. This is almost same as yesterday. We're going crazy lower. This shit is going crazy lower. We're at 650 right now. Like, this is disgusting, man. They really losing it. They really fucking losing it. Look at the MACD volume. It's literally bigger than yesterday. I said yesterday the MACD volume is gonna fucking grow into today, and it's bigger and bigger and bigger and bigger and bigger and bigger and bigger. It's than ever fucking it's ever fucking been. The MACD RSI literally fucking super extended lower. Super fucking extended lower. On the higher time frame, that shit is terrifying. On the 1 day, how the fuck? 1 day MACD, no joke. It's been like that for fucking 2 fucking weeks plus 18 days. That's disgusting. I'm the BNF of Korea, bruh. I'm Biberion of Korea. I'm the BNF of Korea. I'm the BNF of Korea. I'm the BNF of Korea. I'm the Biberion of Korea, bruh. Oh my god. I'm the Biberion of fucking motherfucking Korea. BNF moment. True moment right now. Oh my fuck. I missed it fucking 2 weeks ago. Oh my god. Time is 10. Cycle is happening at the floor. It's actually fucking terrifying to even fucking think about 0DT or 1DT bounce anything other than short term because of that 1 minute fucking one daily MACD looking crazy fucking down and keep pushing it every single day and lower. And using the HOD divergence though as a hope, like this is something I've seen literally last year. This is like some fucking historical shit. This only happens like fucking couple of times a year. This is like big things happening. Mel said I had something see yesterday before the news. That's crazy. You know what's crazy? That spike happened yesterday, and everybody in the world, even online Reddit, was saying, "What news? 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 What news? 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 What news? What news? News?" And I was just like, "The gap filled." I don't like. That's literally all I said. I was like, "The gap filled LMAO." I didn't even fucking care how it fucking closed, but like I just saw the gap filled. So I was like, "The gap filled." Like, yeah. Somehow fucking push it down on the gap fill anyway. Time is 10:05. Bulls are trying from 10 to 10:05. There's an algo range at 10 to 10:05. If this shit breaks higher of 10:05, there may be some bullish momentum building the 3/3, like how QQQ did, but SPY never did. So we'll see. And they just broke 10.05 to 10.10. Bullish cycle is building from being oversold, and the RSI still is in bear territory, but I mean, they could cycle a little bit, or they're just so fucking mean and rude that they don't even allow any single cycles to happen like yesterday too. 1/3, 2/3, 3/3 bullish cycle off of 10 to 10.10, and they're coming in evil, mean, hypothetically speaking. So any sort of fucking bounce looking tough other than short term, unless they cycle trap somehow big time, but they have to cycle trap somehow big time. Unless it happens, it doesn't really happen. So I want to see what KG says. Kevin Green, we are chopping at the floor. We bounce for 5 minutes. It's not really bullish. It's chopping at the floor. Still, technically. Very oversold, but yeah. Is today triple witching day or quadruple witching day? Because it says triple witching on Charles Schwab. Candle coming in denying the bullish bounce that happened for 5 minutes here too. Is today triple witching? Is today quadruple witching? Today is a quadruple witching day and a triple witching day, it says on Google. Yes, today, March 20th, 2026, is a quadruple witching day, which occurs on the third Friday of March, June, September, and December, when 4 types of derivative contracts expire simultaneously: stock index futures, stock index options, single stock options, and single stock futures. So, quadruple witching day it is. It says on it literally says on Charles Schwab, triple witching day. But I know for a fact today is quadruple witching day, so I'm pretty sure it's triple and quadruple witching, because if it's quadruple, why the fuck would it be triple?
Green, senior markets correspondent, right away to help.
Maybe they're talking about options, bonds, and futures or some bullshit. But they're talking about
curious to know if you think that oil will continue to set the tone for markets today. Your thought?
I don't know.
Yeah, I believe so. Obviously, we also have the options expiration. That'll
Someone
be a
said
big
triple,
thing.
someone said
We do
quad.
not have any big
right.
headlines when it comes to the economic data, and I think the
10 floor
potential
never
risk
breaking
over the
into
weekend when it comes to not only oil infrastructure but also
if it
natural gas
actually does
infrastructure
break
will still
10-10
be in
high now,
focus
it
at
would
the
be
moment.
bullish,
Now,
but
if we
all I'm
look at
saying
the
is there's
last
an
2
algo
Fridays,
range of
Diane,
10,
we have
10
seen
to
open
10,
interest
10.
actually increasing
I would
for
not be
oil
surprised if they
contracts
somehow
across the
show
board, and
bullish
that
or
actually
show
then
bearish and come
coincided
back
with
into the
prices
range
moving
as well
higher.
here.
Let's see if that's going to be the same type of action that we
To
see
be honest,
today.
I'm not
And
saying
in
it's going
fact,
to do that,
around,
but I'm just
let's
saying
say,
I would not be surprised
2
if they somehow
o'clock
use this algo
Eastern
range
time,
later.
2:30 Eastern time
Maybe
is
other
usually
algo
when we start
ranges the
seeing the
market
open
creates
outcry
later
actually
too. But
close,
for
and that's
now,
where
there's
we
an
could
algo
probably
range at
see,
the floor.
that last hour or so.
10.05 also
Oil
had an
actually
algo range that we
moving
never
here
drew as
fairly
well. So
aggressively, either to the upside or
strong this one.
downside, but there's still some perceived risk. And you're also seeing a situation where there's a strong correlation, and there always has been, but it's even stronger now,
10.
where oil and the dollar actually move pretty much in tandem. So as oil goes up, the dollar's been going up, and as oil goes down, the dollar goes down, and there is an inverse relationship with the equity market. So I still think it's going to be a very big headline. I think there's probably still some geopolitical risk, obviously, over the weekend here. And we have, as you kind of talked about, some of those measures regarding unsanctioning the oil from Iran and having those barrels that are on floating storage, if you will, or basically oil on water.
Do you guys like seeing
starting to hit the
QQQ a
ports
lot
over the
better?
next week and a half or so.
Or
to
is it
alleviate
okay
some
when
of
I
the
stream the
pressures. But
video
once again,
animation
that'll
on the
be
left
a
side? Because it
short-term-
seems like QQQ is a
short-term
lot better
fix
for me
here.
too
So
right now.
I do think
Looking
that
at it
the
like
oil
this.
market is definitely going to determine the tone today.
So how much
Are there
does
no
that
preferences
matter,
or
the
what?
potential, rolling back of sanctions? I mean, is
9:38
that
showed
why
the
crude,
pre-market
although we're taking a
north.
step back right
9:30 to
now, remains
10. Wind
somewhat
direction
elevated?
is south. 10 a.m. wind direction
Yeah,
is
I mean,
north or
that's going to be a
neutral
big
until the
question. You're going to
LOD
see a lot
candle
of
breaks,
different
and they want to break it.
estimates there when it
Wind
comes to
direction is
the
still south.
impact. Now, if you're
That
looking
is
at Kepler,
fucking
they're
crazy.
estimating around
Bears are
170
still
million
showing.
barrels. That's currently on water,
They
so we
just
call that
broke the
floating
LOD.
storage. Also
They did not on
including
QQQ.
cargoes in transit
There's
that
the
might
LOD
already be
divergence
accounted
now.
for. If you're looking at some other sources,
They're going lower,
you're
and they
looking
may
at
come
around
back
maybe
up into
30
it later.
million, 26 million
Or
to 30
they
million
chop
barrels
right
that
now
are actually
here
available
with
for
the LOD
to go
divergence.
to ports at this point in time from
Use
Iran
this
crude.
spike
So there's a
down
big
candle as a 3/3 of this
there. If it's
mega
that 30
cycle
million barrel level, you're talking about maybe
We'll
3
see.
days, 3.5 days worth of coverage that we're seeing losses on a daily basis right now.
Very
If it's closer
critical
to
how
that
the market
70,
decides here,
if it's
too.
closer to that 170 million, which I think would be a lofty goal,
It's gonna
you're looking
decide
at
what it
better
does for the next
coverage
5-10
overall,
minutes,
but
most likely.
once again, a little bit more of a short-term solution if we continue to see
Might
strikes
be
on
crazy
refining
oversold.
capacity as well as
care.
storage that's on land. If we continue to see those
don't
getting
care.
hit as
Higher
well,
time
it's just
frame.
going to really kind of
Bearish
eat
as hell
into
today.
maybe some of these short-term
I think this is
benefits
testing
from,
pre-market low right now. Let's
the
see.
move
This is
order
exactly
reflections.
lower than pre-market low.
Okay, and then with triple
I have to
witching
see on
happening
QQQ
today,
right now.
tell us a little bit more about how much volatility
Pre-market
to
low
expect.
broke on SPY.
Well, we are
Pre-market low broke
expecting
on
a significant amount of
QQQ.
volume on the
This is
options
super
front.
bearish.
So for triple witching, what you're looking
This
at
is
is
super.
the futures
QQQ
indexes.
is at
So if you're looking at
585
the E-mini S&P
actually.
500, the
It left
NASDAQ
595,
100,
it
as
left
well as the
590
Russell, those contracts
days
will
ago.
actually stop trading at the
Super
equity
bearish.
open. The options or the quarterly options will also expire at the
Quadruple
equity
witching.
open, and then you also have the equity options that
Crazy.
are quarterly going to expire
Resetting
at the equity
fucking
close
today
here. So
by wiping
expecting
everything
a lot
out
of
on top.
volume for today that could
was.
create significant volatility. It also can create these.
Hello, declared.
It can create
Time
these
is
interesting
10:15.
dynamics in the market where you either have maybe an aggressive sell-off to start the day, and then the last hour and a
Man, this
half,
shit's
you
a
start
whole
seeing the market
fucking
really
day. What
bid
the
up,
fuck do you mean?
or you can
Good
have the
morning on this
opposite
shit.
reaction as well.
They're going lower right now off
obviously
the
looking
algo
at
range.
some of
They're
those
going lower.
impacts, and if you're
LOD
kind of looking at
divergence
the
cleared.
open
The bears
interest
are
right
in
now,
control.
I'll get this up for you.
Jesus
The open interest,
Christ.
where you're really kind of focusing on right now, the pen risk is going to be 6,600 for the S&P 500. That's where we have the significant amount of open interest and gamma exposure right now, which is sitting at around $12 billion.
Yeah, quadruple
in
witching
exposure
actually.
for every point for the S&P.
10:15.
Okay, let's get into
My core U is
FedEx's
fucking
quarterly
flying.
results.
I'm up
They beat
13 and
expectations.
15% on my
I was
core U
interested to see
respectively
how
right
it
now.
would perform because, you know, you wondered what their exposure would look
My
like,
core U
especially with
fucking flying right
elevated
now.
fuel prices or energy prices. Take us through some of the highlights that you noticed.
Yeah, this one's actually a shocker
I'm up
for me.
$1,600 on
the
core
events
U
that
right
we
now.
have, and they made some comments on the conference call around the Middle
God did.
East, but they still seem to be a little bit more optimistic when it comes to the pricing pressures of diesel impacting their business, as well as the volume flows or the
God
increases
did.
that they are seeing. And you're also seeing some tailwinds when it comes to their expense strategy. So the company reported $24 billion worth of revenue for the quarter. Street was looking for around 23.5, a little less than that. And the adjusted earnings per share came in at $5.25. Street was looking for around $4.09. So record profitability. You're seeing growth when it comes to their year-over-year growth in revenue, but a lot of this profitability is actually being built on the fact that they are cutting expenses very aggressively. They raised their guidance not only for top-line revenue, but also for EPS for the year as well, and they look to continue to have margin expansion, $1 billion worth of cost
I'm getting
savings.
hungry
That's
as
what they're
fuck.
looking for moving forward. They're reducing around 5,000 jobs here over the next year, and they believe that they have managed the fuel costs. Now, for a company like FedEx or UPS, or even if you're looking at some of the rails like Union Pacific, CSX, they also have within their business model surcharges when it comes to diesel. So as prices move higher, they try to pass that on to the consumer as quickly as they possibly can. And so that is something to be mindful of. They do have somewhat of a synthetic hedge. They usually provide a little bit more of a premium on those surcharges, and that actually could be a revenue driver on the top line. Biggest risk that you have is a reduction in volume over the next couple of quarters here. Now, they also stated that they only have around 8% of shipping exposure when you're actually talking about the packages, 8% exposure in the Middle East. So once again, they try to dampen down maybe some of the near-term fears here, and the stock's moving higher because of that as a result. And you are also seeing UPS catching a little bit of a bid based on this earnings announcement as well.
Which has been an underperformer for UPS. I was very surprised as well. And you're seeing a bunch of analysts on the sell side raise their price targets on FedEx off the back of this. Let's get into the levels that you're watching out for today, KG, on the S&P 500.
Yes. Yeah, so to the upside, if you're just looking at the options flow from early this morning, to the upside, 6,670, to the downside, 6,500. We talked about the 6,550 level yesterday, Diane. We got within around 6.7 points of that, and buyers did step in. I think that's a key inflection point, breaking below that key level and breaking below 6,500. Unfortunately, then you're starting to talk about the 6,000 level moving forward. That's not something for today, but that's something over time that we could look at. And usually, volatility actually improves after this option options expiration. So that's actually a seasonal tailwind for the bulls, even though we do have some headwinds when it comes to the macroeconomic environment as well as geopolitical risk.
Okay, thank you, KG. That is Kevin Green, our senior markets correspondent, getting you set up for your trading day here.
Thank you, KG. Should we do it?
This is something that's shortened. It doesn't change. Obviously, it's prolonged, then it becomes a bigger
Energy shortage is the biggest
issue
constraint for
relative to
AI
demand.
revolution. Shut
But
your
look, I
ass
think the
up,
more
boy.
immediate Middle East was going to be, really outside the U.S. and China. That was going to be one of the biggest areas in terms of data center builds, UAE, in terms of everything going on in Saudi. NVIDIA is going to be a huge player there as well as U.S. tech. But I just think broadly it speaks to look, this is the demand trend that's not stopping based on geopolitical, but it's a risk-off environment relative to tech. So I would almost view it as it's much more disconnected relative to what's happening in the stocks to the actual demand. We saw that NVIDIA this week, saw it at Palantir last week. And I
How is
think it
energy
continues to,
shortage the
especially in
biggest constraint for
software,
AI? Oh,
the
you talking about
sell-off
the oil
here
shit?
continues to
I
be
guess. What the
massively disconnected from what I believe the ultimate
Doesn't even make
narrative will
sense.
be. That will be the hearts and lungs of the AI revolution.
Hey, Dan, great conversation with Karen there, but I just can't help worrying that the math is getting more tricky for a lot of these, if nothing else, the data center providers, the hyperscalers, because the cost of energy is something that was underestimated originally. Now it is fully understood by people who've been following you and others. The cost of energy for building these. Well, the cost of energy globally has just gone through the roof, not just for US consumers and those shipping kit around. It's for the data centers as well. That's going to have an impact, isn't it?
Oh, yeah. Look, it all comes down to if this is a conflict, a war that ends in 3-4 weeks, it's something that has a dent, but in the long term doesn't really play a huge impact relative to data center build out and demand. If it's prolonged into coming months, spring, summer, then it's really a much different game because you hit on what's the main point we've talked about. The energy shortage is the biggest constraint for the AI revolution. There's more data centers under construction today than active data centers. And that's going to be something, it's a boom to, I think, many of the energy players, but it's also a constraint because big tech, they're going to have to pay their own bill. And that's something Trump administration has talked about, especially as you continue to see this play out.
Dan, just to pick up on Steve's point, it's not just the energy prices that have gone up, increasing costs for these energy-hungry data
Today's March
centers.
20th. It's a historical day.
The interest rate picture looks like it could be very different from when all of these hyperscalers announced the vast sums that they will be investing. How much do you think the possible hike, in some cases, in interest rates could affect the direction of travel with all this?
Yeah, look, I mean, a lot of these tech companies, if you put together about $1 trillion in the balance sheet, so they don't necessarily need it. Now, look, if you look at Oracle and others in terms of raising debt, you're going to see more tech companies have to raise debt because of the build out. So it does speak to
they may go fucking again lower, but this shit is so far deep in for me to do anything down
you need to ultimately
south
see lower rates over the coming year.
Waiting patiently.
You need
There's a
to
long
see a
opportunity
better
or
market
bullet
relative.
later.
For tech players
right
in terms
now,
of raising money, you don't want to see energy prices go higher.
Good.
Because look, then you take a step back. $4 trillion is going to be spent in terms of the build out. Even in tech today, $700 billion, those checks are basically already written. And the multiplier effect is going to continue to play out. So you have almost two worlds playing out in terms of the tech boom, the demand, the
I'm more interested in this thing.
But then the energy
I'm trying to get the fuck out. I don't know if I should be out.
Overall market, it's a white knuckle moment that we are going through in the tech trade. And you see that play out every day.
Dan, we promised to come back to you. Some of your calls on cybersecurity. You've got a big conference coming up, and you point out that AI is reshaping this space. How do we need to think about cybersecurity?
If I want Corey to go lower, the market has to go a little bit lower or something to chop at the floor. So I guess I'm a little bit bearish leaning than not because of shit I'm doing. But I mean, it's up to the market at this point.
And I think
I am
cybersecurity,
not
and we'll call
chasing
it
lower.
AI.
Bears are in
There's a lot
control.
it's
I
almost an
just don't
AI
want to
ghost
fucking
trade that's going on. And
hope
I
on a
think
fucking bounce
when
here
you
when the
look at
fucking
names
showing
like
so bearish
CrowdStrike,
today. Like, it's
Zscaler,
crazy.
Checkpoint, Palo Alto, they are
So
going
crazy.
to play epicenter roles in
Like
this
this
AI
one
build
day
because the
fucking shit
threat
is not a
is
joke.
going to
Look at
continue
how
to
fucking
increase.
nasty
That's
today
not something
coming
that's
in.
going to be done by LLMs
Look how
and
nasty.
Anthropic
Like
and others. Look,
like
in a lot of this white knuckle moment,
it's
there
like we're
are
off the fucking cliff
opportunities.
right
I
now.
think probably some of the biggest
We are. We're
opportunities in
literally off
software
the
from a
cliff right
stock
now.
perspective
This is a fucking
are in
cliffhanger.
cybersecurity. I think there could be a
Literally a
golden
cliffhanger.
opportunity
3/3
there
extending,
as that
extending,
plays out.
extending, and this is fucking a cliffhanger. Literally. And we need the president to come on at this point in 1 hour. I got all these news. I got all this shit. The motherfucking thing going cliffhanger. Like all these news fucking coming out, talking good about Nvidia, talking good about this, talking good about that. Like I highly fucking doubt they're fucking, you know, doing any fucking sort of thinking at this point. Like it's just fucking crazy. That's all I'm saying. If you don't think this shit is crazy, I don't know what the fuck you think this is, because look, IWM literally in a downward trend line. It's fucking respecting it every fucking day. This is something nasty. Look at how it's going down from the top of the downward trend line. Like I didn't even have this shit drawn into the fucking these days. I don't even have it drawn this day, this day, this day. Like I didn't even fucking look at IW in the last 4 days. I didn't even look at IW in the last 4 days, but look how nasty they're coming in with it every fucking day. Every fucking day. VIX is literally going back up too. 26.6. Like this shit is fucking stupid. Well, amazing at the same time, but it's actually kind of crazy. It's respecting the trend line for a whole month. Literally a whole month. It's kind of fucking scary. Well, I think I'm up like $10,800 for the month. After like 2 hours, my fucking Robinhood will update, so. Come on, baby. Fill me out, baby. I'm up I'm up $1,517 for the day. If I get a fucking fill up here. Core, you did me so fucking good off market open. I went in literally at the top. At the fucking top. At the top. Alright, I'm filled on Core U300 put for $4,200. It says I'm up $11,000 for the month, $10,962. My realized profit, yeah, $10,212. Wow. Some of these profits don't even come in because I didn't sell this shit yet, but yeah. That's nice. Thank you. I'm gonna show it real quick so I'm not fucking bullshitting. Hell yeah. Feels so fucking good. Yeah. You know, I was feeling very FOMO because I missed this day on fucking Koryu. Well, there's no way in hell I can get that probably. That is such a good day though. Holy shit. The Korean market actually. What the fuck is this thing? Look, this never in human history has the Korean market been like this. Right? Actually, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, 13 days out of the last fucking 30,000. Like, this is some shit. This is some shit. I'm so happy I never fucking missed out on Koryu now. Yay! 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 I did not miss out on Koryu. Yay! Ah, shit. I would have felt bad for my grandkids and my kids in 40, 30 years if I missed out. Now, I did it. Yay. The craziest news, I literally woke up and I saw Nikkei down 3.4% and I saw, oh, so the Korean market went up 0.07%. I was like, bruh, like that is some cookie shit. Look at literally the news. This is some stupid shit. South Korea's blue chip Kospi was the rare exception, rising 0.31% to end the session, while the small caps Kosdaq gained 1.58%. Japan's market were closed for holidays. I don't think that's fucking true. Nikkei took a shit. Of course, the Asian market fucking takes a shit into quadruple, which in the night before. You know, they don't post the market open anymore with the ding 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 and the market close with the ding 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 ding. But yeah. Talking about a hawkish Fed.
See where we are trading. We've been in this range for a bit now. Dow
the reaction to rising oil prices and
points. It's
hawkish
less than
Fed.
1%. Nasdaq and the S&P are both lower as well. As crude oil makes a move here, you almost, Josh, have a two-pronged problem for the market.
I think this was before the rally
up. Oil, WTI probably doesn't best represent the jitters in the market, just because Brent today topped 119, and then you have the Fed chair who was more hawkish than not, and said inflation's not coming down as much as they, quote, hoped. The odds of a Fed rate hike by June are now higher than the chances for a rate cut. That's the backdrop. That's what you need to know. A hawkish Fed and oil that continues to go up, and stocks as a result are uneasy.
I don't often question the wisdom of the market, but I think in this case, that's crazy. the Fed knows damn well there's nothing it could do with interest rates that would change the price of gasoline at the pump. It's almost an absurd proposition. So I don't believe that to be the case. I understand why the market believes that, just looking at what oil is doing to the inflation numbers, what high gasoline prices are doing. But the knock-on effect to the consumer is actually disinflationary, more so than it is inflationary. It is absolutely causing people to think twice about spending, and I think we're seeing that sentiment everywhere we look. So I don't believe it. The bigger issue for me is the state of the financials. They look absolutely horrible. The 2-year is up the most on the curve right now.
Sure. 385 was what it
Bulls are trying to make the RSI is in their territory,
just to give context
trying
to
to
that,
rise.
yields are definitely up, especially on the short end, on the back of what Powell had to say yesterday and where the Fed seems to be positioning.
Yeah, no, Judge, it's the right interruption because that's really the most important thing. This is the highest we've seen the 2-year since August of 2025. And in the meanwhile, it almost feels like there's nowhere to hide. The last couple of days, gold just broke down below its 50-day moving average. Metals and mining on the whole are the stocks themselves are negative. The materials are down 2%. We've lost the home builders because mortgage rates are not coming down at the rate that we had hoped earlier this year. And now you've got 26% of the S&P 500 below the 50-day.
Looks like the bulls are trying to, but like they could just fucking be so nasty with it today.
That is a 2 standard deviation below the mean, and it's problematic. 52-week lows on the NYSE are now at 5%. That's the highest since November. So it's a risk-off tape, and we've lost a lot of the areas that we were using as sort of like all right, here's a little bit of a hedge, or here's a little bit of a non-correlated asset. People are just right now looking at a lot of these developments, looking at the bond market, looking at oil, and just saying, you know what? I don't need to figure out the next thing I want to invest in right away. Let me move some cash to the sidelines.
1/3, 2/3 bullish cycle trading off of 10.15, burning the bears down there at 10.15.
This was as of yesterday. Less than 30% of the S&P stocks are above their 50-day. It's the lowest since April of 25. So go back to Liberation Day, to when the market really got upset, and you had a number of stocks below their 50-day. So we're not looking great under the surface. Metals, gold is worst week since '83. And Jonathan Krinsky at BTIG says, buckle up, that the 200-day moving average of the S&P 500, which is 66.15, looks unlikely to hold. We're below it now, okay? So it's unlikely to hold. He thinks a move towards 6,000 has a decent probability. That barring a close back above 6,900, so that's, a few hundred points higher from here.
Chris said IW needs to clear the midpoint at 245.18.
Particularly since August of last year, was this expectation of accelerating economic momentum. Part of that
245.18, very, 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 very fair assessment. 245.18 is literally the 0.58 Fibonacci.
Josh already pointed to disinflationary trends.
Very fair
and then there was also
it does look like the bulls are trying though for 5 minutes. Can't lie, back the RSI, everything helping. 3/3 going up, candles are going up.
Layers of that value proposition, if you will, in terms of the momentum.
No
of the
LOD divergence either on SPY and QQQ.
We're not looking at potentially
10-15 LOD held into 1035, so now it's showing 20 minutes.
We're already seeing some tightening financial conditions, not just from yields, Scott, but from some of the carryover from what's happening in the private credit market. And then you look at the state of where to hide. I mean, with energy being the only sector that's positive this month, most investors are underexposed to the energy market based on its percentage in the S&P 500. And so where do you hide in this environment? You still have this bit of
if you believe they're going to bear trap into the rest of the day, your personal opinion is a personal opinion poll based on cycles and candles alone, quadruple watching day, so anything could happen. It doesn't really matter. It's a personal opinion poll, nothing else. They're going to bull trap the shit out of this today, or they're going to bear trap the shit out of this today.
You're wanting to put money into a market that perhaps is
bearish off this cycle.
You're feeling
I'm just saying temporarily this shit is bullish into 1035, and I have no idea. I'm going to vote after everybody votes.
We've covered sort of everything that's moving around. Dubravko Lakos over at JP Morgan's cut his S&P target to 7,200 from 75, just to represent where sort of the risk factors are now and where sentiment seems to be, and that the market in his mind is continuing to price in a short term, a quick end to what's happening in the Middle East, and he's not so sure, nor are other investors too. How do you see it?
I think those two things run together. I think you made a really good point about the 50-day moving average when you harken back to Liberation Day, but the 200-day moving average, which we've now fallen below, we haven't seen us breach that level since May of 2025, which is sort of the backswing from Liberation Day. And so I think that's meaningful here too, because it shows just how much pessimism has just kind of come into the market.
Two people that voted bullish,
it's also a little bit
and we have
to the point that Shan's making about where we are.
3 people that voted bearish, not including Dave Hartman. I voted bearish as soon as I posted
for the majority of stocks that reported. And I think
1 minute before this candle came in, but I'm just saying, into the end of the day, that's what I think.
By oil shock concerns,
it could change
we're being uprooted by now private credit concerns that already existed. Now there's even conversation, real conversation happening, whether Josh likes it or not, about
no one voted bullish
instead of downward. Like, that's all meaningful for a market that was coming into the year celebrating how strong things look.
3 people, not 1 person voted bullish on WhatsApp. So now we have 3 people that voted bullish, and we have 3 people that voted bearish.
A better example than Micron today,
we have 4 people
which
that
had a
voted
blowout
bearish.
quarter. There's no other way to say it. Now, the chart's been a blowout for the last several months, so maybe that has more to do with this than anything else. But they had a blowout quarter, and the stock is down. So in this kind of tape,
similar to Nvidia a couple weeks back,
and this is in a huge high flyer, and the stock's down 5% on what I said was a blowout quarter.
All right, leave it like that. 3 votes on the WhatsApp group.
Look, I alluded to the financials for a reason. I think that structurally they were.
We need the president to come on at 12 noon today. We need the president to come on at 12. We need the president to come on at 12. This is fucking bad. This is fucking bad. Market melting. We fucking need the president to come on at 12 today. It looks like.
A warning sign that the kinds of options that would have been considered ludicrous and off the table a few weeks ago are now being actively discussed, namely things like troops along the Iranian coast.
Atlantic Council
so
it seems like we need the fucking president,
you just said,
everybody fucking
which is
scared as shit right now.
That you can't cut and run. You have to finish this mission, or you're going to head up in the worst of all worlds. And the longer it goes on, the more energy prices are going to go up. There are really 2 wars going on. One is Israel and the United States on the Iranian regime, and the other is the Iranian regime's war on the global economy. What's changed is because of all of these attacks on Iran's Gulf neighbors, the Gulf neighbors agreed with the President of the United States that one can't cut and run. One can't reward Iran for being the destabilizing factor it's again become at a time when it's at the weakest point it's been in the last 40 years in terms of its military capabilities, its proxies, its nuclear capability. So I think you're going to see a real tension here between the growing rise in oil prices, uncertainties after the strikes of the last 24 hours on the natural gas fields, and the conviction on part of not just the United States, but the Gulf that one can't let Iran get away with this.
But Fred, what does it tell you that instead of us getting, I mean, the president's post last night was extremely sharply worded. Whether or not he had a heads up about these strikes, there's a fury. He's talking about here incredible warnings for Iran about us wiping out, their energy production and so forth. That's not the kind of thing that tells you that he's looking for an off-ramp here, is it?
I don't think he's looking for an off-ramp. I think as long as the Straits of Hormuz are blocked, and they're not really closed, they're just blocked, no shipper feels particularly safe going through whether or not you have insurance. But as long as it's blocked, I don't think Donald Trump is going to stop his attacks on Iran. It's a really high-stakes game of chicken. And the feeling is the more targets that the U.S. can hit, the closer we come to a point where one can open, at least to a certain extent, the Straits of Hormuz, and where Iran is going to have to back down. But what you're seeing is something that one didn't want to happen, which is Iran ratcheting up. And that's what you're talking about, Kelly, is whether or not the president knew about the Israeli attack on the gas field, which was then followed by the Iranian attack on the Qatari part of the gas field. That's certainly where things have ratcheted up to right now. So the question is, how does one actually reverse that?
Rita, do you want to jump in here and talk about what further impact we could see, especially if it's true on these reports that the main natural gas production of Kuwait could be, or I'm sorry, of Qatar could now be, 20% of it could be offline for a period of 2 to 3 years. Is that right?
So we don't think the timeline is necessarily accurate. And look, this is all new information. We've got satellite data that shows definitely kind of some damage on one train. The other one right now is inconclusive because of cloud cover, but fair to say 2 trains have been damaged. Yesterday, we had also seen an attack on the gas to liquids plant, which would have also reduced LNG production. Clearly, there's damage that's going to take a while, could be months, even over a year to fix this. That will only be certain once we know the extent of the damage. Whether it's 3 to 5 years, I think that's too soon to say. Having said that, I think it's probably fair that, the market's been expecting an oversupplied gas market. And if that's the case, why pay up for, equipment at a time when prices were going to be lower, right? So the repair works could be slow as a result of that. But taking a step back, no doubt about the fact that what started with just shipping, some infrastructure or like tanks has now become an outright attack on energy infrastructure across the board. And oil prices, if you ask me, are still way
Did she
too
just
low
say
to
2
reflect
years?
the true extent of what is going on and how much production we are shutting.
It's a long time. It's a long time. Man, market looks fucking trashed up. Like yesterday, no fucking volume, just neutral. Pop and drop maybe again, but yeah, it's looking like it could drop, but hasn't went higher, hasn't went lower. Why can't it drop Corey once? Boy, I want to leave. I want a new LOD on SPY, low key. Like 650, 649. That would bring Corey down to the LOD. This is LOD cycle testing with bearish trapped and bulls trapped. Bull trapped all day, bearish trapped at the floor. Yeah. No matter what, candle traders are fucking donezo. Why? Yesterday, I saw someone here, and I think the market gap filled yesterday, and I saw the person that said, "Oh, I got revived 100%, blah blah blah. Oh yay! Now, oh, I got lucky or something." And I don't see them here anymore. So I think they were here for one day, and it seems like they're gone. So not that surprising, but yeah. Captain said, "Jeff, well, the market had a pretty good pop yesterday after you left. Did you catch it?" And that's what I mean. Somebody was in here in the chat all day long yesterday, and then I stopped over and I saw, oh yay, I was getting crushed all day, and then I got revived into this, and then now I don't see them. So I can already guess, probably, hypothetically speaking, that yay, one time, yay, and yeah. So yay, but every day, long term, yay. A? Yay, A. Alfonso says most price action on most things have been horrendous all week. Yeah, that's what everybody feels. Somebody said in the WhatsApp group to me yesterday, "Hey, Jeff, why do you only fucking short?" And I was like, I do what the fuck I want, whenever I want, however I want, to do what I need to do to print. But low key, I mean, nothing to be honestly in my fucking eyes. Setup wise has been bullish. Setup wise, it's actually been bearish as shit. They just keep popping it with the pop cycles here and there too. Reset it, new setup, there and there, there and there. It's just very hard to catch. But I've been saying this shit for weeks. It's not like this is just this week. I've literally been saying this. I've been saying this 5 fucking weeks ago. If you go look at my market update video 4 weeks ago, it literally says, oh, market surprise rally slowing down. 3 weeks ago, it said SPX gamma crush, right? 2 weeks ago, I said, right, dead cat bounce. 1 week ago, I said, still, this shit is fucking weird. 3 days ago, I said bearish consolidation. So this is not a new thing to me. Like every fucking day, I have been posting, and it's just people do not, you know, people choose what they want to choose. It's fine. Harry said, why do you have to use the F word so much? Why do you care so much? Is that all it is? What people care about? Yeah, I guess candles. I guess. That's the majority. I am not the majority. The people on this channel, people that's been here for a while, people that are here on the stream, I always, from day one, has said this shit is not for the majority. It's actually for the minority. And people that are the minority, people that are, they have actually some value and they see something, then they fucking choose to be the minority. But the decision's always there to be the minority or the majority. But I mean, it's just, you know, in life is just easy, very, very easy to just not decide. Very, very easy to things be like, oh, life is all good and dandy and candles and this and candle that. But I mean, at the end of the day, what is really going on in the market is, you know, setup. So I guess setup works and they're good. I don't even know. Like, there's just a lot of things that I see in life. I'm not talking about the market. I'm talking about life that I see. And yeah, a lot of the things in life is just I don't even know, man. Yeah, keep a good environment for myself, my mentality. That's it, I guess. Why even care? But at the end of the day, that's the entire fucking world. The majority versus the minority. So at the end of the day, yeah, I made a decision in my life 2.5 years ago, 2 years ago, and I've never looked back. Why? Because I'm proud in the decision that I made. I'm proud to be who I am, and I'm proud to go on the journey, be on the journey, and come out of the journey the way I did. So nothing will ever change, and nothing has ever changed. And yeah, it's about that. Someone said, right? Best time to plant a tree was 25 years ago. But the second best time, and actually the best time to plant a tree is now. A lot of the messages just flies by out of the head. But I mean, at the end of the day, yeah, the plant that is planted inside the mental brain is what ultimately grows to actually manifest in life with the actions and what actually happens and what actually, you know, what you see and what you think about what you see and all that. So yeah, things are hard. Garrett said, say it out loud. I'm literally just going on a rant. But like, yeah, that's literally, I'm just saying what I think in my genuine head. I send videos every night because that's literally what I'm thinking and what I see every day. But, you know, it's all a joke. It's all cringy until you see and until you realize life is not cringy and life is actually never a joke. All life is about, actually, is about self-determination and self-journey and self-growth, no matter what. Very, very easy life to be. Very, very easy life. Delusion, illusion. Yeah, yeah. But I mean, reality says that, you know, those that hold sword and know how to sheath it, right? Those that have some sort of mental strength and know how to control it in a good, human, positive way, end up, I feel like, being winners in life. That's a good message. I can live with that. I mean, I don't know. I don't know. People think that should be cringy. People think I should be ashamed. But like, why am I ashamed? Ashamed of what? Like, I'm actually happy with life. Happy as fuck. There's nothing to be ashamed of. I love myself. The fuck are we talking about? The real question is knowing yourself and the true reality in life. But I guess those that don't seek like this, and those that don't want to think like this, and those, you know, that are the opposite of this in life, actually find everything that I'm saying kind of disgusting and kind of wanting to run away from and shit, which is cool too. But I mean, we all have a journey. I was like that too. I'm not gonna lie. I keep saying I was like that, I was like that, I was like that, but I literally, certainly was not like this a year ago, 2 years ago. I feel like a completely, I feel like a different person. I feel like we all feel like a different person after a couple of months, after a year or two. But honestly, you only notice you changed if you actually put in the action and you want to fucking notice that you change. Like, it does not just change. Things don't just change because you want to bearish trying. Things don't just change because you know what I mean, you mentally think about it. Like, it's just, sure, I had 2-3 years ago, mentally I was like, oh, I want to do good, I want to do good, I want to do good. But like, what the fuck does thinking about doing good have to actually do with doing good? Nothing. Oh my god. I'm gonna okay, bearish control. Core, you're going down as well. Market is bearish right now. LOD testing. I'm trying to get out on core you.
Let's get a look at the bigger picture. Barry Knapp is here, Director of Research at Ironsides Macroeconomics. I'm so glad you're here. You know, we're looking at what's going on with energy. There was hopes for inflation to come down. That's not right in the picture right now. What's going on in your mind when you look at the markets and the economy here?
Well, the economy was weak going into the war. I wrote a note right before it started, just before I made a trip to New York, expecting to talk to clients about what I was characterizing as not so hot. This idea, which had been the consensus view that growth was going to broaden out, led by CapEx in areas other than Gen AI.
I think a lot of people was turning away from the stream too because I was not showing QQQ. So what I will do from now on is just show QQQ, which is what I've been doing
of the fading effects of last year's three adverse aggregate demand shocks, right? So lower immigration, a sharp reduction in the growth rate of government spending, and tariffs, of course, an increase in the effective tariff rate from 2.5% last February to 12% by November. But that really wasn't unfolding. If you then throw on top of that a fourth fiscal adverse aggregate demand shock, which is an increase in the price of oil, and a Federal Reserve.
Look at the MACD right now. The MACD in volume just started. LOD broke. 955. 1055, sorry. MACD in volume just started. There's a divergence at the floor now. Again. They just broke the floor again. New floor, 1055. There's no cycle confirmation. They could go lower, or they create a LOD divergence right here. There's no LOD divergence spot. QQQ went down together at the same time. New floor. That's crazy. Bears are in full fucking power today. Oh my god. Viral said I requested to join yesterday. You're talking about the WhatsApp group? Cause there's like 4 or 5 people that requested to join the old WhatsApp group. If just please tell me your name so I can like send you the link from the people that requested. There was one person that joined the actual main chat. So I guess people are clicking on the link, and some are getting sent to the old link and some are getting sent to the new link. So I'm sorry about that, but just let me know what your WhatsApp name is and change your WhatsApp name to your YouTube name, and I'll just send you a link if you are one of the 4 people or 5 people that requested to join the old WhatsApp group yesterday or since yesterday's stream. But thank you so much for your patience. And also Vic Jr. asked me to unblock him. I did. And we'll see what happens with that. Viral said, all right. All right, thank you. Thanks. So I like people that are actually watching the live stream and they listen to reasonable, logical shit. And they actually, wow. Actually listen instead of not listening, and instead of doing the exact opposite of what I ask. And when I'm like, hey, please don't just immediately try to join the WhatsApp group and immediately try to request to join the alert room, because I can kind of tell, you know, especially people that's been in my older group, it really feels like they're just channel hopping and shit. So I was like, please don't do that. And we have people that do that every day, or I did. So what is this? They tried coming in with a distribution bear trap, and that candle is being sold off right now. It's crazy. That candle happened so fast it looked like it was gonna bear trap, and then Gene said bears are getting absorbed. It looks like the bears are getting absorbed and the bulls are getting absorbed somehow. This shit is either 60% bearish, 60-40 or 50-50. Corey is still at the floor. And my contract's slower than the candle, so a little bit weird. My contract's slower than the candle. IWM definitely holding that 243.9 support all day. Let's see. 243.9. This shit looks toast, dude. I don't know. The fucking IWM looks terrible. I don't know. IWM looks the fucking worst. SPY and QQQ look like I could trap off this shit. What the fuck? IWM look like it's about to fucking bounce here or cycle here or chop here. Yeah, at his level. 3. Sorry, I don't know. We'll see. This shit is fucking wild. At the floor. Bounce trying. Bounce tried at 10:30. Bounce trying at 10:50. Bounce trying at 10:55, and time is now 11. Time is now. There's an algo range at 10:55. Looks like in this little small cycle. This shit is not. I don't want to say fucking bearish. I mean, I don't want to say bullish yet. I'm just gonna say what I think. All right. I don't think this shit is bullish yet. I still think there's a lot more fucking time they can chop near the floor and hover here and then decide whether they want to blow up or not. There's just so much fucking time, so much data that is at work. All these fucking calls from 9:45 to 10. Every single fucking 1 minute candle was hoping on the HOD divergence and they fucking crushed it all day. So why the fuck would they release it now? It's sad as shit to say, but that's what I feel. That's why I said that. That's why I said I don't feel fucking bullish. I'm not saying it's gonna fucking reject and go down fucking $7, $2, $4. I'm not saying that at all. I'm just saying the way this shit happened and the cycle is literally doing, there's a fucking hope factor in play right now in the market. This big ass spot, this is literally hope. Right? HOD divergence hope they got trapped on at the fucking roof. Literally, 9:45, 9:45, and then and lower. That means 9:30 to 9:45 to 10. Every one of them is fucking trapped, and it means 9:45 to 10:10. Every one of them is fucking trapped, and it's not going to be easy for them to go up. Even though it looked like a big ass spike candle, even though it looked like it was gonna get, you know how there is like a little what's the fucking word? Like there's like some fucking shit that people use, like a fucking lower low, and it's like a accumulation. This is what a lot of futures people do. I don't really do this shit at all, but like I think we all know what we're talking about. I think we all know what we're talking about. I'm not gonna say bullish or bearish. I'm gonna just shut my mouth. Volume. I'm gonna shut my mouth. Clearly, I'm speculating before this shit happens, so. As soon as I talk, I'm jinxing myself. Maybe I shouldn't talk. for 2 minutes. Nah, they're faking out. I don't know. They're faking out somehow. Algo range at the flank. Technically a triple algo range, but I'm not drawing it. Bullish showing for now. Off the algo range. Technically. They pull back. They pull back. This is what I'm saying, baby. This is the bullshit that I know the market for. This is what I'm saying. This is the bullshit that I know the market for. 60% bullish, 40% bearish. But like, this is the bullshit. Their algo. Hybrid algo bullshit. It's just chopping right now here. Until it decides to go higher or lower. We're right underneath the VWAP. Yeah, these small cycles, they do the exact opposite because, you know, everyone in the world sees these fucking candles. So, yeah, I mean, until it happens, it's so fucking dangerous. Until... Because I said it was bearish here before they, like, you know what I mean? It's just... I can't even... Oh, my fuck. I'm gonna go to the bathroom. This is some bullcrap. This is fucking crazy. This is crazy! Alright, I'm back. This is just nonsense. Volume is coming in and out. I'm looking bearish with the algo range. LOD testing already on the Qs. Oh my god. The difference in the power right now is kind of crazy. It's evident as fuck. QQQ moving so much faster than SPY here. IWM is at the fucking... I don't know what the fuck it's doing on IWM. It could not even go break LOD here too. What if it bounces? It's algo range bound. Some sort of purple box here. I don't want to draw, but I guess I'll draw until it breaks higher or lower here in the 5 or 15 minute candle. The thing looks trashed up. Almost. Just like yesterday. Before some fucking news. Dude, this is just like yesterday before the president comes on in 1 hour. They're chopping like crazy. They chopped for 2-3 hours yesterday before that damn pop came out, SPX gap, and they want to call it on the Israel Strait of Hormuz news or whatever it is. What? Did we get a round 2 yesterday? Either they go a little bit lower into the presidential live stream, or they do a fucking presidential fucking pop. And they burn everybody down here. That's what I would think. Presidential bop. A whack-a-mole. Wake up! Wake up! One of those plastic hammers to smash the hedgehog. One of them little ones. 11:05. Look at the volume. MACD RSI bearish territory, and the volume keep coming in bullish, and candle keeps chopping. MACD RSI went bearish, then tried neutral, then bullish, then now negative, now bearish. So this shit is really, really weird. Not looking the best for a medium term or long term bullish bounce. Perhaps candles are suggesting here too. But what if they're visually faking this shit out too? Possible, but yeah, I mean, this is just hope at this point. People are hoping like yesterday to fucking go bump up like $7 on shit and go gap fill. I don't know if there's a gap fill up top we can do that on. There is from today's open, but it's basically what happened yesterday. Chop, 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 down, up, 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 down, 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 boom. Gap fill. Boom. Down. Burn everything up here. Chase on the candle. Shit is wild. I don't even know how else to put it. Shit is wild. Boom, boom. President Trump coming live in 1 hour. I literally didn't even say bearish or bullish when that gap happened yesterday. All I said was SPX gap filled up top LMAO. That's all I said in the main chat yesterday. It's fucking crazy. You do it on big fucking pop cycle like that. That's why. Throw everything off. They could test 651.61. It really depends on if this low breaks or not. 651.61. If this low breaks, then that means the bears are still in control and they want to break the floor on QQQ and SPY, or they could visually show that they're going to do it, or they do it and they somehow come back into this purple box later too. But right now, it does not look that bullish. It actually looks very fucking bearish still. Higher time frame. This thing I think actually might have reloaded on the 5. No. It's still very oversold. So maybe it is. I don't even know, man. I don't fucking know. Higher time frame showing fucking bearish. There has been no sort of MACD neutralization whatsoever on the 5 minute at least. Just a 1. Went all the way down to 1030. MACD RSI neutralized to 1030. 1035 MACD RSI going bearish, bearish, bullish, bearish, bullish, and bearish territory, and the candle is chopping at the floor. This is a bearish environment. The day so far is a bearish environment so far. This candle suggesting we're about to break the floor and create a LOD divergence or some shit, and then figure out what to do. I'm not doing shit downside. I'm just saying the candles wise, I cannot fucking go long at this point because of it. Unless there's a cycle confirmation or something, but I mean, they could be popping up with the fucking candle too, the top of the purple box too. I'm low-key waiting to leave Goryeo right now. I'm almost back at to my pure fucking peak, but if I really want my pure peak, they gotta visit here like 660, 334 or something. Yeah, I just don't like the MACD RSI. Candles could be great. It's just I don't like the MACD RSI. This shit is just weird. Coming in with the W on MACD RSI, coming in with the W on the candle is just not looking the best. And there's no volume with the W on the MACD RSI. It's just the candles trying to look the best. It doesn't even look the best on the candles. It actually looks just like a shithole. So at this point, I'm gonna wait. So I can fucking leave my Goryeo hopefully, but I'm waiting on SPY and QQQ, not doing shit. This is in the middle. Not even at the top of the range, not even at the bottom of the range. In the middle. Say Ali. Okay, let me find your name. Is it your link? I think I did see you request to join the other group yesterday, so I should be able to find you. Ali, found. Please check your private message, Ali. To the group. Change your WhatsApp name to Viral or something, man. If you can. Or change your YouTube name to Ali. I don't know. Best Hurricane said I requested too. What is yours? What's your name? Mr. Block. Best days. I'm guessing best days. Yeah, I sent you guys an invite, both of you guys. Yeah, MACD volume actually going bullish here. At the top of the W. Coming in at the all the way at the top of the W. I would have liked to seen just shit here, but yeah, it's whatever. I'm not gonna say bullish. This is not bearish either, but this is actually not bullish or bearish. They're actually all fucking getting tossed around every 5-10 minutes. Chris said I gotta fix my WhatsApp. That's why I haven't been in the past 2 days. Oh, I gotcha. I don't even notice. That's why. But you were just taking a break from WhatsApp or something. Robert said trying to get back in the WhatsApp group. LOL. Yeah, well that starts with activity. We have a lot of people that have wanted to join the group, and all they do is just be here for 5 minutes in a day and want to channel hop. So no offense to none of that, but all I'm saying is I asked from day one on the WhatsApp group to only join if they're actually gonna be active, not just once out of 2 months type of thing. So appreciate it. Nobody wants a bot community after all. Not even me. I don't think anybody wants it. Chris said, I get notifications, but I can't open it because the paywall comes up. Bro, how? Because WhatsApp is literally a free app. The hell are you talking about? WhatsApp Premium? Is there a WhatsApp Premium? WhatsApp Gold? Maybe. The RSI is bullish, but we're just at the top of the box. I'm afraid.
So triumph over Army on that second Saturday of December, which is the whole deal. I was at that game. It was amazing. It was an amazing game.
Wow, that happened so much faster than I expected.
To say, they introduced Trump, the place went crazy. There were no, let's give a little boo. There wasn't a boo in the house. Even the fake news couldn't say. I've gone to games where I would say I got 97%. two-score deficit to draw within 6 points in the fourth quarter. Now, I was there. It was looking not great. It was not looking great, fellas.
This is live,
You know,
folks.
I can't say I was rooting for you, but I did want to see that commander-in-chief deal. Is a big deal, right? And it only happens if you win, and it wasn't looking great. With time slipping
Rejection
away,
happening at the
Navy
box top.
mounted one final drive, and you marched downfield, nearing the goal line after running back Alex Tesca broke loose into the
Bearish
secondary,
off
which
the
was
top of the purple
amazing
box. Time
for a
is
huge
11:20.
24-yard gain. Okay, where's Alex? Where's Alex?
In
I
3
saw
seconds.
Alex before. Oh, thank goodness. Thank goodness. That was fantastic. I watched that because it was not looking good until you did that. After you did that, the momentum shifted, right, Coach? The coach was saying, I don't know, I got a problem, and then he did that. We all felt good. That's great. Congratulations. That's beautiful. That's amazing. So Alex did his job, and he did a fantastic job. But every football player knows, every single one of them, that you don't have heart, you don't have that. You can have all the strength, like Brandon, you can have all the strength you want, but if you don't have heart, that's exactly what Alex showed, and he's another one that's known for that. Then 3 times the formidable Army defense held the line, and they really held it, making it 4th and goal, midshipmen. So it's time to do or die, right, Coach? And with 6 minutes and 37 seconds left on the clock, other teams might have kicked an easy field goal, but that's not this, Coach. Coach, did you have a call? Did you call up the superintendent and talk to him like, what do I do? Or did you just say, let's go for it? I think you said go. I think you just go for it, right, Coach? But not this team with this coach, with the commander-in-chief's trophy on the line, which is a big deal. Blake dropped back in the pocket, surveyed the field, delivered a strike across the middle to Eli for a touchdown, and secured victory over Army in one of the most iconic moments in Navy football history. I wouldn't say in Army football history. I guess it was iconic also, but not quite in the same manner. But I watched that. That was incredible. The annual Army-Navy game is truly one of the most special occasions in all of sports, but in recent years, the college football playoff expansion has encroached on this sacred 4-hour time slot traditionally reserved for Army-Navy. So what did I do? I went out. I don't know if I could have pulled it off. I have much more power in my second term, don't you think? What do you think? Would you say, Brandon? Much more power. First term, I don't know if I could have gotten away with this, but what did I do? I went out and said, I'm going to sign an executive order to ensure that the second Saturday in December is preserved exclusively. Nobody's playing football. Not Ohio State against Notre Dame. Not LSU against Alabama. Nobody's going to play football for 4 hours during that very special time of the year in December. It's preserved forever for the Army-Navy game. Now, if you don't want to watch football, you don't have to. But if you want to watch football, you're only watching one game. You're not watching 19 different games, all of them in many ways big. So, Coach, that puts a little pressure because the whole world's going to be watching. So nobody else is going to be allowed. Of course, we'll probably get sued at some point. We always get sued. But we win those suits, and we'll win this one. The only game that's going to be played, so we preserve that time, no matter who it is. You're playing the Army-Navy game. It keeps it special. We like it, right? Are you okay with it? Huh? And just simply, we don't want other college football games
in control. Look at the MAC team's volume.
Playing over us. And frankly,
they're going to test 651, 61 at the minimum, I think, here.
Some of these games are pretty tough.
I need Korea and ULOD.
And they'll be able to play, but they'll play after 7 o'clock, I think. We brought it all the way up to 7 o'clock, so that should give you plenty of time, even if you have a little overtime stuff. So it's great. It's just an honor to do because it's such an important tradition of our country. It's beyond football, actually. It's a tradition of our country. In 2 short months, the 28 seniors on this team will be commissioned as officers in the greatest military the world has ever seen. We're the greatest military in the world, the strongest, the greatest.
MACD volume growing.
We're proving that
the candle
when you can
trying
take
to bounce on the one.
Venezuela in a matter of minutes Put somebody on a helicopter that was well guarded with thousands of people with iron doors. Those doors were like plastic. The United States Navy, the Marines, the whole military is we have the greatest in the world. I was so proud of what I did. And I always loved Space Force because that was my baby. That has never happened. That hasn't happened in 81 years. A new force.
Bears
and
are in
it
control.
hadn't happened. And I think
One
we
more
all
candle
agree
I can
that
see.
Space Force has become.
Volume is growing here, Bearish.
Right? Very important.
One
very
more red
important
candle
to
I
the
can
success
see.
we're having
Deep
even
break
now.
test or some shit.
Over the past few weeks, the world has seen the true strength and might of our sailors and aviators as they fought in one of the most complex and successful military operations of all time against the Iranian regime. And
I'm waiting until the president
says
something.
It's not, I don't want to get too crazy here. Not a contest. It's not even a contest. They do whatever they want.
Bearish, three-third cycle.
They had a lot of great equipment.
Small, very
Russian
small, medium-term cycle.
Equipment.
11:10.
They had plenty of money.
11:15 too. Time is now 11:20.
Useless
Time is
against
11:25 and 20 seconds.
No force on earth can beat the American sailors or the American military, the strongest in the world by far.
Bearish cycle.
To those standing behind me who will soon be joining these missions, I say,
look at QQQ.
sail fast, stay strong, and go Navy. And I just want to congratulate again this incredible team on this, the win of this trophy. It's not often that this trophy gets presented. You have to have a very special year to get it. And I'm going to sign the executive order right now and then invite Coach Newberry up to say a few words and talk about what a great team and what great individuals they are. So, Coach, I'll sign and then you take over, okay? Thank you very much.
Sherman Fielding. You should join in a couple of days, bro. I've seen you for 2-3 days, so that's the type of thing I like to see. When I see people for one day and they come back 2-3 months later, and they're like, "Oh, I've been active," then I can kind of tell. But I've seen you for 2-3 days, bro. So
somehow I don't know how they got by that.
Holy.
It didn't work. Let's
Holy. Go. The presidential God candle. Time is 11:25, and the bulls are what the fuck? Man, they cooked the MACD for this shit. What the
it's a good one. We rate them.
Wow.
That's close to a 10, maybe a 10. See, fellas, so you can see it first. Pretty good, right? Yes, sir.
He signed something. One candle. They were the rings candle. We're at the Tower of Sauerman.
I'll give these out.
Tower of Sauerman. Man, I don't even, what the fuck am I even looking at right now? Tower of Sauron, folks. Oh my god, call me the fucking Gandalf the fucking Grey, man. Call me the Gandalf the fucking Hobbit right now, bro. This is fucking literally Lord of the Rings.
Thank you, Mr. President. Thank you for signing that executive order. Protecting
Ali
the sanctity
requested to join the alert room. I'm removing you from the group, bro.
It deserves to be protected. Thank you very much. Thank you to you and your staff, your gracious hospitality, and for making today's ceremony possible. Thank you to the distinguished guests and everyone in attendance for being here to recognize this team.
I'm sorry, I'm not removing you. I'm so sorry, 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 I'm really sorry, Ali. I'm really sorry, I'm really sorry. I'm so sorry, Ali. I was looking at my fucking SPX alert room, SPY alert room, and I thought it said requested to join. I'm so sorry, I'm so sorry, I'm so sorry. I'm so sorry. Never mind, Ali, I'm sorry, I love you. I love you. I'm sorry. I'm sorry. I'm sorry. You have to understand there was like 35, 40
It's been our goal to return to this stage many times
40 minutes or
during
30
your
minutes
tenure,
after I
President.
asked them not to. So please.
There's no higher honor than our program than
I am so
standing
sorry,
here
Ali. Our Lord of the Rings coming in. Tower of Sauron, folks. They trapping like crazy.
And all the men and women who serve and have served in our Navy and Marine Corps.
This is everything trapped.
These young men understand that wearing the Navy uniform comes with a responsibility.
This is the presidential bop. The motherfucking
greater than
plastic
football.
hammer on the hedgehog.
Each day they strive to live up to the core values of honor, courage, and commitment.
I'm so sorry, Ali.
And the standards of those who came before them. Leaders of character who have gone on to serve our country with distinction.
I was going to say that again. I'm so sorry.
What they accomplished this season is a direct result of that ethos.
And no, because at the top
mindset.
it said that someone requested
the players
to join,
here on
but
stage,
it's somebody that I removed last week.
And to my left in the audience, some of the very best
I was looking at my phone and my
our country has to offer. In just a little over 2 months, these 28 seniors standing behind me will graduate and commission as officers in our Navy and Marine Corps.
Please understand that has
under your
happened to my
command, Mr.
life.
President. They will do so with character, discipline, and the values that define this institution.
And I realized
I also want to recognize our fellow service academies,
I literally was on the
the
live
United
stream
States
asking
Army,
for 7, 8 days
and the
in a
United
row.
States Air Force.
I guess
the rivalry we share is among the greatest traditions in college football.
Bears are in control. This shit is nasty.
But it is grounded in deep and enduring respect.
Or do they pop again?
Because we know that one day many of these young
I have
men
no idea.
may
I
stand
thought Corey
shoulder
wasn't
to
going to get bear
shoulder
trapped too,
in
but that thing
defense
bull trapping,
of our
so
nation.
I don't fucking know here. It's looking
The Commander-in-Chief's trophy
bear
represents
leaning,
the commitment,
but it hasn't
discipline,
went lower, so it's
teamwork
bear trapping,
that define the future leaders
as well
and
as bull
warfighters
trapping
of our armed
everything.
forces. Every day, our players balance the demands of Division I athletics with the responsibility of preparing
crazy.
to serve as
You know,
officers.
I almost said this shit is bullish
That
at the top
challenge
of
forges the
11:25, but I
character
waited.
this trophy represents.
The Lord of the
In
Rings
our
fucking
view,
tower
it
actually
is the
came
most
in. I
meaningful
waited.
and honorable trophy
Literally, I waited.
in all of college sports. To our families, alumni, and the countless people who support the Naval Academy, thank you. Your belief in these young men and in what this institution stands for makes moments like this possible and special. Mr. President, thank you for hosting us today and for your continued support of the men and women who serve our great country. This time, I'd like to bring our two captains, Landon Robinson and Blake Horvath, up to present you with a couple of gifts.
Great.
Thank you.
Well, first, Mr. President, it's just an honor to be here.
This is very heavy.
I know.
You have a strong neck.
Like you said, well,
Strong
you're the healthiest
neck.
guy here, so you got the neck to do
That's
it.
what's up. Love men with strong necks.
So just want to say thank you so much for having us here. Absolute honor. And last year, I was hesitant to say it's a once-in-a-lifetime experience, right? Because I knew we'd be back this year. So I'm glad I can now say it's a twice-in-a-lifetime experience.
Strong neck.
And just couldn't have done it without our whole team here, right? Our support staff, from the strength and the trainers to all these guys and all the guys who are still at school right now in class. Thanks to all of them, and just for everybody for supporting us. And go Navy, beat everybody.
Absolutely. You know, first off, thank you, Mr. President, for the opportunity to be here. Blake said most of it, but I'm just so thankful to all my teammates and all my coaches for all the hard work they've put in. It's very hard to go 11-2 in a season, but I couldn't be more proud to play for Navy football, and I couldn't be more proud to represent the United States Naval Academy. So go Navy, beat Army forever.
We're going to see you in the Oval. Now, anybody does not want to go to the Oval, please.
Bottom
raise
of the
your
purple box tested that.
Okay. I'll see you in the Oval. I had a feeling you were going to do that. Thank you. See you in a couple of minutes, okay? We have something. Thank you, everybody, very much. Thank you.
That's it? Wow. That was a quick presidential live stream. We almost missed it. That was so quick. Oh my god. Quadruple witching today. He may be coming on later today again. He was supposed to come on at 1 p.m. That was a surprise one. That shit was a surprise one. Someone said, I'm very tempted on MU. I said, it seems like you're tempted on jumping off of Niagara Falls. It seems like you're fucking tempted on fucking jumping off of Niagara Falls, bro. Personal opinion, I don't know. Shit looking crazy. HOD divergence hope at the top being used all day long. There's been no significant bounce to recover any sort of momentum downwards today. What a crazy fast spike, just like yesterday though, but even way faster. Actually rejected in 1 single minute. Damn, MU. Man, MU MU from yesterday would have been fucking crazy nice too, huh? Oh my. I had an MU yesterday and I let go at the top of the or at the rejection of the purple box. I took a ride down. MU. My chart frozen. Give me 1 second. Chart froze. Of course it reloads, because why not? MU, folks, MU. This shit is fucked. 425 touch again for the second day in a row. Core U down 13.33% for the day today. Core U.
Signing 2 historic executive orders continuing my administration's efforts to help more of our citizens achieve the dream of home ownership. It's called the American Dream. Thanks to our purchase of $200 billion in mortgage bonds, mortgage rates recently reached the lowest level in 5 years. This dramatically reduces monthly payments for new home buyers. The annual cost of the typical new mortgage is down almost $5,000 since I took office. I'm very proud of that. I also signed an executive order to stop Wall Street and large institutional investment firms from buying up all the single-family homes in the scheme to turn them into rentals and make lots of money in doing it. We want America to be a nation of owners, not renters. Today, I'm taking action to help reduce rates even more and make it much easier to build new homes in America. The first executive order is about bringing more community banks back into the mortgage business. 2 decades ago, over 5,000 community banks were offering mortgages. Today, that number has been slashed by more than 50%, largely because of burdensome, unnecessary regulations that radical liberals imposed on community lenders for the benefit of their donors on Wall Street and, frankly, for the benefit of themselves. The result was less competition and higher mortgage rates for hardworking Americans like you. That is why, under my order, we will eliminate the thicket of unnecessary rules and restrictions that crippled community banks. They've been hurt so badly. We're bringing them back. When more local banks start offering mortgages again, fees will go down, costs will fall, and home buyers will be able to get a mortgage under the more affordable terms that we're insisting on. The second executive order I'm signing today will help lower construction costs for building new homes so that home builders can offer Americans more affordable options. I'm going to sign them right now. No auto pen, okay? That's my real signature. It's not an auto pen like you had in the past. As part of the Green New Scam, the Biden administration and many state and local governments added endless, ridiculous regulations that raised construction costs very, very substantially. With my order today, we will slash many of these pointless regulations that do nothing for safety and add lots of costs. It's really unfair to the home buyers, and ultimately, they're the ones paying for this disaster. Under the Trump administration, we want to make it possible for every American to live that American dream in a beautiful home, and it's really the one that they pick. It's going to be the apple of their eye. So I just want to thank everybody. Our country is doing really well. It's being thought of all over the world with great respect again, more than maybe it's ever had. Thank you very much. Have a good time.
This shit's a pretty insane day. This is really an insane day. What the f was that quick pop?
Probably not a bad time to check in on the technicals across the board in the markets. Join us, Katie Stockton, Fairlead Strategies founder and CNBC contributor. People that don't even pay attention have heard about the 200-day moving average issue. It's an important indicator. It's not like magic. It just tells you, here's where we've been trading for this period of time, and we're at a point now where those levels could be broken.
Actually, they're in play right now, the 200 days on sort of a widespread basis, and I see them as support.
You do?
Support
1 month.
or potential support. And part B, I mean, they're very widely followed, so therein they have importance, right? But they also tell us what the prevailing long-term trend is. So when you see them breached, of course, it suggests that we have something worse than just a corrective phase. But then I would guess also that maybe some of these algorithmic, like trading programs.
It took a long time for smart money institutions to fucking load off at the top.
A breakdown by the nature of so many eyes being on that 200-day. So the 200-day does look vulnerable to us for the S&P 500. And we feel that that's a risk metric and that the next support level, it's about 6 or 7 percentage points below.
Which is significant if we were to go.
And at this point,
you said you look at them as support. Does that mean you think they hold, or you think if they don't hold, it could be 6 to 7%?
Well, it's the right question to ask, right? Because for any kind of test of support, it's not like a precise level. So if it can kind of hang around there, that still could be a successful test. But if it breaks, that becomes the next support level that we would focus on. So a gauge of downside risk. Support doesn't act as a magnet per se, but it does frame what we could see on the downside. So it's really very helpful in that regard. We use our indicators, things like the momentum gauges, to try to understand when we have a buying opportunity.
There's more than just the S&P. There's the NDX and others. So nothing is good. You got nothing.
Bears are trying. So let's look. The bulls are in danger. Like the spike candle could be like, it's showing not bearish, and then go up too. But like honestly,
that's even
in the fucking bigger
well,
picture,
so
like
what's happened is the former leadership, and which of course happen to be some of the biggest heavyweights and darlings of the market, now have long-term momentum sell signals. We're talking about Amazon, Nvidia, Palantir, JP Morgan. AppLovin.
So all the biggies,
so a lot of the darlings are now in a position where either they're probably having entered trading ranges at best, or
who remembers
what
they said 1 month ago?
Who remembers what they said 1 month ago? For us getting out of this corrective phase quickly. The correction does have
Palantir, Microsoft, Tesla, Google, Apple,
One, it's taking
I'll
longer.
never forget.
It's gone
I
from
will
sort of a
never
neutral
forget.
range.
Why?
It's
Because I
now
never
more of a grind on the downside as opposed to something that's more swift, and that would be more likely a counter trend situation. The soonest that we could get buy signals from the counter trend indicators that we track is in about 2 weeks. So what we're going to try to do is just try to time short-term entries and exits within this context.
I wonder if that lines up with fundamentals, the war, everything else. It's weird the way it does sometimes.
It could also just be simply it's a mature
I said this shit on fucking day one on the Iran shit coming out. I said something fucking changed.
Than back in 2024.
Most of the people on that said, nah, nothing changed.
Sure,
nope.
it didn't act well, but it had broken out
just
to
like
new
last
highs
year.
that were in the stratosphere, based historically from where it had been. So it does call into
just
question
like
the new high breakout.
Deja vu all over
but
again.
But it's not like the end of the world for where it's been.
As a short-term development, the gap down yesterday was definitely bad because it didn't,
for the semis too.
For the broader semiconductor complex, especially SanDisk is another one that has been another darling of the market. Semis as a group have not broken support. We've seen breakdowns, of course, on a widespread basis, but semis have held up pretty well, even though breadth has contracted. When we lose the support of that leadership from the semiconductor sector, that could be problematic, of course, and lead to maybe that next leg lower for the market.
You're still looking at crude like a technician. I mean, what good are technicals when something like a war can close the Strait of Hormuz, and it has nothing to do with support, resistance, but yet you still try to. So tell us. But you're saying the upside momentum has been broken at this point?
Well, if you recall back in January, we were constructive on crude oil from a technical perspective, meaning we think it'd go higher. And that was in part because the downdraft started to generate counter-trend signals.
Very easy to say shit after it happened. No cap.
We had.
Very easy to say, oh, this shit was bearish or bullish after it happened. No cap. What's fucking hard is during it. What's fucking hard is before their deductions. No cap.
Time now for an exclusive interview with Fed Governor Waller, Christopher Waller. Let's get to Steve Leisman. Great time for this, Steve, in light of everything, I guess.
Yeah, in light of everything is a good way to put it, Joe. Thanks very much. We're here in Washington with Fed Governor Chris Waller. Governor Waller, thanks for joining us this morning.
Well, thanks, Steve. Great to be back.
Well, let's talk about the idea of the main stories out there, which is the higher oil price. And you were a couple weeks ago not that concerned. Has your views changed given what's happened with the Strait of Hormuz and what's happening in the war in Iran?
Yeah, so 2 weeks ago when the jobs report came out and it was negative 92,000, I thought that's it. I'm dissenting. I'm supporting a rate cut. Because at that time, exactly, it looked to me like this was going to be a very short-lived spike in oil, no inflation issues, looked through it. Since that time, the Strait of Hormuz was closed. This is looking like it's going to be a much more protracted conflict, and oil prices are going to stay high for a longer time. So that suggested inflation was more of a concern than I was putting it. The second piece of information that came out, and Chair Powell talked about this a bit on the press conference, was that we've seen a lot of research recently that suggests that this year labor force growth is going to be zero or close to zero. If that's the case, then you don't need any, zero is the break even for net new jobs.
For the unemployment rate not to change.
Yeah, exactly. And then for the last 3 months, it's averaged right around zero. So I'm kind of in this kind of odd spot where, like, my brain understands the math, but I can't get through my gut that this is okay.
Right.
So that was kind of one of the things that
just to emphasize that, what you're saying is a zero doesn't seem like it's enough, but you're saying the math suggests it is enough to keep the unemployment rate up.
Yeah, I've been doing this for 45 years as an economist, and if you told me zero was normal, I'd say you got to be out of your mind.
And you'd be saying the Fed needs to respond to that.
Fed needs to respond
in the job market.
I mean, the idea we'd get a minus 92,000 and the Fed would go,
right,
whatever, your head would explode.
So let's talk about your general framework for thinking through a rise in the price of oil and what that would mean for policy. How much concern do you have that it bleeds into the core?
Well, that's the issue. If it's a very high level and it stays high for months on end, then at some point it bleeds through because oil is an input into so many products. This is very different than, say, a tariff on toys. You put a tariff on toys, it doesn't bleed through into all the other goods in the economy. But oil is a major intermediate import, and it will at some point bleed through. And that's where you worry about high and persistent oil shocks. It's not like a transitory goes up and then comes right back down.
What does the history tell you about what the Fed did right and what it did wrong? Obviously, Bernanke in 1986 wrote a paper that said the Fed over-responded from the 70s and the 80s and made the recession worse. At the same time, you just through a period of time here where you sort of ignored what you thought was a transitory increase in prices, and you ended up with higher and persistent inflation.
Yeah, I mean, that's just, in the 70s, people forget it wasn't a one-time oil shock. It was a sequence of oil shocks. So, you know, if you get a bunch of one-off things, it starts looking permanent. It doesn't look like a temporary, you know, just a few one-off things. But in responding to all that in the 70s, everybody kind of realized that maybe this was a mistake and you have to look through this stuff. And that became pretty much central bank wisdom from the 80s on, is these kind of oil price things, they go up, they come back down, you don't respond to them. I always want to point out that something where the oil goes up and then it comes down is very different than oil goes up and then stays there for a long time. That's where you get back to this issue where it bleeds through back into core inflation, and then you do have to kind of respond. You can't just look through it. So that's one of the critical things that I started thinking about. This inflation problem may be worse than I think it is if this continues. Now, we'll wait and see. We don't know where this is going to go. But we have to sort of think maybe caution is warranted. And it brings me back to one of the last points I wanted to make. In March of 22, before we were going to lift off the zero lower bound in March of 22, and I had been advocating.
They're not even building houses anymore. They're not even building offices anymore. They're building
raise rates by 50 basis points. After that, Russia invades Ukraine, and everybody was. It's kind of the same boat as here. You know, caution is warranted. So don't do anything right now, and that's the same approach I took this time. It doesn't mean that I'm going to stay put for the rest of the year. I just want to wait and see where this goes. And if things go reasonably well and the labor market continues to be weak, I would start advocating again for cutting the policy rate later this year.
Walk me through the horizon of different policy outcomes that you think. Chair acknowledged that there was a discussion at the meeting of rate hikes. Where do you stand on that possibility?
Well, I think if people are worried, I'm not speaking for any of my colleagues, I'm just laying out some theoretical points. If you think inflation sitting December of 2024 was, headline PC was 2.8. It's 2.8 roughly now.
The VIX
so there's like no change in inflation in all that time. And if you're worried about it going up from here, then there's a sense in which people say, look, we've got to raise rates to get inflation back down and under control. I have taken the view that if it was 2.8 in December of 24 and 2.8 now, it's not structural. Because if it was structural and you believe tariffs were being passed through by 50 to 100 basis points, then inflation should be running 3.5 to 4, not 2.8.
Burning bulls
so
and bears.
If the tariffs had any pass-through effect, then structural had to come down to maintain 2.8.
I hope people get that math. It's pretty interesting, right?
We are making progress.
You added a half to 1 from tariffs.
Yep.
You had 2.8. You are 2.8. So therefore, it should be 3.5.
Something had to go down
in there. So it didn't go down. So you think that the structural inflation rate is probably more like 2.
It's getting closer to 2. That's why I think once you get past the tariffs and maybe the second quarter, you're going to see inflation come back down. For just this reason. Once the tariff effects wash through, then all that's left is whatever structural change. Now, if you think it's going to go bouncing way back up, but I don't think there's a need for rate hikes because of this kind of math argument I was just giving you, that we're not seeing any progress, but that's because tariffs are pushing it up while structural stuff is bringing it down, and on net it stays the same.
You and I.
Yeah. We're not watching that. Squawk Box.
This week, MasterCard announced an acquisition of stablecoin infrastructure startup BVNK for up to $1.8 billion. It's the latest in mainstream finance's adoption of blockchain technology. Joining us right now is one of BVNK's backers, who's also betting on the growing link between blockchain and Fintech. We haven't seen her in quite a while. Katie Hahn is here, founder and CEO of a $2.5 billion firm, Hahn Ventures. She's backed the likes of OpenAI and Anthropic.
They don't even need to break the bottom of the purple box with a 5 or 15
mentioned,
minute candle. Like, all they need to do is visit it again, and then it'll just
Good
be
morning.
all
It's good to see you again. I haven't been here since I think last June.
Oh my goodness! So tell us about this deal, and then I really want to try to understand what you think is happening more broadly. Maybe this transaction is indicative of what's happening more broadly in sort of the convergence of legacy fin and the tech part of all of this.
Well, I think you just summed up well what's happening. What's happening is effectively an arms race in the global payment space. And you saw this week, as you said, MasterCard just acquired one of our portfolio companies, BVNK, for $1.8 billion. And this gets MasterCard squarely into the stablecoin space. By the way, Andrew, this was one of MasterCard's biggest acquisitions ever. And for us here, it's really validating because, as you know, I've been on this show many times talking about stablecoins over the years. We as a fund have been investing in it for years. And that's because we saw stables as a key innovation. I mean, you think you can transfer a digital dollar globally, instantly, anywhere in the world, really seamlessly and frictionlessly. And we think that's a really important innovation. And that's why you've seen incumbents, not just like MasterCard this week, get into stables. You also saw last year Stripe acquired another of our portfolio companies, Bridge, for $1 billion. Right. And I think it's easy to see why this space is $12.5 trillion of volume already. And we believe that this will only increase in an age of AI.
So it absolutely feels like it's going in that direction. The question that I would have about all of this is whether stablecoins ultimately become commodified. And maybe there's so much room between now and commodified that it doesn't matter as an investor. But I'm curious how you think about that, because if everybody has their own version of a stablecoin, what that ultimately means.
Right. Well, look, there are many currencies in the world, right?
Life is all about upgrading.
Dominant currencies in the world, and we see the same thing playing out in the stablecoin space ultimately. And just because something is inevitable, I always say, doesn't make it imminent. But we really see with the rise of AI systems and things that I'll call agentic finance, we really see this trend continuing with stablecoins. These are fundamentally new rails, purpose-built for this new era in tech.
When you think about what's happening in crypto right now, in the blockchain, obviously this clarity bill that's not so cool. There's no clarity on clarity. What are you thinking ultimately happens between this massive fight between the crypto industry,
not that bullish or bearish,
Coinbase, and the banking industry, which is what this is really all about?
Salvador said this Trump speak today.
Right. So actually, it's not true that there's no clarity, and let me tell you why. Just this week, I don't know if you saw, but the CFTC and the SEC came together to release joint interpretive guidance on the age-old question in the crypto industry, and that is that the courts were starting to weigh in on, and that is, what is a security and what is a commodity? So that happened this week, and I think a lot of people.
We had Paul Atkins on; he talked about it, but that we still don't have a bill. We still don't have real clarity on whether crypto firms can effectively offer either effectively the equivalent of interest or loyalty points or other kinds of things like that.
The contract in core hasn't moved.
I'm hearing that there's a compromise in the works in the Senate Banking Committee, and I'm hearing that compromise is going to be announced as early as today. I'm cautiously optimistic. Obviously, we don't know for sure if that will happen. To me, the bigger question is not whether a compromise will be reached between the financial institutions, the banks, and the companies like Coinbase over rewards, and that is, for your viewers, by the way, whether or not essentially some form of yield can be paid on rewards on stablecoin deposits, which the banks have resisted. And I think is better for consumers. But to me, the big question on the Clarity Act is Congress going to get a bill to the floor on time to vote? Although there's still 7 months to go until midterm elections, the reality is there's only 3 working months
I could just take a 1.3K day and be done.
And so I think they need to move very deliberately after Easter recess to get this bill to the floor. But again, I'm cautiously optimistic. And we did have the Genius Act passed. But we'll wait and see. And we should have more news today on the compromise.
Thank you. Maybe you've broken the news right here. I hope you're right. Separately, and just to jump around to a lot of different topics.
I was cautiously optimistic, but yes, okay.
Well, we can cross our fingers.
15 minutes is not a long time, but still.
Goes back to then AI. You have stakes in Anthropic and OpenAI. You also, by the way, used to work in government, and so I wanted to get your take on how you evaluate what is going on with this Pentagon situation, supply chain risk conversation, and the transaction that OpenAI has made with the Pentagon and the transaction that Anthropic has now.
Well, look, let's back up and just first talk about blockchain and AI and agentic finance. And I think we can all agree, and there are a lot of legal issues involved in that area as well. I think we can all agree that agents will be doing more things that humans do now. And one of the things that humans do now is they transact and they make payments and they exchange value with each other. And we think it's pretty inevitable that over time, computers are going, or more particularly agents, are going to be doing that on our behalf. And if you think that agents and computers are going to use the same payment systems that humans use, I think that's wrong over time. I think that agents are going to want to transact 24/7, instant settlement globally. And right now, if you think about how humans progressed from using checks to credit cards, and now actually not even credit cards as much as credit cards on their iPhone, we think that also agents will be using some of these new systems. So I think that's where AI comes in. And I should just note that our fund is not an investor in Anthropic or OpenAI, and I'm glad you listed that those were personal investments. Our fund is really focused at Hon Ventures. We've been investing in the future of finance, and that new frontier, of course, includes crypto, but it also includes things like tokenization. I don't know if I'm sure you did break the news that NASDAQ, I think, got SEC approval to offer tokenized securities. Robinhood is leaning into this. So it includes tokenization, these new rails I've been talking about that are open 24/7, and things like agentic finance and prediction markets. So we could talk another time, I think, about all of the litigation. And I think there's a lot of it, and I think there's a lot more to come. And by the way, same with prediction markets, with all these new frontier technologies. And I think that's why my background as a government litigator is actually particularly relevant to some of these companies.
Welcome back. Good Friday morning, everyone. Thank you so much for joining us this morning. I'm Maria Bartiromo, and it is Friday, March 20th. It is the first day of spring. We survived that horrendous winter. It is 8:01 on the East Coast right now. The White House is signaling that it is not backing down from the DOJ probe into Federal Reserve Chairman Jay Powell, potentially complicating Kevin Warsh's path to the top job in a short-term period. President Trump defending the investigation into comments that Powell made surrounding the billion-dollar-plus Fed headquarters expansion. North Carolina Senator Tom Tillis claims that he's vowing to hold up Warsh's nomination process until the probe is dropped. Meanwhile, Jay Powell made clear yesterday that he will remain at the Fed until his successor is confirmed by the Senate and that the investigation into him is over, something I've been reporting would happen all week long. Here's the chairman yesterday, Wednesday. Watch.
I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality.
Well, there you go. Joining me now is the Federal Reserve Vice Chairman for Supervision, Mickey Bowman. She's at the center of all the battles.
Didn't she just say it was over? He just said he's not leaving until it's over.
Regulation.
So
it's great to have you, Mickey. Thank you so much for being here.
Well, thank you for the invitation to join you. It's great to be here.
And I know that our audience is very eager to hear your thoughts on regulating the banks, because it has such an impact in terms of freeing up capital, getting that capital into the economy. But first, your reaction to what we heard yesterday from Jay Powell, saying he's not planning on leaving until this probe is dropped.
Well, I think Jay made himself clear during the press conference, and I probably want to let his statement speak for itself.
Yeah, but you know what I was surprised at? I mean, we heard from the Bank of England yesterday or this week as well, and the Bank of England was very specific in terms of what this Iran war will mean for the economy. Jay Powell didn't give us anything about that. Can you give us any sense in terms of what this Iran war is doing to the U.S. economy right now?
Well, I think it's too early to tell what the longer-term imprint will be on the U.S. Economic activity and how we should think about that in terms of our longer-term economic forecast and how we should think about that in terms of our FOMC meetings and any rate changes that we might make as a result of economic evolution going forward.
All right. I mean, I'm totally expecting that the price of oil is going to show up in the earnings releases in the next couple of quarters, but we'll get into that later. Let's talk about what you're doing, because I know that so many people are eager to hear. You have unveiled proposals to ease capital rules for the major banks, a major win for a number of companies and for the economy and growth, if you're talking about growth priorities. Give us your ultimate goals. Is this about freeing up capital, getting more funding into the U.S. economy? What is this about?
Well, Maria, really it's about modernizing the bank regulatory framework. When I became the vice chair last June, this was one of the major things on my agenda, which was to modernize our capital framework. We had the leftover resolution of the 2017 Basel Agreement that we had not yet implemented, and we have 4 pillars of capital. We've introduced 2 proposals already. The last 2 we just passed with broad agreement with our board yesterday. So we're excited to be able to actually calibrate the risk weightings for different activities that the banks engage in to support the U.S. economy. So it's credit cards, it's small businesses, it's consumer lending, and it's businesses and mortgages. So we want to make sure that banks actually can engage in those activities without being disincentivized based on regulatory constraints.
Yeah, I'm glad you mentioned that, because when people think about this, oftentimes we look at the headlines, oh, you know, easing banking rules, but you just went through the list that affects so many corners of our economy, small business, credit cards, and that is what the key is to actually unlocking the capital. Because if you've got these huge capital rules that you've got to hold, what? I mean, your predecessor was like anything from the teens to 40% of capital being held. If you're holding all that capital, then that's less capital that you're going to lend to people and to institutions, right?
That's exactly right. So our approach was to look from the bottoms up, from each component of that Basel Agreement, and make sure that we were not disincentivizing banks from engaging in activities that can support the economy. So this is basics. Like I mentioned, it's the lending, it's relationship lending. What we've seen over the years since these rules were put in place after Dodd-Frank, we've seen a lot of business that's traditional banking activity exit into the non-bank space. And this is one way for us to recalibrate that, to encourage banks to get back into those traditional banking activities.
Now, I mean, we had a real, if you want to talk about stress tests, we had a real stress test during COVID.
We did.
Was there a harder stress test that we could actually see the strength and the safety of the banks than COVID? I mean, maybe the 2006 and 2007 global financial crisis, which we also lived through, the two of us. But tell us about that. What did COVID teach us about the banks, and where are the banks today in terms of that capital safety?
So banks actually performed very well during COVID, and we did several stress tests, even off-cycle stress tests, to ensure that the banks were performing appropriately and in a strong way to be able to support the economy. The reason that we revisited the stress test now is because what we recognize is that there are capital charges that result from the findings of the stress capital buffer, but they aren't going through the regular process for a rule that would be required if we're increasing requirements, capital requirements in particular. So we're using the APA system to allow us to get notice and comment, to be more transparent about the expectations, and then understanding what the outcomes will be based on the performance of a bank throughout those stress tests.
So we should point out, Mickey, that this is in your blood. You grew up in the banking industry. Was it your father or your grandfather who started a small bank?
I'm actually the 5th generation of my family. The bank was founded in 1882 in our little community of Council Grove, Kansas.
Isn't that wonderful?
Farmers and Drovers Bank. Yeah, it was. I came to banking late in life. I had a career before that, but returned home when my father got sick and got to work with him for almost 10 years.
Oh my God, how beautiful that must have been to work with your father. But I wanted to mention that because you know community banks better than anything.
You gotta be careful.
And so the community
Someone's
bank
very
end of this
biased.
is really important as well, because you've got people who they rely on these community banks and they don't have access to the JP Morgans and the Bank of Americas of the world. Let's go through your 3 proposals. New implementation of Basel, the GSIB surcharge reform, and that means the globally systemically important banks. We call it GSIB. And then the standardized approach to risk-weighted assets. Walk us through this and tell us why these are important proposals.
So the Basel III agreement really just implements the agreement that was made in 2017 globally with the Basel Committee. We're the last jurisdiction to actually implement our new framework to comply with that. What we wanted to make sure we did was to ensure that we were taking approaches that were appropriate for U.S. banks and the unique laws and characteristics of the U.S. banking system. So we want to make sure there's a level playing field, but we don't want to give our banks a disadvantage in the global marketplace. So that part of the proposal only applies to the GSIB banks, which are the 8 largest in the country. The next level is the GSIB surcharge. It's just a surcharge on top of those GSIBs that was put in place I believe it was in Dodd-Frank, and it hasn't been adjusted since it was put in place in 2015. So those requirements have just grown over time, and we're trying to make sure that they're indexed and appropriately sized for the increases that may happen going forward. The other is a more appropriate capital treatment for regular lending activities for banks that are smaller than GSIBs. And that goes down all the way to smaller banks if they don't opt into our community bank leverage ratio.
You just tried faking out, breaking out on the purple box. They could chop here, though. They don't have to reject
different lending activities in a less complex way. So we believe that this is a better approach. It'll get banks back into those activities that were pushed out of the regulatory perimeter with the approach after the financial crisis and the odds.
You're making so many important points, and I've got to go back and talk about a few of them. First of all, when you're talking about the largest banks and then the smaller community banks,
$4 range,
$3 range. That
QQQ
of course
did break
it should not
up.
be the same brushstroke. I mean, you've got to have different risk profiles and different, regulatory frameworks for a bank that has exotic transactions in all sorts of things on their trading desk, and they're doing exotic things across the world, versus plain vanilla banking and deposit accounts with the community banks. So this is important that you're making this distinction.
It is incredibly important, and this is just the first step of our ability to look into how we've set our asset thresholds.
Not be surprised on another rejection again.
QQQ. And our supervision to ensure that we're capturing the risks that are unique to the different size, business model, and risk of each institution, and appropriately ensuring that they're safe and sound and in compliance.
I don't know.
With
it could chop
and
here.
regulations.
Now, in terms of this surcharge,
QQQ shit
the
broke out of the
major
spike
banks
candle,
are
and is that
pushing
it?
back,
SPY
and
is
they're
at the
saying,
purple
look,
box.
the way you calculate
There's a
this
purple box here in the
surcharge
Qs
has
too,
to
but I just
do
didn't try
with
it.
overall indexing the economic growth story back from 2015. So tell us about that, and whether or not you're expecting tweaks there in terms of this surcharge.
There's so many
we look
fucking
forward to
cycles
comments. Obviously, we have a 90-day comment period for
why
all
I
of
would
the
not be
proposals
surprised
that
at
we
another
passed.
fucking
And I want to
rejection.
just
It's already
emphasize
happening.
again,
12:05
we
to
had a
12:10
6-1 vote yesterday,
12:08
which
right
is
now.
almost unheard of in
Cycle
today's
confirmation at
environment. It's
12:05,
broadly
12:06
supported
looks like.
among our board members and, of course,
They
with
could
the
bounce
OCC
at
and
12:10,
FDIC.
12, like
So we're
12:12,
very
which
excited
is
about
12:10 or
the proposal
12:15
that
too,
we
but like
have,
they cycle
but we're looking
confirmation
forward
a
to
little bit
comments.
here.
And if we determine
Actually,
that
that's
we need to
12:06.
make tweaks to that, we certainly will. But the reason we index back to 2019 or set the
Looks like
benchmark
they're
at
going lower.
2019 is because pre-COVID, we believe that there was just about the right amount of capital in the system, and that's sort of where we started.
For fucking $8,000.
I have some comment letters from some of the banks, and they're talking about the way it's calculated, which could be, it's indexed to fixes.
I got in on core you at the top.
And you're saying it's because you wanted to go back to before COVID to see how things were before we had that big dysfunction.
We had a lot of money that was added to the money supply, and then a lot of asset growth as a result of a lot of the fiscal policies that were put in place during COVID. So we
Someone
think
said that was short-lived, but that was still a nice bullish cycle. I mean, it's not saying it's not in a bullish cycle anymore, but like it did go to the spike candle again. So there's new money bulls. Fucking,
I'll never forget.
This is majority of the bears.
Your predecessor's time with all of those rules and regulations that Michael Barr.
There's a lot of bullish trapped
today
too. So
people felt like they were getting strangled with regulations, particularly as it related to climate change and putting new rules in place for ESG things. And so this is completely different.
Well, I have a very pragmatic and practical approach. Banks are already required to mitigate their climate risk. We just don't call it climate risk mitigation. It's risks that already existed and banks were already addressing. We require them to think about those types of risks. We just don't think that they need to be elevated above other risks. We also need to recognize that we had miscalibrated after the financial crisis to ensure that we are appropriately allowing those activities to maintain or
do in the
be
3/3.
retained in the banking system. We can't oversee or regulate
5-minute
from a
rejection
prudential
shown as now
regulatory
bear trap all
perspective
5 minutes.
those activities once they're outside of
This
the
thing
banking
could
system. So
roof
we want
testing.
to bring them back in
See,
and
Mac
make
the
sure we
RSI is super
understand
bullish,
the
so I
full
guess people could
complement
say,
of
oh, still
activities
bullish,
that our
still
banks
bullish,
are
but it's
engaging
retesting
in.
I mean,
until
there
it
was
breaks out of
widespread
Mazenok, so.
opposition to the bar proposals, as you
We'll
know,
see.
not just from the banks,
Purple box chop.
but from even the progressive
purple
community
box, same level
that
too.
were worried that we were talking about a downstream impact to lending. But I want to push back and ask you about what the critics may say in all of this, because there is also right now chatter about, oh, we're worried about private credit. Oh, we're worried about an AI bubble. Oh, we're worried about leveraging the bond market, leveraging the bond market in the Japanese bond market, the UK bond market. Where, in your view today, is the biggest risk in terms of potential dysfunction? Are you worried about private credit?
Well, these are things that we look at very closely, and we have a supervisory program right now making sure that we understand the dynamics of private credit within the banking system and the banks that we oversee. So we look at each one of these risks, and we make sure that our supervisors are focused on the details and understanding how our banks are engaged in those kinds of activities. So yes, we're broadly attuned to and aware of all of the risks, especially private credit and leverage lending and other areas as well. But there's cyber risks that go beyond just those types of risks that could reveal themselves much sooner than something in private credit or leverage lending. So we have to be sort of specialists across the broad spectrum of all of the risks that can face or impact the banking industry.
Of course, we're counting on you to do that, by the way, individuals as well as businesses. Do you think it's justified that people are worried about private credit right now?
Well, I think that it's an important thing for us to continue to monitor and understand how banks are.
They keep talking about this private credit shit. Nothing really happening off it.
Welcome back. Oil prices once again setting the tone for stocks. Take a look at where we stand with Brent at 110.22. That's up 1.5% right now. Crude oil's at 96.47. Up
crude up again?
President Trump is securing support from allies. 5 European countries and Japan have pledged their readiness in helping to pry open the Strait of Hormuz, vowing to intervene against Iran and ensure safe passage through that critical waterway. The president welcomed Japanese Prime Minister Sanae Takaichi to the White House yesterday, and they spoke about it. Watch.
Look, I expect Japan to step up because, we have that kind of relationship, and we step up for Japan. So I expect, I'm not surprised that they would step up. We don't need much. We don't need anything. I mean, honestly, we don't need anything from Japan or from anyone else, but I think it's appropriate that people step up. In the case of Japan, I hear they get more than 90% of their oil through the strait. So that's a big reason to step up.
Joining me now is former Energy Secretary under President Trump in the first term, Dan Brouillette. Great to see you, Dan. Thanks so much for being here. What is your assessment of the response that you've heard from allies, and how significant could their assistance be?
Well, great to be with you, Maria. I think it's remarkable. I mean, we're looking at 5 countries who went literally from a hell no, we're not going to help you, to signing a statement of support yesterday. And I think the president is exactly right to suggest that those who use the strait the most should be responsible for opening it, or at least be partially responsible for opening it. I think it's an incredible piece of diplomacy on the president's part. And I think over the course of the next couple of days, you're going to see a lot of these countries show up with their navies, show up with their assets. I know that England is already down in Tampa working with CENTCOM on planning for some of the activities that are going to occur over the next few days. So I think it's a remarkable piece of diplomacy on the president's part.
Well, what else can the U.S. do right now? We spoke with Scott Bessent, the Treasury Secretary, here yesterday, and he broke a lot of news. In particular, said that they may very well in the coming days unsanction oil that is currently sitting on the water near Iran, and they also may release more oil from the Strategic Petroleum Reserve. Tell me your thoughts in terms of other ideas that could help this administration in getting prices lower and calming this situation.
Well, I think what Scott is referring to in terms of unsanctioning the oil or desanctioning the oil, what that does is send a loud signal to traders. Much of the price increase that we've seen over the course of the last couple of days and weeks have been due to traders pricing in the risk of moving through the Strait of Hormuz. These are not supply problems per se. They're not production problems, I should say. So releasing this oil to allow traders to now legally trade it increases the supply on the marketplace and will reduce or at least mitigate the price increases over the next few weeks. Yeah. That's what Scott is thinking about. I think the other move, the other smart move on the part of the administration was to desanction Venezuelan oil. And I think what you're seeing there is part of a longer-term strategy. The president removed Maduro. He's releasing Venezuela oil, and that's providing an enormous buffer, in addition to the incredible production of the U.S. industry here in the United States, an incredible buffer to these price increases.
Well, it's a great point that you make, because when you look from above 30,000 feet and look at what this president has done in terms of strategy, beginning with Venezuela, now on Iran, it's strengthened the U.S.'s hand significantly against our real #1 adversary, which is China. But we've got also Russia in the backdrop, and we've got new information this morning. The U.S. issuing a general license to temporarily allow the sale of Russian oil on the open market, which was loaded onto a ship on March 12th. The Treasury Secretary told me yesterday about that unsanctioning possibility of the Iranian oil, which is already at sea. Watch this.
There was 130 million barrels of floating storage. In the coming days, we may unsanction the Iranian oil that's on the water. It's about 140 million barrels. That's 10 days to 2 weeks of supply that the Iranians had been pushing out. That would have all gone to China. In essence, we will be using the Iranian barrels against the Iranians to keep the price down for the next 10 or 14 days as we continue this campaign. So we have lots of levers. The U.S. could unilaterally do another SPR release to keep the price down.
In your view, Dan, what would be the trigger to unleash
anything
more
below
from the
1210 level is 330.
Look, I think if there's a real supply shock, if we can't get our hands on barrels, if the world is simply denied access to physical
at
oil,
12:15, I set him to alert when bearish by trying to test the bottom of the
Apart
purple
from that,
box
I would suggest that the other
today.
moves are perhaps even more important.
And
Desanctioning
2/3
the
cycle
move the
turn into
administration made this
3/3
week,
1210
waiving
level
the
breaks,
Jones
but
Act.
it did not
Those
yet.
are the types of tools that I think have a more immediate impact.
Yeah, that's true. Cheryl, I mean, look, when you look at what has taken place here, the price is up in terms of the money that's being made from some of these Gulf nations, but they're in the middle of this disruption, and obviously they're not doing regular business with what's going on right now.
We had Saudi officials come out
Which way do you guys
and
want to
say
see a
that
Baja
oil
Blast?
can hit $180 a barrel,
Original
depending
green
on the time frame of the conflict.
or violet red, volatile red.
But to your point, Dan, I mean, I'm a little curious about this unsanctioning of these vessels, these Iranian vessels. I mean, are we talking about seizing and taking the cash
based on
from
the candles,
vessels so that we get the supply?
cycles
or
so
does
far
that mean that the Iranians
today,
profit from the
market
vessels
is into the
that
end of
are
the day
unsanctioned? Because
bullish,
that would fund the war effort for them.
or
yeah. Well, I think it's important to
bearish.
understand, for instance, in the case of Venezuela, they desanctioned that oil. PDVSA is now allowed to negotiate with others. We can negotiate to develop oil fields in Venezuela, but the money doesn't go to the regime in Venezuela. It goes to an account that's being held in a bank run by the Treasury Department. That's important. I assume that what Scott's going to do here is much the same. Yeah. We will control the money. We will control
we have
the oil.
3 people voting bullish.
The White House told energy executives
4
yesterday
voting
at
bullish,
the White
2
House
people
that they're
voting bearish.
ruling out banning or
I think there may be a
restricting
little
oil
pop here,
as a way
but I
to
think
ease
it's going to
prices.
genuinely
Last year, the U.S. exported
end
nearly
in the purple
$1.5 billion of oil.
So,
Dan, it
I'll vote
cannot
bearish.
be overestimated enough. The
We
fact
have
that
3
today
people.
The U.S.
We have
is
4
energy
people voting
independent,
bullish.
and the president has opened up the capacity
3 people voting
significantly
bearish.
just in his first year in office.
Time is 12:20.
He really has.
The bulls
and I
are
think
pushing
a
into
lot of
3/3
back in
northward.
office. Yeah, exactly. I think a lot
Above
of
the
the
purple
policy foundation
box
that was set in the first Trump
again.
term are paying dividends today.
Yeah.
The president has focused almost, in an incredible way. I can't even overstate how much time he has spent on things like
the
infrastructure,
RSI being
both overseas
neutralized from
and here
being
in the United
bearish and went
States.
slightly
Many
bullish.
have pointed out that
We'll
the
see.
United
MACD
States has
RSI
its
still
own
in
Strait
bullish
of Hormuz, if
territory,
you
but
will.
market is
It's called
cycling at
State
the
of New
roof of
York.
the
We
3/3
can't build
cycle
a
from
pipeline across that
11:30,
state to
and
get
now
natural
time is
gas into places like
12:20.
Boston. So
It's
I think
been
it's
1
important
hour.
that the president continue to focus on that, and he has.
5 people voting bullish based on their opinion on the cycles and candles alone. The market is into the end of the day
sure.
from
I
here.
mean, much of this discussion has been around supply.
5,
and Dan,
2,
you know very well the permitting
4.
process. And what could the U.S. be doing that helps ease some of the permitting and get more energy supply to U.S. consumers?
Well, I think that what the administration has done so far with regard to things like the National Environmental Protection Act, which is commonly known as NEPA, changes to that, allowing people to, yes, have a day in court. If you have an issue, bring it to your court, get your day in court. But, you know, you won't have 10 days in court. You won't have 100 days in court. So, you know, looking at judicial reform, looking at the speed at which these agencies are processing these permits, those are all of the things that we can do, and this president has done in this second term very, very aggressively.
Yeah, it's great. He's done a lot through executive order, has been real effective there, and also included a lot in the big, beautiful bill, by the way.
No cycle confirmation rejection in the 3/3
in the first term of the Trump administration.
bullish neighborhood with the MACD here.
Today. Thank you, sir.
Thank you, Maria.
Dan Brulette. We'll be right back. Stay with us.
Well, let's just actually get to more on the markets here. We'll bring in Keith Lerner, Truist Wealth's Chief Investment Officer. Keith, good to see you here. I mean, obviously, we've been in this mode all month where the market is obviously registering the pressure from higher oil, higher interest rates, and maybe a little bit of a growth slowdown, but really been grudging in its declines. Are we oversold yet? How are you tactically thinking about this market?
Yeah, well, great to be with you. I think, Mike, the way you characterized it before, as far as the market being confused, is probably the right analogy right
Reservoir,
now.
stop
So
baiting
listen,
people
still
and
think
stop
that this
posting
bull
comments
market, or the way the
that
evidence
you
in our
want
world still
other people
suggests
to
the bull
think
market
like
does
you.
deserve
I
the
will mute
benefit
you
of
for
the
1
doubt.
hour if you
But
keep
because it's
doing
been
that.
so orderly,
This
our
is your
indicators
last
are moving,
warning.
towards
You did it
oversold.
3
I
times
mentioned
today.
this before. The percentage of bears in the AAII is at 52%. We're seeing put-to-call ratios move up. Actually, a lot of selling in the SPDRs ETF. So you're getting there, but you haven't had a flush out. Obviously, you don't always get that. But I would even tell you anecdotally, as I'm traveling, talking with advisors and clients.
It's really sad to be cited one side
we still likely have a bit
on
more to
jack
go.
shit
Ultimately,
except
we think it will be a
personal
buying
opinion.
opportunity. But at
No
this point,
reality.
we still
So
think it's
I
more
don't
of a
even
mixed
care
risk
what
reward on a
side,
short-term
but
basis.
I'm not gonna.
You know, there's a lot of commentary about,
You're
on a
baiting
month-to-date
right now, so,
basis.
yeah.
Since the hostility started, the S&P's down, I guess now right around 5%. It's down like 6% from all-time highs. That doesn't seem like enough maybe to account for all that's gone on. On the other hand, we're at levels we first reached over 6 months ago in the S&P 500. The median stock in the S&P is like 16% off of its 52-week high. And arguably, if stocks kept pace with earnings growth,
What if the market does go up $2 and it comes back down? Then,
I just think it's interesting to try to do the counterfactual of where we would have been otherwise.
Yeah, that's a good point. And maybe one good point to what you're bringing up.
It is okay to ask,
into this, at least
I
at
guess,
the S&P
in a logical
500
way,
level,
but
like really extended. We've been moving sideways
it's
since
just,
tech peaked in October. And really, where you saw
every
more
comment
damage, where you're down
is
7,
kinda
8, 9%, is small caps and mid caps, or even some of the areas that just had really moved up, quite a bit ahead of this. I will say the
comments
other
starting
thing
from
as,
market
we're
not
going
doing
through this,
a lot
I mean, the things
intraday,
that we talked about today,
overnight
maybe a little
only.
bit slower
I mean,
economic growth,
very
maybe the
easy to
Fed
say
is
that
on
after
hold
the
for
fact.
longer,
Yeah, it
maybe
is,
a little
but
bit higher
also
oil
this was
prices
intraday.
longer.
I hope you
I
realize
do
this
think
shit
that
was
really
intraday,
upends,
not
to some
overnight.
extent, kind of this broadening trade that was
Overnight
everyone was leaning
into
right now, and
intraday.
even small caps.
So,
I mean, at this point, we're still maintaining some exposure.
fair to
there,
say it's going
but
to
we
hover
also, at
here
this
and
point,
close
think
with the
that maybe,
gamma.
tech
That's
will eventually come back
100%
alive here,
logical.
given some of the uncertainties.
That's
and they've
something that
repriced
smart
by
money
about
might agree
30%
with
from the
too, in
highs.
some sort of way.
As far as
But
evaluation.
to say,
Some of the worst performing sectors this week, consumer
on
staples
what
at the bottom of
technicals,
the pack.
on every
This
single
week down, I
cycle,
think,
when the short-term technicals
4%
are bullish,
as a group,
that
and
just
healthcare.
means,
I mean, these are defensive places that you
you
would
know,
go if the market was really
yeah.
worried about growth.
that's,
so do
you know what I'm
think
saying.
that is mispriced,
You always know what
underpriced?
I'm saying, but it's
Well,
just
I think in some ways, even
to
like
a
consumer
degree,
staples,
you
we
need
have to
to
remember they
understand
were
what
up
you're
double
saying
digits ahead of
to
time. Same
yourself
thing with
mentally
gold. Gold had such a big move ahead of this.
as well.
That's
Because that's
what's
how it was
somewhat
for me.
confusing. But on
Because
the
I
same
was the
token, I
exact
think
same
what's
way.
happened is some of these areas that tend to be more defensive had big run-ups ahead of this and aren't acting that same way.
And the
then
way I
also
looked
some
at
like
everything
staples,
else.
there's probably some concerns
It
around
just
just the
is
inflation impact.
when you
and the ability
fucking
to
think
push those
one
costs
side
higher,
or the other,
especially
because
if we have an economy that
original
is,
story
one
in the
foot on the
world is
gas, one
over
foot on the
spare,
brake right now.
it just becomes
you know,
the other side makes
all
no
these
sense.
expectations as far as an
And
uptick
that
have
is
now receded for
the
the
trap
economy, at
of
least
the market
in the near term.
to be so one-sided
And we were
biased
just obviously
that
talking about a pretty
does not
complex
register that it's
interplay of
temporarily
growth
or
and
short
inflation
form or
when it
medium
comes to what the
term or
Fed is going to
long
do. What are
Because
your expectations now? And I
this is,
guess,
I swear
do
to
you
God,
think
this
the
is like not even
economy
just on
can
options. This is
withstand
literally on life.
a
This
sort
is
of
on
wait-and-see
crypto. This
Fed
is on
along
gas.
with
This is on
oil
gold.
doing what it's
Everything
doing?
in life. I'm not even talking about
Yeah, you know,
market
our
right now, but
house
it's
view
just
is still
everything we
rate
believe
cuts
in
by
life.
the end of the year. Obviously, when
This
the,
is
when
why I
the
say
chairman
it's
of the
very
Fed
hard
says,
to
hey,
just
our
be how it
forecasts
is,
right
dude.
now are
Because that
somewhat
was for me
useless,
too. Like
when the
everything we
Fed
believe in
chairman
life
says that,
originally,
you also have to
it
say
is
it
very
does
hard
depend on
to
what happens with oil in the near
disassociate
term.
from
But
and
I think ultimately,
associate with
to your
reality
other
and
question,
also
I think the market can withstand the Fed on the
irrational.
sidelines. I
So
think
that's
the
all
other
I
thing
mean.
as you kind of step back, I mean, our companies in this economy has
That's all I
been
mean.
battle tested, right? Think about COVID,
I know what you mean,
fastest
but you're
rate hikes
saying
we've
it
seen
in that
since the
moment
80s,
in
the
a
highest
way
inflation
that's
since
like,
the 70s.
oh,
Our companies
so
have
it's
adapted. It does slow
like
things down, but I still
you're.
think the economy and markets ultimately
Let's move on.
still
Time
earn
is
that benefit of the
12:25.
gap. But I think it's going to be a bit of a slog here, and we're all watching the same thing. What are oil prices doing, and what is the 10-year doing to really
Some people are
help?
like, what's going on
What we really
anyways?
need
Let's
is
move on.
stability in those areas for the market to regain its footing.
Yeah, for sure. I mean, hints of that, though we do have the S&P off about 0.75%. Keith, thanks very much. Talk to you again soon.
587.94, lower high. This shit is a lower high. The cycle confirmation lower at 12:05. Looking.
Welcome back. Let's tee up the trading day ahead and bring in our panel. Catherine Rooney-Vera is Chief Market Strategist and economist at StoneX. Larry McDonald is the founder of the Bear Traps Report. And Ed Mills is Washington policy analyst at Raymond James. It's great to have you all here. We got a lot to get through for this Friday morning. Ed Mills, I'm going to start with you. Your assessment of epic fury, what we're seeing in Iran, especially as we've had commentary from both President Trump and Israel's Netanyahu suggesting that perhaps de-escalation is in the works.
QQQ looks bearish right now with the
de-escalation's in the works, Morgan,
but
the base case right now is that this lasts longer than expected. I think most investors that I've talked to thought this was going to wrap up by the end of the month. Now it looks like it is more likely than not to go later. The reasons why I say that is that President Trump has canceled his meeting with Xi. That means it's likely to go beyond the end of this month. The Pentagon is now looking for about $200 billion from Congress. That would suggest this goes on much longer. And now we have that big question, is the United States and Israel going to continue to be aligned? Because with the gas attacks over this last couple of days, as well as comments out of both Netanyahu and Trump, this is going to be a longer-term issue. We need to make sure they are aligned. If you want to have this wrapped up earlier, it goes longer if Israel wants to push it much further.
And before I get into market read-through here, just you mentioned it, the $200 billion request to Congress.
This is a 1 minute timeout.
That's more money than we've spent in Ukraine. To put it into context, is that dead on arrival?
I'd say most likely yes, but ultimately something has to be funded. I think it's going to be very difficult to get any Democratic support, so getting it through the Senate is going to be exceptionally almost impossible. So I think that we might be looking at a second reconciliation bill. That's when we add on some other things. Is there going to be some sort of stimulus for consumers? Are there other Republican priorities?
Still
there may
bearish
be last chance, especially if Republicans lose control of the House in the midterm elections, to get something done and delivered, trying to see if that could improve their odds.
Larry McDonald, you say that 2026 is increasingly looking like a replay of 2022. What do you mean by that, and how much of this is being driven by commodities like oil?
Well, right now, I mean, the coal names are absolutely exploding higher every day. Natural gas equities destroy the Mag 7. Okay, everyone's in the last decade's portfolio. Jensen, you guys, all
these cycles are
this
so
network does
fucking
is talk
tight.
about
This is what it's
NVIDIA.
doing.
The
12.25.
stock's gone nowhere since July. And Jensen, the pump master, has been on the air with press release after press release, tactic after tactic to try to pump up investors on artificial intelligence. But everyone's in the artificial intelligence energy trade.
Jensen has been on the air. Jensen has been on the air.
Okay.
Talking
Catherine, want to get your
nonstop.
thoughts on this, especially as we do see both WTI but particularly Brent moving higher. And every time that happens, stocks have an inverse reaction. We're seeing yields push higher as well. The commentary from central banks, not just the Fed this week, but ECB, BOE, BOJ, others this week was very telling. This idea of the worry about the pickup of inflation and the risks there increasing, but also on the flip side of that, demand destruction as economic growth slows down.
Yeah, I think, as Ed said, it would be great if we had a de-escalation, but even at this point, Morgan, we're expecting to see the impact of this disruption. As the IEA said, this is the most meaningful disruption in energy markets in history. So what I'm looking at, a lot of people are not. Everyone's focused on oil and energy. I'm focused on fertilizer because really a third of seaborne fertilizer passes through the Strait. Why do we care about that? We care about that because we're in the planting season here in the Northern Hemisphere. So by mid-April, we're talking weeks. We're not talking months. By mid-April, the planting season in the Northern Hemisphere is lost. It's not something that can be delayed and planted later. So that means that food prices take a hit. And by my estimates, historically there's a lag.
Time is 12:31. Time is 12:35 in 1 minute.
So I think by the end of this year, we could be seeing food prices
2 minutes.
3 to 4 to 5%
Bears are in
higher.
control.
So this is an impact, a stagflationary impulse that we should expect regardless. Under those circumstances, Morgan, I think it's highly unlikely that the Fed cuts
on the alert room here at 12:25.
Larry, recession risks rising here, or just too soon to tell?
Volume
crazy. Credit risk, if you look at high yield from loans, the private credit problem started in the loan market. There's a lot more software there, right? But now we're spreading into triple C's and high yield. So the probability of recession of 25 versus 26. In 20, the White House is going to negotiate the off-ramp, and we're going to come into a much higher credit crisis. Watch the financials underperforming the S&P by the most probably since 2008.
It's interesting, Ed Mills, because we're getting reports that we could see an AI framework unveiled as soon as today by the administration as we have these conversations about the possibility of credit crisis, AI disruption in the background, and, of course, geopolitical uncertainty more broadly, which we know AI actually dovetails into here as well. So what does that mean in terms of where that policy is headed and how that ripples out to the economy?
Yeah,
my
I
options
think
are going now. I'm up
$1,600 the most important national security event outside of what we've been talking with Iran, and they are getting together the U.S. AI tech stack.
Let's go!
They want to put it in trade
God bless
deals.
America.
They want to support it with financial backing.
God bless
and that
Korea.
is the next actual catalyst for AI from what we've been telling clients here at Raymond James.
Catherine, want to get your thoughts on the AI trade, but also want to get your thoughts on FedEx, which last I checked was shooting 10% higher. And despite all of the uncertainty, which they are factoring in to a certain extent into their outlook, which they raised, they seem pretty, I'll say upbeat, maybe constructive is the word I should use, in terms of the global demand picture.
Absolutely, and the market is pricing in a similarly positive outcome here. The PE is around 21 times right now in the S&P 500. That's 80% above the median valuation at prior oil shocks over the past 40 years. So there's little cushion for earnings disappointment. There's a lot of downside risk here that's currently not priced in. Hedge yourself.
It's your first time on this channel, bro. That's your first comment ever. Move on. I don't care.
I want to dive right into it. And we made up an interesting graphic or chart of the escalation levels. And let's throw that up and let viewers take a look at that so they can follow along. Shall we do that? And I want to ask you about right now, what level of escalation are we at?
LOD test, LOD hope, LOD cycling.
Oh, great. I so appreciate
pivot
that.
Point testing,
Yes. Well, you can see that we've moved
Smart
from
money
the
is saying
limited
fuck
strike.
that.
That was
Hypothetically
the
speaking, they
beginning
don't
of
even
this.
fucking
This
worry about this
idea
shit.
that we were going to knock out a handful of leaders and the regime would collapse like a house of cards.
At the middle of the purple
and
box.
Then the retaliation was Iran's retaliation, and that.
Man said unsubscribe. You weren't even subscribed, bro. That was your first comment on this channel, and that will be your last comment on this channel. Bye bye.
the second stage. And so now where we are is Iran has retaliated, but not
First
in a
comment
minor
of the channel.
way. It's
Stop
lashed
screaming, dude.
back across the region, surprising America and Israel, and also in controlling 20% of the world's
always
oil.
celebrating.
And
I thought you said you're always celebrating when it goes down. I was going to say I'm going up on my money, so my bad.
We aren't crossed into that yet. That's
give a
where
shit
the ground
about
forces
SPY,
really
QQQ.
start to
I
come
care
in.
about core you right
And
now.
that's where things start to get really serious. You see, as much as price, you just showed the price of oil. But if the war stopped today, there's a good chance those prices would come back down maybe in a couple of weeks here. But if we go to the next stage, when we cross into the ground option stage, when we cross into much more destruction that's going to happen with that on the infrastructure itself,
yeah, I'm not leaving
not
this shit. I almost just left.
scaring the ships from going.
Good.
Now we're going to be into that true economic crisis stage. You see, we're going to move up further. And right now,
this is
the
50,
crisis
50
is
at the
temporary.
0.5 Fibonacci or not
But
0.5
if we
at the
go the
midpoint
next
of the purple
stage,
box.
we're risking
They already
what
did a
those
setup,
economists
12,
are
20 to
talking
12, 30,
about,
10 minutes.
which is those oil
It
prices
50
staying
minutes,
up for
50
several
minutes of up.
months.
50
Indeed,
minutes of
Bob,
up, but
listen,
10 minutes
the
of down.
president is sort of being a little cagey about whether or not there are or aren't going to be U.S. boots on the ground. But we've had multiple reports suggesting that is exactly what is being considered right now as surge. And we're talking about in addition to the 31st Marine Expeditionary Unit, right? And the potential tasking for these troops are apparently three. One, they could seize Cargo Island, where 90% of Iran's oil is exported from. Two, they could help secure the Strait of Hormuz by having boots on the ground along Iran's coast. And three, they could go on the hunt for that.
There was hundreds of people before that came that would only type when I made loud noises or when I was happy. It said, hey, why are you so happy? And that was the only thing they wanted to comment. Okay? No offense, but I don't want to have negativity around me anyway, only when it's unnecessary. So it is very, very easy. Right? Man was capping anyway about the unsubscribe, subscribe thing, but it is very easy to just not. God did. Time is 12:40. MACD RSI huge down and now trying to curl off of 1235 MACD RSI, but the candle already tried at 1230. So let's see. If the cycle traps truly everybody, or it traps the bulls like it has been all day long, and they make a new floor by testing the bottom of the purple box. Let's see. Time is 12:40. 12:30 went higher into 12:40 now. 10 minutes. 0 DT cycling, trapping the 3/3 bears off of 12:30 to 12:30 for now, and cycling, and the bears are coming to eat the honey. That the family left at the house. Like the story, and nature persists. Bears are trying. In the 3/3 cycle, bears are here. In the 3/3 cycle. It's a whole new cycle, actually. Bearish Bearish control. Nothing looks fucking bullish. Nothing. I'm literally going around the market. Nothing looks fucking bullish. Nvidia popped up, dropped. Tesla popped up, dropped. Google popped up, dropped. Apple popped up, dropped. Koryu popped up, dropped. QQQ popped up, dropped. SPY popped up, dropped. With massive volume pushing lower. And massive volume pushing up and hovering up there. The RSI is now in bear territory with things a little bit oversold, but at the middle of the purple box. So some may see this shit as 50-50, but I kind of see it as 60-40. Bearish. Maybe even fucking 70-30 bearish because of QQQ, but I don't know. MACD could revert here too and create a cycle for 20 minutes or an hour or two, possible. So, yeah.
Google's looking to take advantage of this battle between Anthropic and the Pentagon, even as their own employees side with Anthropic in the battle against the Department of Defense. Our Mackenzie Sagalos has that story in today's Tech Check. Morning, Mac.
Hey, Carl. So you've got Anthropic heading to court with the Pentagon on Tuesday, OpenAI taking heat for rushing into a defense deal. So really, the biggest beneficiary so far may actually be Google, which has worked hard to stay out of the spotlight since the Iran war began. Now, BI reporting that in a January DeepMind town hall, weeks before Anthropic's Pentagon battle, CEO Demis Hassabis told staff he was very comfortable pushing deeper into national security work. Now, by that point, Google had already updated its AI principles to remove a commitment not to develop weapons or surveillance technology.
In the index right now.
And then separately, the Times reported that Google Cloud CEO Thomas Kurian met with Emil Michael, the Pentagon official in charge of selecting AI tools, back on February 26th. That's the same day that Anthropic's talks collapsed. So Kurian, he was reportedly there to pitch an expanded partnership, with the message being Google can deliver the same caliber AI tools without all this noise. Now, Google, it's not responding to requests for comment on either of these meetings, but since then, Google has landed a new deal to deploy AI agents across the Pentagon's unclassified networks. And remember, this is a company that abandoned military AI after employees revolted over Project Maven back in 2018, and now they're positioned to become one of the government's primary AI providers. But this push with the Pentagon risks reigniting old internal fault lines at the company. Google's own researchers, including Chief Scientist Jeff Dean, have filed briefs backing Anthropic's lawsuit against the very department that Google is now reportedly actively courting. Guys?
I mean, does Google have a problem with its employees? Why does it do so many things that its employees aren't on board with? Does it just need to be, does management need to be more clear with the goals and the purpose of what's going on, like a Palantir, Alex Karp, for instance, where they know what they're getting into?
What I will say is that the message that the DeepMind team management was sending home in January reiterated a point they had made repeatedly at these internal all-hands over the course of the last year, basically ever since they adjusted their AI principles and we saw a change of leadership at the White House. But broadly speaking, the employees at DeepMind are not alone. You also saw a lot of OpenAI staff commit to these letters protesting Anthropic's designation as a supply chain risk, really coming to their defense. It was actually quite a departure to see
$1,640. I'm done.
Microsoft filing that amicus brief when arguably they have a lot more to lose. They have a lot of government contracts, but you see that same kind of sentiment across the Bay about what Anthropic's going through right now among the employee base.
Companies have three basic constituencies: their customers, their shareholders, and their employees. And it's just a matter of how they prioritize those and how that changes over time, as in the case of Google. Mac, pretty interesting story.
I'm fucking done. I'm gonna watch for now. I might do something on SPY and QQQ today, but I'm watching for now. Sorry about that. Yay! I had a good day yesterday. I was up 2.6K. 2.6K yesterday. Yay! God bless Korea. God bless Korea. God bless Korea. Whatever. God bless Korea. Yay. Wow, that shit was scary. I thought that we were gonna go gap fill. That shit was so scary. Oh my god. So scary. Yay. Enter that market open. Great. Hi. Yeah, I'm feeling FOMO on fucking Core U now, but it's fine. I think I got filled somewhere in this candle. I filled like $40 above where I wanted to, and it just filled anyway. Yeah, fuck. Core U crazy. And that thing was worth fucking $8,000. $4,000 per contract. Scary shit.
You've just heard today's bilateral meeting between President Trump and Japan's Prime Minister Takaichi. Her visit comes after the commander-in-chief called out Tokyo for refusing to help escort ships through the Strait of Hormuz. Now, Japan and allies have since said they'd be ready to help. When asked if he was satisfied with the level of Japan's support on Iran,
I don't want to miss out on Core U. Yay.
He also said
I don't feel FOMO on Core U anymore.
Leaders are gone. They're looking for new leaders again. Hello, everyone. This is Outnumbered. I'm Emily Campagno here with my co-hosts, Kaylee McEnany and Harris Faulkner. And also joining us today, Kennedy, host of the Kennedy Saves the World podcast, and Kevin O'Leary, chairman of O'Leary Ventures. I come to you first because we saw a lot going on there, including, I think, a quip that was heard around the world when there was a question by a Japanese reporter that said essentially, why, President Trump, did you not give more notice to Iran before the strikes? With him responding, you didn't give us notice before Pearl Harbor.
Hold on. This shit looks so comedy.
However, when he talked about the investment the United States has made in Japan, 45,000 troops there currently, he said a lot of money that we've invested, sort of underscoring the depths and the history of the relationship, notwithstanding Pearl Harbor.
Yes, I would say regarding these open venue, watch the sausage being made, White House meetings with world leaders. This is not the first time this has happened. Some people love it. But you see policy being made right there. And it's very transparent. It's a little disturbing when you get comments like that reach so far back into history. However, end of story on policy. Here are the numbers. I'm a numbers guy, and I'm on outnumbered, so let's deal with some numbers. About 70% of the oil that services the Japanese economy is one way or another affected by this Strait of Hormuz. And so, I mean, let's put it on the table. They're going to have to come there and provide some kind of support. I don't know what the price is going to be. I'm guessing when I say this, but I think I'm right. If you're going to get for every ship. Remember, the strait has its narrowest part 2 miles wide. That's where the action happens when there's attacks and all that. And for the last 10 years, every 9 months, the Houthis or another proxy, Iran, would go blow something up, keep the insurance rates high. This whole thing is about stabilizing that, because you don't have that problem with the Panama Canal or any other. The Suez Canal, that's already been done. The world has figured that out. We haven't figured this one out. I call it $4 billion a month to keep this thing insured and properly monitored and safe. Who's going to pay? Now, NATO is a Western phenomenon built after the Second World War to keep the communists at the time from encroaching further west. They're not really grooving on the Middle East that much, but now Germany particularly has to start thinking about it. And I think what this administration is calling out, saying if it's $4 billion, let's say it was $4 billion, everybody has to step on a prorated
Every
basis.
fucking entry in this month has been fucking so perfect. My God, SPX, QQQ, NVIDIA, my God.
Never happened before.
My God.
By the time this is over, forget about the war is horrible.
I'm turning that off since people are posting out because of the live stream.
Where people pay.
My God.
Insurance. That's what this is.
Yeah, and on the heels, Kaylee, of the president suspending the Jones Act temporarily, with all eyes on the Strait of Hormuz and the continued efficacy of it.
That's right. Look, I agree with you. This is the sausage being made. We saw the Zelensky meeting, and we see these moments in the Oval Office. But let me add to that, Kevin. The real sausage is made in the meetings that are to come. And I've been in some of those meetings in the cabinet room with the president. I have watched him be extremely harsh and move foreign leaders by his positions. And I think that's what's going to happen with Takaichi today. They are allies indeed. But Takaichi has said that it is legally difficult to have a naval operation in the Strait of Hormuz. You're going to have the president behind the scenes twisting the screws, trying to force Japan to step up. And he was complimentary. He said they are stepping up to the plate, unlike NATO. I am very interested in this, though. Trey Yingst has reported that during the last Iranian missile barrage, the oil refinery in Haifa was targeted. Why am I interested in that? President Trump put it out of Truth Social last night, and he said that if Iran attacks Qatar in their LNG facility, he said we will blow up the entirety of the South Pars gas field. So President Trump has warned Iran, step back from these attacks on energy, specifically in Qatar. What happens now? Now that Iran is continuing these attacks and now attacking an Israeli energy facility, does this escalate it? I wish someone in the Oval Office would have asked him.
All right, so Harris, we've heard him telling them step back. He's telling Japan step up on defending the Strait of Hormuz. Let's just play that clip for listeners right now, and we'll get your reaction on the other side.
Oh my God. What is this? There's a major divergence right now. What is this?
You know, we have that kind of relationship. And
LOD did not break on QQQ here.
45,000 soldiers in Japan. We have we spend a lot of money on Japan. So
QQQ went lower than SPY.
Kind of relationship.
SPY did not.
I'm
That's
not
crazy. Maybe IWM is actually bouncing or something.
We don't need much. We don't need anything.
It doesn't even look that strong. This is insane.
Yeah, I think he means it. You know who the real loser is on that reinsurance policy
SPY does not like QQQ. They may create a diversion. They're about to create a divergence at the floor.
Whole scenario here too. The UK is in a sticky wicket. I mean,
they're
all
about to
of
create a divergence at the
and
floor.
what they just hit, the Bazan facility that Kaylee was just talking about, is the main refinery in Israel and supplies more than half of the country's diesel, gasoline, and kerosene. So I don't know how we got to the point where they're going back and forth with energy. Trump said cut it out. Does he then ratchet this up and hit what he said he was going to hit? And that makes it very expensive to sustain the oil infrastructure once this whole thing is over, which is what President Trump was trying to avoid. He didn't want to leave them worse off as the Iranian people because of what we have done. I did think it was important, and, you know, as we were watching at the beginning of this, the handshake, she reached out. There was certainly some diplomacy and gamemanship on her wanting to first talk in English, and the president offered, we have an interpreter, don't be shy about using that, you know, he's a good guy, that sort of thing. And then, but she was very meticulous about one line, interpret. You know, sometimes we'll sit for a bit. She wanted her words to be loud and clear, and here's what she started with. I brought some specific proposals to calm down the oil markets. I come back to Kevin. What could that be other than helping to secure the Strait of Hormuz?
She doesn't have to send ships. She has no oil, so she can't flood the market and drop the price down. They have zero oil. So I think what she's saying maybe, and I hope this is what it's going to be, because it'll be, as you suggested earlier in a back room, I will give X billion per month on my prorated amount to
It's insane how long it is in this range. It's been the whole entire day. It's been like 3 hours now.
You provide me with the technology to do that, and we'll pay, we'll rent it from you each month. Other countries can do that too, and she can give that covenant right in her own government. She can do that. Even if she doesn't have the right to send a warship into that zone.
1 p.m.
Japanese ships are
3 hours.
We already have the technology within
3 hour range
in that region right now. You just got to pay for it.
Coming back into
Kennedy, you've been asking such great questions this entire time, and with your economic and geopolitical mind, what questions should we be asking? For everyone listening and watching all of this and in this conversation, what are the questions we should be asking?
What does this do for nuclear reactors coming online? Because the ramifications long term and the disturbance it looks like Iran is trying to put in place will be the kind that, you know,
I lost out on
former allies
$850.
and people who rely on oil from the Middle
Actually,
East
that's a
will
lie.
be
I
feeling
lost out on
for
$480.
years. And that's what
I was
they're
gonna
literally
feel FOMO.
going scorched earth.
It's all good. I lost on
They are
$480.
goading the
It's all
U.S. and
good.
our
Core
allies
it went a
into
little bit lower,
bombing
so.
their oil fields, which is going to
Down here would
totally
have been
disrupt the
$480
global
more.
oil
I left
market, and
somewhere
that
here.
is what they are
So I was
intentionally
scared.
doing. So I look at that and I think, okay, well, how does the world respond? Because places like Germany and a lot of countries in Western Europe have taken their nuclear reactors offline. And, you know, for those of us who have gone, well, this is cheap and abundant energy, we've known that was a foolish decision for a long time. So I think this is going to have a direct impact on the kind of energy policy that
There's
actually
a 1 minute
works.
gap on
And it's not just going to be windmills and solar and all sorts of imaginary theoretical farms that don't power economies and continents.
And Q 3 Mile Island. Right? Fox went there exclusively. That's exactly why you take a look at a facility like that and some of the others that were offline due to the pressure of we're going to spend all the government's money on wind projects and solar projects. 3 Mile Island, Pennsylvania. You want to go solar? They get fewer days of sun a year than they get cold days at this point. I mean, that's not going to work. And so that's why you see that put back with nuclear energy. I think you're absolutely right. The game's going to change.
Hey everyone, I'm Emily Campagno. Catch me and my co-hosts Harris Faulkner and Kaylee McEnany on Outnumbered every weekday at 12 p.m. Eastern, or set your DVR. Also, don't
Market chopping at the box again, deciding before it pops or drops again. What a great week. This entire fucking week I've been green every single day. That's kind of nuts. March 16th, 17th, 18th, 19th, and now 20th. Wow. This is actually nuts. The bulls are trying now. The core you're recovering here as well. Koryu. You know why it's called Koryu? This is what I think, right? In ancient times, like maybe 300, 400 years ago, maybe 600, Korea was called Koryu or something. Because I think it was called like Koryu or something like that. G-O-R-U-Y. And it literally sounds like Koryu every time I say it. Some bullshit I'm talking about right now, but honestly, yeah. Used to read comic books and shit when my mom used to buy for me when I was a kid in Korea. Oh my god, the bulls are here. Bulls are here. Bullish, 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 bullish. Trying. Let's see. Bullish cycle trying. You can chop here. I don't know. It could either chop at the top of the purple box or it could chop inside the purple box.
Let's now get some insights on the news shaping the overall markets. And for that, we welcome in Matthew Tuttle, CEO and CIO of Tuttle Capital Management. So first and foremost, thank you so much for being with us on this Friday. As we
I don't know about
assess these
anything
overall
higher,
markets,
but at the minimum, I think it's going to chop here now.
Right now, oil is really fueling these inflationary fears, and of course could change this year's rate path. And so what signs at this point would tell you that stagflation, that risk could only be temporary, perhaps?
We need this war to end. You know, as long as this is going on, oil's going to stay elevated. That's going to keep pressure on rates to stay elevated. That's going to tie the Fed's hands. And that's going to get people freaked out about the possibility of stagflation, which makes sense. You know, I mean, a lot of people weren't around back when we had it. It's not a great place to be. That's going to keep pressure on the market. You saw the S&P break the 200-day moving average yesterday. So, you know, we really just need this to end.
I mean, absolutely. And so as long as this war does continue, you do expect some limited upside for the market, I think, which is a reasonable consensus estimate right now. But so what would be the clear catalyst that could change that view and allows equities to break higher? Or are you just saying it's really the end of the war?
Yeah, I mean, we need
I
oil
guess it's
prices to come down.
reloading.
You know, as long as oil is kicking around $100 a barrel, and there's the risk of some event that could bring it up even more, we're going to see pressure on equity prices. You know, we're going to have up days. I mean, we're not going to go down in a
Best Hurricanes. You private messaged me. Hi, Jeff. This is Best Hurricanes. I think you were going to message me something and then you stopped yourself from messaging. But yeah. One. 1255 rejection to 1. 1 p.m. rejection to 1. I'll go range on QQQ. Guys, the alert room is $270 for 30 days. If anybody wants to join, we have 2 spots left. It is only for people that want to join. That is at their point in their life that wants to join something like that. So nothing has changed. I do what I do live every day. People have been here for a couple of days, and I guess you gotta find out. Reality never changes, though. Ugh. Candle traders are done in this fucking world. I think, in my opinion, hypothetically speaking, the way they're cycling. The way they're doing things. Yeah. Thank you so much, folks. We have 65 likes. Please hit the like button if you have not already. Thank you so much for hitting the like button today and for being here. If you have not hit the like button, you're a part of 20. Please hit the like button. I want to watch this video on SanDisk and Palantir talking about my boy KG.
Etc. It has just exploded. I mean, I don't know if any viewers have priced out a new laptop lately or a new computer. When you go to that little memory upgrade button, you know, you better sit down when you see that. And that's because
it's fine. Market paying for my computer anyway. Market paying for my RAM.
So those of you, I'm sure a lot of you are familiar with AI, but it's a very RAM intensive
market made my RAM
software that eats it all up. I'm actually running OpenClaw. I've talked about that a lot. I'm a big fan, but I'm using a Mac Mini and a Mac Studio because of the memory architecture that Apple uses. You've got not only the data centers, but you're seeing tons of people that are deploying OpenClaws all across the world. I mean, China has massive growth. So that's basically creating constraints on the supply of the RAM, which keeps pushing the prices higher. You, your previous guest, and you mentioned, Micron's blowout earnings play. I mean, Micron's in the similar sector. So when I see a sideways stock like SanDisk has been, I just think that it's kind of overall market, forces kind of holding this down. But I think that the story's going to play out in the future because, again, as I mentioned, I kind of like, buy a stick of RAM and put it in your safe with your gold coins because the value of it is just going through the roof.
Yeah, I mean, absolutely. I know, again, today seeing some weakness, but still, I mean, pacing to see still some pretty phenomenal gains on the week, which is frankly amazing. And so, KG, as we do assess now the technicals here in SanDisk, what are you watching?
Well, I might have to eat my words here in about 5 minutes because it looks like something's hitting the
There's
cake.
not a lot of levels on VIX.
Look, I mean, the
Chris.
stock is making higher highs, higher lows.
So you would say the
it's been
VIX
a
is
phenomenal
rejecting, it doesn't even
especially on the options front here, and you continue to see these consolidation patterns and then break out higher. And I think that's exactly what Tim's looking at right now as the stock gets close to that $800 level. Right now,
I thought you were saying like
kind of
rejecting like
caution on
certain
a couple
level.
of things.
Like I used to watch the
you are
VIX
starting
like
to see
this
the
too.
intraday volatility ramp up really aggressively. Yesterday we saw an 11% move to the upside. Today you're seeing around a 5% move to the downside. That was around 6.5%.
Doesn't work on the VIX at all.
About
I mean,
a
it does
couple of minutes
sometimes,
ago
but like
here. You
most
get a
of
little
the
bit
time,
cautious that if we
this
start
shit
seeing
actually
a
does
ramp
work.
up in
The
volume at these
technical
current
analysis, but like
levels
the
and that type of
algorithms doesn't even
volatility,
work.
that could
There's
be
like
a
no
signal
support
on the technical front.
because the VIX goes in and out, fucking just
reversal
however
and
it wants.
aggressive
Like
reversal
literally,
can be
there's no
taking
support.
place. Right now, we
Other than
cannot
just, like, higher
categorize
time
the
frame
stock
shit.
as in that situation, but it's just something to mention here. You also have the RSI making lower highs, so
I don't know what happened to
price
my
momentum has waned here a tad bit. But if you kind of look at the price action, it's also something that's a little bit more abnormal. So we may have to take that one with a grain of salt. That 12 EMA is above the 26 EMA, above the 0 line. That's still bullish. You are seeing that 12 EMA.
And that's the shit I'm talking about. I said in the alert room they can test the purple box today, and that's the shit I'm talking about. Holy fuck. Holy fuck. Oh my god. Ugh. That's crazy. Wow. Okay. That's the fucking finale. And wiped it out up top. That's fucking crazy. That is so. What the? In one candle, though, that is so nasty with it. What the? Huh? LOD broke. Look, there's a divergence on QQQ now. There's a fucking divergence. I literally said they might do this shit earlier, but they didn't do it earlier, and they did it in 1 fucking minute. That is so nasty. LOD divergence. Right now, the bears are hoping for this LOD divergence to clear. The bulls are hoping it bounces. They could trap everybody. They could burn everything somehow. There's so much time, and the 0 DT comes into play. So there's a divergence that, oh my god, that candle crazy on SPY. There's a divergence at the flooring, is what we're seeing right now. And everybody is panicking and thinking everything on this candle, basically, in the last 2 minutes. Oh my god. Oh my god. One single candle at 330. This is how they play in the 330. This is how they play in the 330. Oh my god. Alfonso said, Goku saved my ass. Holy shit, really? I said in the alert room somewhere here, or let me see when. As it was bouncing. Right? Okay, no, I said that shit earlier. I think, yeah, tested the purple box possible at 12:15. 12:15 was here. So, still crazy. Man, I said if 12:10 level breaks, they may go lower at literally 12:17. And then cycle. And then at 12:30, 12:27, 12:10, 12:10 break. Oh my god, excuse me, fuck. But I was done anyway. Holy crap. A lot of people come and go in the alert room too. Nobody's heard from the alert room because I think everyone's at work. Yeah. We have one guy sleeping across the world right now. Love life. Time is 1:10, and they're bouncing off the LOD divergence, and they're bear trapping everybody just like they bull trapped too. They're bear trapping everybody just like they bull trapped on fucking 3 minutes here, right? 10:05, 10:10. Ain't no way. If I see this shit rip up somehow, ain't no way. Somehow chop here is what I think, but ain't no way. Yo, what are these candles, bro? 110, 0 DT, no fucking joke today. Quadruple witching, I guess. This is what we see, quadruple witch. The motherfucking witches from the west, the east, and the south, and the north are all here.
% on the session today.
Yeah, listen, and KG probably knows this.
Quadruple witching,
this is
folks.
an idea that I just keep coming back to now.
And President Trump might be going live actually. Can somebody check if he's live?
When it first hit my radar. I probably should get a new shirt that's like Palantir #1 fanboy. I admit I might be a little emotionally invested in this one, but at the same time, I see what is happening in the modern battlefield, in the evolution of warfare.
Nothing.
And I see these numbers being thrown down.
We did the presidential live stream like 2 hours earlier today.
$200 billion and the military budget of like $1 trillion and $2 trillion and like.
Thank you so much, the 4 of you that just hit the like button. We have 94 people here, folks. The 15, 20 of you that is here that have not hit the like button, please hit the like button.
When you think
so hard to get the like up. I'm at 70. If you all hit the like button right now, I will surpass 90.
I'm sure it's instrumental in the Middle East. They just don't tell us until the operations are ending. And you look at, just a big admirer of Alex Karp, but the biggest theme here is that this stock was one of the biggest
chopping inside the purple box.
Years. Sure, it's pulled back, but I just love this.
Somehow very, very, very violent cycles with 0 DTs are almost burning bulls and bears, and they're almost
kind of
new money printing somehow, but cycling very,
during
very
the
super
operations.
fast.
But I could see, let's hope, Iran.
105 was the bottom of the purple box, and now
down.
we went to the top of the purple box in 3 minutes, and now we're in the middle.
That Palantir was doing there, and then all of a sudden we're talking new highs again after the run it's been on the last couple of years.
Yeah, and I mean, to that point, it has been one of the most phenomenal outperformers over more of a long-term basis. And as we've said many times, Alex Karp is definitely an earnings call always worth tuning into as he gives such a great read and just a really great outlook, frankly. Every time I hear an earnings call from them, it does even give me encouragement just based on some of their forward-looking expectations. But KG, last but not least, walk us through what you're seeing here from a technical standpoint.
If they do it again to burn the baby?
Yeah, this one's kind of simple. This time last year, what did we see the stock do? We hit that $66 level, and we were making higher highs as well as higher lows ever since. Kind of peaked out at this $207.52 level, and we did see the stock starting to make lower highs as well as lower lows if you're looking at the overall trend. But this chart here kind of doesn't tell the full story. It was only a 50% retracement from those lows of $66 to those highs and coming back down to 120 and testing. And that 50% retracement did actually hold, and you are seeing the stock move higher. It's been able to recover the 20-day moving average, recover the 50-day moving average. And here's the big key sign here that I think is very important. Given the fact that we are seeing a lot of the volatility in the S&P 500 really kind of collapse here over the last couple of weeks, especially in technology, this stock has not moved. In fact, it's still consolidating and potentially maybe basing out to break out to the upside. So I'm right there with Tim. Look at that 200-day moving average as your first area of resistance, 163.4, and then above that, you're looking at around 175, 180. This one looks a little bit more bullish than bearish to me.
I mean, again, seeing some
just based on the technicals.
And again, seeing some of that weakness today, and of course, not immune from some of the broad software downturn that we've seen so far this year. So really appreciate it to you both. Tim Bowen, Chief Technical Trader at StocksToTrade.com, and Kevin Green, of course, Senior Markets Correspondent for the network. Thank you both for being here.
Five top picks is Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Victoria, great to have you on.
It's a pleasure to be here.
All right, so let's get right into it with your picks. First up is a healthcare play, Gilead. The stock has been working up 15% year to date.
Also getting a return on to have some continued struggles. There's a lot 29 times, right? But you're also getting a return.
Yeah, we're not watching this shithole. Sorry, I can't. My mind literally can't. We are not watching this shithole right now. Oh my god. What the fuck are they talking about, bro? Every fucking day they're posting this shit. Like, what the fuck? Not even just... I would get it if it's one day out of the week, but like... Come on with the fucking... Same title. Are you kidding me? Put some fucking effort in at the minimum. Put some fucking effort in at the minimum is what I'm trying to say.
Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Jim Ferrioli, who's the Director of Crypto Research and Strategy, Schwab Center for Financial Research. Jim, it's so nice to have you on the show. It's been a really interesting time for Bitcoin. You know, I wanted to get your thoughts on sort of the more recent price action where we managed to recoup that 70,000 mark. We got up to sort of the mid-70s. Even on days when we were risk-off in equities, Bitcoin continued to outperform. I'm just wondering what you see that's being driven by.
Hey, Sam, good morning. So recently, Bitcoin's been a bit more resilient while some of the rest of the markets kind of come under pressure. Most of that is really driven by the fact that Bitcoin and the broader crypto market has gone through this massive bear market that started in October of last year. It looks like the market may have bottomed in early February. If we look at historical crypto bear markets, which are sometimes referred to as crypto winters, they've typically bottomed near Bitcoin's 200-week moving average, which was also near Bitcoin's cost of production at $60,000. So we reached that level in early February, and we've bounced since then. The market's recovered to about $70,000 over the past month and a half. A lot of that's been organic. We're seeing inflows from ETFs again. We're seeing digital natives of all different sizes starting to invest. Options positioning is starting to improve. And we're seeing more on-chain activity. And so again, it's a healthy rebound, and that signals that the bottom may be in. What we saw more recently, though, is in perpetual futures markets, there's been more demand for shorts relative to longs. And the way that we measure that is looking at funding rates. Funding rates are the premiums that you pay to keep your contract live. And so again, seeing that there's more demand on the short side, I tend to take a contrarian take there. And that tells me the market's got, if the futures market has gotten too negative on itself. Last week, we actually published a report saying that we thought that there was risk for these shorts to be liquidated. We're seeing demand come back to the market, positioning's improving on chain. We're seeing kind of your traditional digital natives buying, you're seeing ETFs buying. And so there was kind of an offside positioning that in the futures market. So we made the case that there could have been liquidations in these short contracts, which we did see in the beginning of the week, and that's really what pushed Bitcoin up to $76,000. So it's been a healthy recalibration to the market. We're not very bullish here, but it appears the bottom may be in.
Another driver that I noticed over the last week, and this is according to reports and actually some of the people that I was speaking to, was capital flight out of the Middle East, given the situation, particularly in the UAE. Is that part of the story? How much are you looking at that? I mean, what do you make of it?
We've seen a rotation from other assets. In the fall, there was a big trade in gold and silver and various precious metals, which really led to a strong momentum move in those markets. And Bitcoin largely sat this out. You know, amid this time, there was this debate going as to whether Bitcoin had failed as a store of value and a hedge against debasement while other precious metals rallied. We've maintained the position that Bitcoin has not failed, and the activity in those markets was really driven by momentum as opposed to fundamentals. And so what we're seeing as, you know, maybe investors in the Middle East are selling these assets that have performed well over the past couple of weeks, you're getting a rotation into an area of the market that's been depressed. And I think that's a normal occurrence in any type of a capital rotation. You typically shift out of your winners and into a cheaper, more attractive area of the market at that time.
So we've still got a lack of progress or clarity on the Clarity Act. I'm just wondering what updates are you tracking? I know that you've highlighted the CFTC and the SEC issuing some interpretation of how federal securities laws apply to certain crypto assets. Could you walk us through that development?
The Clarity Act continues to be stalled in the Senate, but earlier this week, the SEC and CFTC did issue new guidance on crypto regulation. So what they did is they took the existing federal laws and interpreted how that should apply to cryptocurrencies. And so, in lieu of any progress in Congress, this is certainly a positive. Obviously, without these changes in the law, future administrations could view them in a different light. But ultimately, what they did is they changed the focus from the token itself to the transaction. And so what is the intent in purchasing a cryptocurrency? And with that, they created a taxonomy of different types of cryptocurrency transactions. Ultimately, the majority of the crypto market was determined to, under this new framework, to not fall into the securities category. So the different taxonomies include digital commodities. These are based on supply and demand.
This shit should have went bullish.
Their value really derives from functionality of a blockchain network. Digital collectibles such as non-fungible tokens and other artwork. Digital tools. And utility tokens, so again, a token that allows you to interact with a network. And then finally, payment stablecoins, which already have a legal framework that falls under the Genius Act that was passed last year. What
Bearish consolidation? That's fucking crazy.
Is considered a digital security?
Not really.
Is any token
I've been saying this shit on the market update video since Sunday.
There's an ongoing expectation of profits tied to the issuer. So if you're issuing something that there's going to be a profit accrual to the holder of the token, that is considered a security. But everything else is considered digital
consolidation if I've ever seen it in my life. But I have.
Thanks so much for getting us across Bitcoin this morning and the broader crypto space. Really appreciate your time. Have a wonderful weekend. We'll catch you next time. Jim Farioli there, Director of Crypto Research and Strategy.
Schwab Center for Finance. When I made 45K and went from red to green in the market last year.
Reportedly invoked emergency powers in the war with Iran. Trump has reportedly invoked emergency.
Last year, same shit happened on crypto. Same shit happened on everything, actually. Nobody believed it from the top on Bitcoin, man.
Trump has reportedly invoked emergency powers in the war with Iran.
How it is.
Good morning, Lauren. What does that mean?
So the U.S. can sell weapons and missiles to Saudi Arabia, Kuwait, and the UAE now, rather than waiting for that mandatory 30-day congressional review process. This weapons package is worth a reported $23 billion. It will ensure our Arab allies have strong defenses against Iran. As President Trump says, well, the U.S. and Israeli forces have dismantled their military structure.
It's going to be over with pretty soon. We've obliterated their Navy. We've obliterated their just about everything there is to obliterate, including leadership. Their Navy's gone, their Air Force is gone, their anti-aircraft equipment is gone. We're flying wherever we want, Pete. We have nobody even shooting at us. They have, I mean, and as you know, their leadership is gone. Their leaders are gone. They picked new leaders, they're gone. They picked new leaders, they're gone. And now they're looking for new leaders again.
So when will the war be over? Maybe when oil flows freely through the Strait of Hormuz. Axios this morning says President Trump, quote, is considering plans to occupy or blockade Iran's Karg Island to pressure Iran to reopen the strait. And that move could put U.S. troops, A, on the ground, and B, directly in the line of fire, according to Axios. So what is Karg Island? It's a tiny piece of land, about the third of Manhattan, but it is a cash cow for the country and a major source of revenue for the IRGC. I just spoke with an analyst. He says, you occupy Karg, Iran will fight to the death for it. Oil will hit $200 a barrel.
Meanwhile, Energy Secretary Chris Wright says the U.S. unsanctioning Iranian oil sitting on those tankers at sea will be absorbed by the market over the next month to 45 days, and it will start to arrive in 3 to 4 days.
All right, we'll take it. Thanks, Lauren. Check futures, please. I see a little bit of Reddit. Not that much. The Dow's off 100. Nasdaq's down 90. S&P is down 18 points. With us this morning to cover the market, Josh Schaefer. All right, both the Dow and the Nasdaq, they are nearing correction territory. And I see JP Morgan putting out an official S&P forecast. They've lowered it. They were saying 7,500. Now they're saying 7,200. They're worried about a recession. Yeah. Are you worried about a recession?
I don't think I'm worried about a recession yet, Stu, right? And I think what's important to point out with that target, 7,200, that's still 10% higher from where we are, right? And I think once you were to start, if we were to start really talking about a recession, sort of this conflict really extending to the point that it's going to weigh on the economy to that level, we'd probably be talking about the S&P 500 going lower from here, right? You're sitting at about 6,600. So I think right now what markets are starting to price in is, okay, maybe the conflict was a little bit longer than we initially hoped, but they still see a path at the end of a light at the end of the tunnel here, right? And so I think that's an important takeaway too, is stocks probably can still go higher for the rest of the year if the conflict ends soon.
Okay, but you think we've hit bottom already?
I don't think you've hit bottom until you know that you've hit top on oil. And Lauren was just talking about a lot of other scenarios where oil could still continuously move higher, right? So I think you need a top in oil in order to have a bottom in this market. To give you sort of a technical indicator, we're watching at the Investor Circle. Our senior technical analyst is looking at 6,500 on the S&P 500, so not too much lower than here. There's a lot of support there. Maybe you get a triple bottom in the index there, and you get a bounce up. But again, Stu, I think really it's oil has been driving things. You need missiles to stop flying, right? Headlines aren't working anymore in terms of driving oil prices. You need the Strait of Hormuz to reopen, and you need missiles to stop flying.
So my best indicator is the price of oil.
Yeah.
Follow that, and you can follow the market.
Yes.
Got it. Josh, thanks very much indeed. We'll be watching you on the Barron's Roundtable. But wait, you've got to stay there. I've got one more issue for you.
Yeah, sure.
All right. A new poll, and it's from CBS. It found that 80% of voters across party lines were in favor of showing a photo ID for voting. Got it. Liz Peake is with me. What do you think to this? We could get voter ID, or get it passed, if we keep mail-in balloting. That seems to be the main sticking point, mail-in balloting. If we keep it, do you think we get a deal and get voter ID?
Yeah, Stuart, I think this is one of these occasions where everybody in the country seems to want voter ID across all ages, all income groups, all races. Everybody is, and political parties. Everyone favors voter ID. So frankly, I think voters are going to be unbelievably unhappy if a Republican-led Senate and House don't actually get this done. Yes, there are problems with the bill, the Save America Act, which is there are other requirements in that act that have been added in. I frankly have always favored just putting voter ID on the table. Let Democrats vote against it if they want to. That will really lose favor with the American public, because this poll is
I'm about to order some DoorDash
that have certified over and over again that this is something that voters want.
Yes, it really is an 80-20 issue. Simplify it and you get it done. Next one, Liz. 3 progressive Democrats, backed by the Squad, have been defeated in Illinois primary races. They all lost to moderates. What does that mean for the left wing of the Democratic Party? It's a defeat for them, isn't it?
It is absolutely a defeat for them, and really good news for the sort of common sense politics that we would like to see rule this country, Stuart. The Squad has outsized influence because it gets a lot of money from organizations like that of George Soros and others that have backed them, but they do not represent even the majority of Democrats. It's about 15% of Democrats that identify as progressive. Obviously, that's a very small part of the country. What's really important here is going into the midterms, there are progressive candidates challenging a lot of moderate incumbents and also challenging those who would run in an open seat. So Democrats have to be pretty careful here about who they nominate, because a lot of Americans don't agree with their anti-Israel, anti-Semitic positions, not to mention their very weak positions on law and order and other issues that are really mainstream. I mean, this group as I say, has outsized influence because they have a lot of charismatic leaders like Bernie Sanders and AOC. They do not represent, to my way of thinking,
is so
the
bearish
majority of American
today.
opinion.
Oh, glad to hear it. Liz Peek, thanks very much. See you again real soon.
SPY keeps
Supermicro's
chopping
co-founder and 2 others have been charged with smuggling NVIDIA chips into China. Tell me more.
So the U.S. charged the co-founder of Supermicro, another employee and a contractor, with the illegal diversion of $2.5 billion of NVIDIA-powered servers to China. The indictment reveals this complicated web through which our high-end technology gets in China's hands.
Keep breaking
The
down
trio
low
are
today.
said to have sold the servers from Supermicro's plant in Taiwan to a Southeast Asian company who repackaged them for China. While Washington has blocked Beijing from importing these such high-end chips, this describes one way China is getting them. The Department of Justice arrested 2 of the defendants. The third remains a fugitive. The company is not named in the indictment, but Supermicro says, quote, the conduct by these individuals alleged in the indictment is a contravention of the company's policies and compliance protocols, including efforts to circumvent applicable export control laws.
Ah, my stomach. Fuck.
It placed the 2 workers on leave. It fired the contractor. If you look at shares of Supermicro in the pre-market, they are plummeting.
Down 26%. Yeah. All right, Josh, what does that tell you about NVIDIA's chips? They're good, aren't they?
pretty good chips, right? If people are going through that effort to smuggle them into areas and want to use them, right? I think it is sort of a take on NVIDIA there. But on Supermicro, I mean, I don't think this is super shocking coming from this company. Remember, this company was accused of sending technology to Russia during the start of the Russia-Ukraine war. There was a short report on Supermicro that came out in 2024 that accused them of accounting fraud. Their accounting firm actually left, Stu, amid that scandal, right? If your accounting firm leaves a business, that's never a good sign, right? And you've seen this in shares of Supermicro over the last 2 years. It was a hot AI stock in 2024. It's down over 75% since then. We're looking at shares at, I think, $30 a share, or 22 this morning.
Yeah.
It was 120 2 years ago. Company's been under a lot of heat.
Ouch. Thanks for joining us, man. Always good to see you.
Shit
And we
is
will
so
be
cheap.
watching you on
$12.
Barron's Roundtable. It's another.
Oh, I just growled. Food ordered. Food coming. Say if you're coming in 5 minutes, please. 15 minutes. Fuck, I'm hungry. Ah, yikes.
For more on the market in the meantime, let's bring in Morgan Stanley Wealth Management Chief Investment Officer Lisa
Potential
Shallett.
for a recession is less than 30%, says Morgan Stanley. Motherfucker, 30% is high as shit! Don't say some scary ass shit like that.
Lisa, what a pleasure. It's good to have you back again.
Always nice to see you, Carl.
We were talking about sort of the, some argue, moderate levels that we've come off the highs. You argue that this sort of FOMO, buy the dip, every crisis is an opportunity, is dangerous thinking?
Well, ultimately, we know at some point one of these drawdowns is going to result in a bear market. Our last bear market wasn't that long ago. It was in 2022.
Let's keep the chat market related.
When, we know we had kind of a profits recession.
I have to keep
and so, our perspective is that, right now the data is starting to slowly build that creates some headwinds. Now, our view and the potential for an actual recession or an actual bear market that goes with it is still less than 30%. But we do think that folks need to take some of the macro developments seriously. I mean, the backup in rates, the flattening of the yield curve, these are serious things. I know at the top of the hour you were talking about the pivot in global central banks. I mean, this has been extraordinarily provocative. I mean, think about it. The largest 6 global central banks, including the Fed, as recently as February 27th, we're looking at a cumulative set of rate cuts for this year of almost 600 basis points. We're now looking at curves for those same 6 central banks where, we could see hikes of as much as 500 basis points. So this is a radical repricing in global bond markets, and that matters a lot to global cost of capital, to multiples, and to companies.
I get it. I mean, on the company front, though, I mean, not that they've had a lot of opportunity to come to the mic, but we're not hearing corporates, guide much lower. In some cases, they're guiding higher. FedEx is a great example today.
Yeah, no, 100%, Carl. We're looking at the same data that you are, and we've been quite surprised that the earnings revisions momentum has held up here, and that analysts bottoms up are still taking those numbers up. We do fundamentally think that as the war drags on, there are going to be some of these supply chain pressures that have to just drift into and bleed into, if first probably margin expectations, and then potentially, if this drags on a lot, to demand destruction and a more stagflationary type outlook.
Yeah, but before the war began, it was all AI, and where's the AI disruption, and how at risk a software and then private credit that is lent to software. I mean, where do you think we end up on the other side of this war on that?
Bottom of the
so on some of the controversies that kind of animated the first 2 months of the year, I think that a lot of that market action underneath the surface created huge amounts of dispersion. Some of it not entirely logical.
Did not break the floor
we're looking at some of the spreads between semiconductors being so highly valued and software being shunned, and memory stocks being bid up and hyperscalers being sold. We think some of those
is now showing as the spike
trades are
candle down
really
here
going
1
to
p.m.
reverse themselves. So we're seeing opportunities both long and short in this market.
Actually, bearish as fuck.
And finally, really quick, we just were talking financials. That's also one of your buckets of opportunity?
Absolutely. I mean, I think one of the things that folks are not really incorporating into their forecasts quite yet, and I'm not sure that even Goldman CEO gave it full shrift, but the globally systematically important banks, the capital markets banks, are looking at significant regulatory reform towards the end of the year. Our best guess is between changes to Basel Endgame, GSIB surcharges. You could see excess capital in these banks rising to $250, $275 billion that can be put to work in terms of share repurchases, additional deal underwriting, as well as just direct lending.
Yeah. Well, we did get those new rules yesterday. Bowman commented on them again this morning. Lisa, look forward to having you back soon to talk about some additional playbooks. Thanks so much.
Great. Have a great weekend.
Lisa Shaw.
330 extending crazy on QQQ today. They're fucking breaking the LOD. Divergence is clearing at the floor. Divergence cleared. LOD divergence cleared. LOD divergence cleared. Time is 1:35. LOD divergence cleared. That's how they do it. This is how they fucking do it. They let it cycle, 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 cycle. LOD divergence. Fucking just boom. Insane work. Bears are in full control. 3/3. $650 we're at. $650 we're at. Look at the volume, even bigger than yesterday. MACD the RSI, even greater than yesterday. $140. MACD the RSI super oversold now. LOD divergence at the floor cleared. Wow. Mega 3/3 QQQ. Omega level 3/3. 590, we're at 587. That's $7. Time is 1:40. 20 minutes until 2 p.m. What a day. Insane day. QQQ went lower. VIX spiking up. VIX is spiking the hell up into close. This is the channel I'm talking. Like, somewhere up there, 28. Yeah, scaring. Scaring crazy. All these news coming out. Last couple of days, I was so bullish. Look what happened.
Join me now to discuss how the conflict in the Middle East could affect and ripple beyond energy markets, but into food security. We want to welcome in Jake Hanley, Chief Growth Officer and Director of Investments at Teucrium. Jake, thank you so much for joining us. So we've been watching the gyrations in energy markets and oil spiking, whether we're talking about benchmark oil prices with Brent crude up as high as 119 this morning. West Texas Intermediate already higher. You say it's not just an oil crisis, the effective blockade of the Strait of Hormuz, but there's also a fertilizer crisis. Tell us a little bit more about what we should be paying attention to here.
Yeah, good morning, Diane. Thanks for having me. You know, a lot of folks are focused on oil, and rightfully so, but there is a bigger potential longer-term story here with fertilizer, and the reason is that about a third of the world's nitrogen exports come through the Strait of Hormuz. Fertilizer is really important for growing crops and creating the yields that we've gotten used to feed the globe. And with the Strait of Hormuz shut down, that fertilizer is not making it to markets. Now with oil, you have the option, Saudi Arabia has the option of moving the oil to the west and getting it into the Red Sea. That type of infrastructure does not currently exist for the fertilizer markets. And so really we are looking at a situation where that supply is now trapped.
Okay, so how fragile is the supply chain right now? In other words, how long do we have essentially before this becomes a serious crisis?
Yeah, it's interesting. You know, right now, I think a lot of the inflation story that we're seeing and the prices that we're seeing move higher for consumer goods is tied to energy because that is the immediate impact. However, with fertilizer, it could take a little while. And the reason is that most farmers, particularly here in the United States, we're getting ready to plant corn right now. And corn's really important to key in on here because corn uses a lot of fertilizer. It's necessary. The nitrogen is necessary to grow the crop. And so as we're going to plant, usually most farmers are going to have that seed purchased already and that fertilizer price hedged if they don't already have it ready to apply that first round. But there is a second round of fertilizer that gets applied after you plant mid-season, and that is not typically hedged as well, or farmers might not have procured that fertilizer. And so there's an open question as to how much fertilizer is going to be applied to this year's crop. And now that's important because, again, the fertilizer helps produce those yields that we've become accustomed to and that we rely on. And so there is the potential here, longer term, that if this year, this growing season, we don't produce the type of crop that we're expecting, we could have a corn supply issue for 2027, where right now it is a fertilizer supply issue.
For me.
Is some of this reminiscent of, say, 2022 when we saw, high energy prices, high fertilizer prices? Are we headed on a path like that, Jake?
Yeah, you could certainly see that. The long-term tail risk here is significant for food prices. Right now, the headlines are adding a lot of chop to the trade, but I think what we've seen, particularly in the flows to ETFs, is more strategic allocators looking at the grain sector right now and recognizing the fact that, yes, high energy prices matter, a structural problem with fertilizer supply chains can potentially lift these prices longer term. And again, if production goes down, you have an argument there for much higher prices longer term. The other thing that's at play is you look at commodities just generally, commodities have been doing well recently. Of course, gold had a great year last year. Gold and silver have kind of cooled off. And so there's this rotation, I believe, that's going back into grains right now, particularly because going into this war, corn, wheat, soybean prices were trading around cost of production levels. And so for allocators that have, an 18-month window or 2-year window, purchasing something or getting exposure to something that's trading at or near the cost of production makes a lot of sense for folks. And then certainly now we have this fundamental situation developing. I think you could see some sticky money rotate into the grains.
So farmers are invited to a meeting at the White House next week. I imagine this is going to be top of mind when they meet with officials. Let me ask you about the impact for consumers. What can we expect?
Yeah, I think, right now you should be expecting prices to be trickling higher. And of course, you feel that at the pump already. And energy, of course, is underlying everything in the economy. And it underlies the grain economy, too. You need to buy the fuel to run the tractors and so forth. So I think you're going to see the energy inflation filter through into prices. But then that cost push higher from grains, that's more of a longer term story. So food prices could get a leg up near term because the energy costs, that leg could be much bigger as you look towards next year if we do have production issues.
All right, Jake, thank you so much for the impact beyond energy markets. That's Jake Hanley, Chief Growth Officer and Director of Investments at 2Cream.
And that's what I meant by MU. About time. It's about time. Fuck the candles. Fuck the candles, man. This line should be like here. I don't know why this fucking line is like so misaligned. It's like right here. 425 open yesterday. $40 exactly. 5% down. Exact earnings move. Purple box. Purple box. Purple box. Head and shoulders. 422. Testing. Trend line. Testing everything. Time is 1:45. Small cycle bearish. Bears are in control. Waiting for my food. Being patient. Just patient with the market. I can be patient with this food.
All right, folks, AI enters a nation divided by politics, dreams, economic status. So the question, of course, is can AI do anything to make it better, or will it maybe make it worse? Think about this. Just a couple of weeks ago when Block announced they were letting go 40% of their workforce, right? The same way someone would just flip off or flip on a light switch, a bulb went off in everyone's head. Golly, AI is a job wrecking ball out of this world. We all kind of knew it, but that was a slap in the face. Now, some are saying that AI layoffs are a hoax, and it's just a cover for companies who are looking to fire workers and fatten up their bottom line. I don't think so.
145
right? I mean,
bounce,
keep coming.
145 rejected. Time is 150.
So they're going to potentially let go of 20,000 employees, specifically because they can use AI.
Bearish
And by the way,
control.
after jettisoning thousands of employees,
Bottom of the
Accenture
algo
today
range 140
is taking it a
breaking.
step further. The
LOD
firm is
breaking.
saying you
Time
got a
is
choice:
150.
learn
LOD
AI
broke again.
or your
LOD
job will be next.
divergence.
And here's the thing: they're getting rewarded for
There
it.
is not an LOD
Accenture's one of the
divergence.
best
There's just a
performing
new
stocks in
floor.
an otherwise ugly session today. So we know AI is a juggernaut because it provides benefits to both businesses and society. A bunch of folks are asked, it will increase profit margins, increase accessibility to goods and services, affordability for goods and services. It just will create, it will actually create some jobs, it will lose some jobs. And at the bottom, though, only 12% said lead to higher wages. So we know it's going to displace jobs, but may not create the jobs as fast as they lose them, right? So the challenge, of course, is that transition. It's not going to be smooth. Now, moreover, what if the hype doesn't match reality, right? Last week, Paul Ehrlich passed away. Now, many remember him and had a chance to actually reflect on his theory of the so-called population bomb. And it wasn't that Ehrlich was completely wrong.
I hate when they make new floors. I have to keep redrawing and shit, new roofs.
But I got to tell you, some very harmful policies.
That's what happens though. No cycle confirmation. And just keep going lower, keep going higher. No cycle confirmation.
But let's say the hype is real, and millions of people find themselves without a job. In that instance, the government could step in. But what that actually
look how they're coming in 140 to 140. That's a spike candle and then cycle
New York
inside.
City. Everyone knows New York City's got this massive homeless crisis. And the city now is spending $97,000. $97,000 per homeless person. In 2019, it was only $28,000.
What happened
last week? Where's all that money going? Well, guess what? The folks running these programs, they're getting pretty rich, making millions of dollars a year. Maybe there's no incentive to ever truly fix the problem.
March 9th to March 13th. March 9th was bullish for one day. 11th, 12th, 13th. Bounce, bounce, bullish for 2 days. Bearish 1, 2, 3, 4. But there was always, thing was though, like, this shit always existed. Like this cornucopia account, right? I've been talking about it for 3 weeks, 4 weeks. I've been talking about this cornucopia cone on my market update video. I've been talking about this downward channel. There's some YouTubers that were talking about this downward channel too, but nobody in the world was talking about this cornucopia. I swear to fucking God, nobody in the fucking world was talking about this shit. This is the one thing that I'm good at. This shit right here, I know for a fact nobody in the fucking cares about this shit, but this is a literal cone. This is the same trend line as this trend line channel. Like this shit is. I've been saying this shit here. I literally said it, I fucking printed this day. I remember. I fucking printed this day too. I printed this day. I don't even remember. I printed this day, but I sort of I remember talking about this cornucopia cone for days and 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 days on and days on. And every single day I was talking about it. Every single day I was talking about showing this chart. Cornucopia cone, cornucopia cone, cornucopia cone. Realist people, all realist watchers of my live stream remember. I literally forced people to say cornucopia, cornucopia. I was like, say the word. Cornucopia, say the word. Joke, cornucopia. Saying a word, but literally I was doing that shit to myself. Cornucopia, cornucopia, cornucopia. What the fuck is a cornucopia? Cornucopia. This is a fucking cornucopia. I can't even describe it. We went over this shit fucking 3 weeks ago, and this shit's a fucking cornucopia. It could be an ascending cornucopia, it could be a descending cornucopia, it could be any sort of cornucopia, but it is some sort of it's a cone cornucopia. Thank you for coming to my TikTok. Makes me hungry looking at that cornucopia. DoorDash is coming soon in 8 minutes. Dope. Cornucopia has saved my... Yeah, it's been my... yeah. Cornucopia with the MACD volume growing, with the VIX growing. Like, I don't know. I just have some sort of something else other than candles that have me convinced or give me some sort of confidence in something. More than candles here and there. Candles there and there. And candles come and go. Just the question is the setup behind this candle, or what kind of candle, on what cycle, what time confirmation, what is it really doing? Is the candle is the question. Majority don't ask that question though. The majority just scandal. Student loan debt is larger than collective credit card debt in this country, McMahon says.
Treasury will now assume the responsibility for loan collections and assist those who defaulted to get back into active repayment. The current student loan portfolio stands at $1.7 trillion, with 40% of borrowers currently in repayment and 25% in default. Joining me with more on that and the state of education is the Secretary of Education, Linda McMahon. Secretary, it's great to see you this morning. Thank you so much for joining us.
Good morning, Maria. It's a pleasure to be on with you.
And of course, you know, we're talking all about the loan payment program. I mean, and we're getting away from the core issues of education, which is really what I want to talk to you about. But first, let's start there.
Little cycle confirmation happening. Bullish things are oversold. I think the bulls are trying off the new floor now.
Joe Biden to just forget all loans that people have already taken out. Where are we today?
To go higher into 155.
Well, Maria, isn't it astounding for you to think about the fact that there is $1.7 trillion in this loan portfolio that is larger than the collective credit card debt in this country and more than double the endowments of most universities. I mean, it's an astounding number. And the fact that it would be housed at education to begin with. If you were thinking about starting a student loan program today, clearly I don't think the first thought would be, let's put that in education. I think when you think about Treasury might be the best place if it were coming into government. And so this agreement that we have signed with Treasury is really a great co-administrative program between Ed and Treasury for loan collection. The Biden administration absolutely continued to confuse it. There were 7 to 9 programs out there, either for repayment or loan forgiveness. And so what we had is a whole system of people not repaying their loans. So now we need to get back into the business of collecting the money that is owed, to the taxpayers of the federal government. And this is going to be an incredible partnership for us to have at Treasury.
Well, that's smart. I mean, let's keep the money where the money is, and the education department focus on ensuring that we've got the best students in the world in terms of
we'll draw this cycle
technology
as
and
it
what
is
they have
because
access
this
to.
is the reality.
The Biden administration made a slew of policy changes to the payment structure of student loans. They tried not only to forgive the loans and pass on the cost to American taxpayers, but you've said that the administration placed fines on universities that were of the opposite political party. Is that right?
My food is going to be here.
We stopped.
And what is important is at 2 p.m.
Are you talking
we
about
have a
our
mini power hour
administration
starting,
or the Biden administration?
No, the department under your leadership is trying to fix what the Biden administration did, where they were ruining universities, right? If they didn't agree with their policies.
I eat a little bit.
Well, we're absolutely just fixing all of that.
I look at the chart.
One of the biggest issues that we faced when we first came in was the broken FAFSA, which is the process by which students apply for their loans, every single year. Totally broken. And Congress actually stepped in and said, well, you have to fix that by October of last year. Not only did we rebuild it and fix it, but we were ahead of schedule. I actually went to some of the beta tests for those application processes and listened to families say, wow, this is incredible. We're now doing in 35 minutes what it took hours to do or days to get information back. And so part of the agreement with Treasury is so great because
what gap are we talking about?
We rely on information relative to, financial
Let's
information,
go back in time and
IRS
find the gap.
information, and so it comes much more quickly from Treasury. So we have
this gap right here.
It is up and running. We're
going to draw this gap.
One component which I think is helpful to families and students, and that is to say, this is how much this program that you are saying you want to major in costs at this university. This is what it costs in other universities. And this is what the marketplace tells you is the current payback for that. This is what the salaries are for this particular major. So now parents can take a look at that and say, wow, what's going to be the ROI on this? Should we go to this university or another one? Maybe we should rethink the major. It's great information that's never been available
gap right here
before, and I am really proud of that addition
I would
to the
not be surprised.
Yeah, and you should be.
I'm
glad that we're going in this direction because you're touching on something that's so critical, and that is the way we teach our students. I mean, I want to get your take on the growing implementation of
market is just testing the lows of here. I mean, the question is now, it's gonna. I think it's gonna bounce. I think it's gonna chop here and figure out if it wants to break this low or not. But we'll see.
It can help students obtain more personalized learning experience. We've got
it might break. I don't know.
Newly funded and
look at
newly
this shit.
founded alpha schools that are replacing traditional in-person teachers with
oh
AI.
My lordy.
I want to get your
look
take
at that
on
thing,
these
bro.
alpha schools.
Look.
I've been very impressed with the way that we see this approach happening, because you have a student in an alpha school, and let's say your child has shown great proficiency in one subject. It's doubling down on that subject, giving you more teaching on that subject, and not necessarily forcing that student to take something that may not really do much for his or her
we
education
have 2 spots
over the
left
long
in
term.
our
So give
alert
us that
room.
30,000
if you would like to join,
look of AI,
it's $270. Sorry,
and
for
what is
30
your take
days.
on these alpha
we have
schools
2
that are
spots
new
left for
to
our
the backdrop?
Discounted deal,
well,
I guess.
I've actually visited the Alpha School in Austin, Texas, and was so impressed
if you would like to join,
by that.
Message me.
One of the things that you explained is, absolutely being able to double down for a student on the things they're proficient in. But the Alpha School that I visited, the first 2 hours of every day, every student is getting AI instruction in different subjects. I mean, it's a real concentrated, focused effort. And what happens is a teacher, they're not replacing the teacher. There is a teacher there. And the teacher is monitoring what's going on. And she can see if one student
if you would
is
like
really
to message
progressing
me,
a little quicker or falling a little behind. And able to go in and give a little extra instruction for that student. And I have seen a teacher in front of a whole, it's almost like a video wall of boards of the computer programs for each of those students in her class. Pretty amazing to watch. But after that 2 hours, those students then are in real-life classrooms. They are utilizing what they have learned in the 2 hours before, and it's pretty amazing to watch. They're socially integrated. They are using very practical aspects to put in place, the math principle that they've learned, or they're reading and comprehending, other programs. It's very, I think, it really is progressive. The Alpha schools are typically charter schools or private schools. Right now, they're pretty expensive. But with the president's, executive order, we know that AI is here. We need to embrace it. We need to be ahead of China and other schools that are using these applications. So let's embrace it. Let's put the proper guardrails in place. This is not intended to replace teachers, but to be an additional tool for teachers, in the classroom. At least that's how I see it. And I think that's how it's been explained to me. It's the best application of AI.
Yeah, and I would imagine as these schools become more integrated that the price will come down. And become more accessible to more people. There's an Alpha School in New York, downtown near Wall Street, and I've heard so many great things about it. But you make the right point. It is expensive, and we need to see more access there. So we're going to keep a watch on the Alpha Schools. We're going to have the CEO on, by the way, of the Alpha School soon on this program. I want to switch gears and get your take
by the way.
I'm sorry?
I think she's amazing, by the way.
Great.
I think the Alpha School in New York is the same, started by this same group that started in Austin, Texas, and they're looking at 4 or 5 additional ones across the country. So it's pretty impressive.
I love it, and we want to keep a focus on it. Let me get your take on schooling on the university level, because right now there are the biggest foreign donors to U.S. universities right now, led by Qatar. We've got Qatar, China, key European allies. They are sending billions of dollars into these universities, and you made the decision to make sure that these universities were transparent. Tell us who your foreign donor countries are. Tell us about this, Secretary, why this is important, and what kind of influence a foreign donor like the Qataris, like the Chinese, what kind of influence are they having on our universities, Secretary?
Well, I think that's what we want to find out. And, it's there. The law was already in place. It was Section 117 of the Higher Education Act, that said that universities must report foreign dollars, but it wasn't easy for them to do it, and they really wasn't policed very well. So what we did was we revamped, actually created a portal that is now open transparency. I mean,
guys, I got my
portal.
food.
Anyone
I'm
can
very
go on that
indecisive.
What we've done
Which Pokemon
really
plushie should I get from Japan? Somebody can please type in chat.
Where this money is coming from, which universities it's going to.
Alfonso said Charmander.
So if red flags are coming up relative to undue influence, it's located properly
I don't even know if I can
at
get
the State Department and not at the Department of Education. Again, co-management of this program, which I think is the exact right place for it to be. But any organization now could go in, the media can go in, and they can look in this portal, and they can see where this money is coming from and the amount that it is. And so it's really all about transparency so that we can be better prepared to understand what kind of influence might be from these countries. It's a really great tool.
It's a great tool, and it's super important because, you know, money changes everything. And when you've got huge money tied to universities or funding these universities, it may very well dictate.
Oh my God, trade said Snorlax.
And,
that shit kind of sounds fire. Snorlax, yeah. I don't see it in the picture, though, but that's actually
when
fire.
The DOJ indicted the professor at Harvard who was sharing information with the CCP. I mean, this was a serious national security issue, and it was right under our noses. And of course, why wouldn't they share information if the CCP is funding and is a major
See that white dragon-looking thingy?
University? So thank you for your attention to that. So important, Secretary.
You won Snorlax.
Thank you very much. It was really important for us to do. And again, creating this portal. We have good technology behind it, and this really does open the door of transparency.
Hopefully you guys don't mind me naming my
so many to look at, and it will really help keep universities in line. You know, sometimes there was a little side path that the university could contribute to maybe some offshore account. That offshore account was then putting the money in. Now we can track and follow all of that. So it's really, really helpful, and the State Department is really appreciative of this new tool.
All right, Secretary, final question here. When you first took on this role, you told us, look, I'm hoping to be out of a job, because the president is vowing to bring education back to the states. He did that throughout the campaign. So what is the future of the education department? What should we expect in terms of that effort, sending education and governance
I would just like to say, though,
states?
There's some people that's been in my WhatsApp group and YouTube very active almost every day for a long time.
So it's a little apropos to
I don't want to name drop, but I'm about to name drop.
On the air. But
Alfonso, Chris, thank you all very much.
Exactly
new people that joined too, you know, DC Ninja, David, thank you all very much for being
co-administering of the student loan debt with the Department of Treasury.
It's been a long time now.
So there have been other agencies that we are working with. We're putting programs in the Department of Labor. I just mentioned the one that's going into state. We have a couple that are in HHS.
They seen through the bullshit, is what I'm trying to say. It's like the best way I could put it. So thank you all very much for being you,
and that is the first step of moving education really out of the department.
That's what I want
to say. Back to the stage where it belongs.
Secretary, are there
being
any
good human
beings
beings.
You'd like to highlight that are doing
That's the
a good
vibe
job?
I get.
Well, I think we've had
Hopefully,
some of
that's
our
the vibe that
universities
I give off to
really
good,
come
new
around
people. Like,
to what we're
honestly,
looking at and what we are talking about. I mean,
if I was
I'm
a
really
new person
pleased
and
with
I
the
see
changes
myself,
that Columbia made, but I've
and
also
they hear me, I
so
don't
many
think I would come off
now.
like that.
And I mean, you know, Vanderbilt University is one that comes to mind. Arizona State University. These are ones that have really put in good programs and are doing incredibly well.
Secretary, it's great to see you this morning. Please come back soon.
Thank you.
All right, we will talk with you soon. Good to see you. Education Secretary Linda McMahon. We'll be right back.
I'm going to shut up for a minute and eat.
President Trump says the war will end, quote, pretty soon.
So give me 2 minutes.
Netanyahu of Israel claims it will take as long as necessary. Former House Speaker Newt Gingrich joining us this morning. Sir, I think Trump wants this to end quickly to limit damage in the midterms. What do you think?
Well, sure. I mean, I think you have to be practical. He would like it to be over as soon as it can be. I think it depends in part on how much damage they can finish doing to the Iranian dictatorship. And they are making progress. And, you know, I was thinking.
Yeah, I see you too, DSD.
All these people.
You've been here literally every day.
How long? This
honestly, from my memory, the last 3-4 weeks.
It took us
maybe more than a month.
8 years
plus, so.
for Washington to win his independence. It took 4 years to win the Civil War.
Who you were in the WhatsApp group? Like, yeah, I don't
people
know who anyone
today
is sometimes
have this fantasy idea that you can take a dictatorship which has spent 50 years trying to defeat us, has prepared for this war for 50 years, and in a week or two, there's some magic, solution. I think that the Israelis and the Americans are gaining ground. I think they are steadily chewing up the Iranian dictatorship. It may take 3 or 4 more weeks, but my guess is this will not, in the long run, affect the elections. People need to remember, as long as you're prepared to campaign.
I forgot midterms elections are coming out. I guess I'm about to go vote again for the second time in my life.
When he was behind by 19 points in May. He won the election.
I live in a Democratic state, so I don't even think my vote would even matter.
Behind, Gallo quit polling. He won the election. So I think people should not try to take a snapshot of March and then project it to November.
Big population
and I think,
the
frankly,
city matters, so.
This summer, with a contrast between the
I guess I have a
radical
say in
left
my local,
and the Republicans will be so great.
They have
that
local
I'm pretty
elections, right?
confident
During
we're
midterms.
going to win the election this fall.
Okay, good.
There may be
Mr. Speaker, a new report says the conflict in Iran has put a strain on our country's relationship with some close allies. The administration has criticized many countries. They're just not offering sufficient military help. What do you think of this friction, especially with the Europeans? Is it a real big split?
There's a profound difference about the future, which Vice President Vance communicated last year, Marco Rubio communicated this year. Callista and I were with the president at the World Economic Forum in Davos when he communicated it. And part of the difference is about our role in the world, the fact that we protected Europe from having liberated it after World War II. We protected it all through the Cold War. We are still the primary protectors of Europe. They need to learn to do their fair share. And then second, we have huge differences about the future. We think you're going to get to the future by innovation. They think you can hide from the future by regulation. It doesn't work. And lastly, the truth is they don't have very much militarily that would affect things. It would be nice if they would help a little bit. It would make people feel better if they would help a little bit. But in the end, it's the American-Israeli coalition which is going to win
2
this
p.m.
fight.
actually pushed lower. There's now an LOD divergence at the floor in SPY and QQQ.
One ship from Britain.
For some reason, SPY is now pushing lower,
is,
maybe on
look at the British
IWM, and
Navy right
QQQ
now.
is not.
It is so underfunded.
They are really low, though, so I don't even want to think about the fact that they can go down $2 here.
They got 2 aircraft
All I'm saying is now there's an LOD divergence.
That's not good news.
This is not good news.
I mean, can they turn this around?
For the bulls.
I mean, because
Bears might be holding like crazy.
They're in great difficulty
far,
because the Strait of Hormuz is essentially closed. It's really tough on the Europeans. Don't they see their interest here?
One, I don't think they see their interest, and I don't think they're prepared to make an effort. You barely get them to make.
I'm talking about the LOD divergence at the floor that exists right now,
which is in their backyard, and which is a direct threat from Russia. To get them to think in some serious way about projecting power back into the Arabian Gulf and reopening the Straits of Hormuz, I think it'll be very hard for them to psychologically to do it. I think we have to recognize, as we did, by the way, with Reagan in the late 1980s, we kept open the Straits of Hormuz, and it may take a substantial campaign, but I think in 2 or 3 weeks, if we focus on it, we can break the back of the Iranian effort to close the straits. And if look, this is March. If oil has returned by June to what will be probably its natural post-war price, which is $60 or $70 a barrel, dropping it down into the $2.50 range per gallon, we're going to be fine. I think people need to
Bearish control
put this in context.
210. Time is 2:15 in 2 minutes.
From 1979 has called America the Great Satan. They have routinely chanted death to America, and they mean it. They kidnapped our diplomats illegally in 1979 and held them for 444 days. They killed over 240 Marines in Lebanon. They have been fighting us. They've been at war. And that's part of why they were prepared to endure this. But I do think we are beginning to tear apart the fabric of the dictatorship. And I do think out of the 90 million Iranians, probably 85 million would like to get rid of the dictatorship. And that's why they killed 30-something thousand people. Think about that. Earlier this year, they killed over 30,000 people to keep the regime in power. This is a moment to break the regime, to open up the Gulf, and the world will then be unbelievably different.
This is the moment. Newt Gingrich, always a pleasure. Thanks for joining us, sir. We'll see you again soon. Thanks a lot.
Thank you.
I don't know. You guys should ask upon yourselves. Arjun said, hey, bro, is it going up? You should ask the market. You guys should ask yourselves. What does everyone think? Anyone else want to answer that? I'm not answering it. Does anyone else want to answer it? The range brought the range lower. That's what I see.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio. And we're taking a look at Amazon today. Andy, first up, happy Friday to you. But let's get into the latest sentiment data you have. I will say when I looked at the comparison, wasn't surprised at Target because I feel like it probably had easier comps year over year. But I was surprised on where Amazon sits on your latest data. But take us through how we should read this.
Yeah, I really think when we look at web visits to Amazon, the one thing that we always watch is how did they do during the Christmas and holiday season. That is the biggest driver for Prime memberships and sets the stage for people, you know, using the app more, which is not in these numbers. So they had a really good holiday season. They're building on top of numbers that are, you know, pretty much unheard of, you know, 70, 80 million web visits a day. It's really crazy. So any increase holiday over holiday is good, and that's what we saw out of Amazon. The other big part, of course, of Amazon's business is AWS and, you know, their data business. You know, the stock got beat up a little bit on their big CapEx plan, but I think that what investors, you know, that have been around long enough, you know, I can remember back in the late 90s when Amazon was being criticized for building out too much inventory, too much technology, spending too much on CapEx. This is a company that has a history, a proven history of seeing where the puck is going and getting there first and getting there.
Oh my God,
with,
NVIDIA actually broke
the
175.
the best setup from a technology standpoint. All of their CapEx, for the most part, aside from a phone fiasco a little while ago, has been really well justified and produced exceptional returns for investors. So them putting $200 billion of CapEx, you know, chasing the AI wave tells me that the AI wave is extremely real. It's extremely sustainable. The smartest money in the world is building out for this and can't keep capacity for their clients. So we love what Amazon is doing long term. We think that any short term blips in stock price or investor sentiment around CapEx spending is a really narrow way to look at things and could be a great opportunity for long term investors to continue to pick up shares in one of the best companies in the world.
Quadruple wishing whatever.
We've always talked about Amazon in that regard, where they invest, they disrupt, and then they usually or historically have won in any business that they get into. We saw some reacceleration in cloud growth last quarter too. That's a positive. you know, they're not immune to moves in the overall market. We're down. We're in bear market territory right now from the recent all-time highs that we saw in the fall. I mean, when you look at this, and I saw your data where, yeah, I get it, there's seasonality on some of your data from, you know, the holiday shopping season, but has that bottomed out in, according to your data? Because that looks pretty ominous with the stock price still sitting about halfway through that big downturn.
Yeah, I don't think it's ominous. I think it's kind of back to normalization. Once you know,
so
again,
surprising how
our
fast
data
Nvidia
is somewhat
does shit, too.
limited
Like,
in
honestly,
what we can
like,
see because so many people
I
use
don't
the
play the
app. So
3/3,
many people
but
have
like
a
the fucking
Prime
3/3
membership
is
that they're
actually
leaning
so
into, and so
long.
we really look for kind of those big events. The holiday
What even is
shopping
this shit?
season was very good for Amazon. We could see them putting on Prime memberships, getting new customers into their ecosystem, getting new app downloads,
I literally
etc.
played
So
1, 2, 3,
we think that
4,
they're doing
5,
very
6,
well
8
with the
days on
retail
Nvidia or something
customer,
like.
and you know their most profitable
Jesus
unit
Christ.
is that
They
you know
systematically
AWS, the data
deconstructed
centers,
200
et
calls
cetera, that they
expiring
have,
today.
and you know when the
Systematically.
CEO comes out and says,
On every
you know,
fucking
we're
day, every fucking
monetizing
week,
capacity
like,
as fast as we can build it, we think that we're going to have, you know, 17 to 20% annual growth rate for years and years until this is a $600 billion a
Someone
year
said
business.
market
I think
might
you have
gap
to
up
listen
Monday,
because again,
but
this is
yeah,
a company
the question
that
is,
has continuously
right, how far is the market going
delivered
down
on
today?
those promises.
That's the
when
fucking
when
real
they outlay
question.
tons of cash, it's usually for a really
Sure,
good
market
reason, and
might
we
do
think
something on
that they're
Monday,
doing
but
the
it
right
sure
thing
also
here.
visit this low,
You know,
too.
building out for the future and just not just resting on their laurels. This is
low is gonna go
an
today?
unbelievable
Break that or
company.
no?
It'd be
Like,
very
it's
easy to
just
sit back and crank profits
God.
up to obscene levels,
There's
but
no
they
setup,
continue to
no
push
news
the
coming over
envelope
the
and
weekend. It's
continue to
just
invest in the
blindness over
future.
the
And that's
weekend.
exactly what we
Literally
want to see
blindness.
out of a company like Amazon,
I'd
a
rather
technology
just,
company.
I'm gonna go and
You
watch
know,
a movie over the weekend
just
or something.
absolutely one of those stocks for us that is, if you don't own it, I kind of have to question why you're investing in the first place.
But let me ask you this. When you compare it to Walmart, because Walmart has been working on, obviously, beefing up its e-commerce, and that has come a long way, and it's outperformed Amazon so far this year. And there are those who say, listen, you know, I mean, listen, Walmart moved its listing all the way to the NASDAQ, so they're saying it's more like a tech stock now. Anyway, and when you look at your data, Walmart is outperforming Amazon. So, you know, how do you compare the two?
At this point.
Yeah, I think Walmart's doing a fantastic job, and I think that they're benefiting from the fact that a lot of consumers are looking for value. A lot of those web visits are price comparing. You know, people are hitting Target and Walmart more than they used to before they go to the store so that they can price compare. And so, you know, I think that there's room for a lot of winners in the retail space. Amazon obviously has a pretty good chokehold on most of the consumers in the country. And so Walmart, you know, getting a little bit more of that day-to-day traffic, that grocery-driven traffic, that e-commerce, I think is overall okay. I don't think it's a threat to Amazon at all at this point. I just think it's good, healthy competition that's going to make both companies better.
Andy, you know, we always talk about the retail side of their business. That's a big generator of the billions of dollars of revenue, but profitability goes back to cloud.
It looked like it was
when you
slow
look at this
shit while I
AI
was moving,
build
but
out and the CapEx spend that's going into it, that's obviously, you know, hurt the stock here a little bit. But, you know, the cloud is going to be necessary to run a lot of the AI stuff. So are you guys seeing any data that says, hey, just because they're the biggest, maybe their growth rate isn't as high as maybe Microsoft's and Google Alphabet's as far as growth rates go, but we've seen that real acceleration. Are you guys seeing that same kind of data where, hey, that's the profitable side of their business and the most profitable?
Yeah, it absolutely is. I mean, they just posted their fastest growth for AWS in 13 quarters at 24%. You know, so Microsoft growing a little faster than that is coming off of a little bit smaller base. I think Amazon continues to put up these enormous numbers and continues to justify the spending that they're doing into the future. You know, it's just one of those situations where you have to kind of say, all right, this is a team and a company that for decades has defied investor expectations.
I'm just watching this entire fucking cycle happen.
Continuously
I'm really green today. Like, but that is unreal.
6 quarters, 8 quarters into the future rather than managing to the current quarter. And so I think that's the way you have to look at it as an investor. If you want to own a company for 6 quarters or 8 quarters or more, then Amazon's a pretty good bet. If you're talking about quarter to quarter, that's not what they're managing to, and so that's probably not what you should be investing towards either.
All right, good stuff. Thank you, Andy. That is Andy Swan, co-founder of Likefolio, with the latest data on Amazon.
Market going crazy. Look, it's gonna go through my chart. It's about to fall through my fucking chart. This is nuts. Wow. Bears are having a fucking party. This is a motherfucking pizza party at the school with the teacher. Pizza party. Hello, they break it. They busted. They busted down. They busted it. They busted. Every single bolt busted. Busted it. VIX is spiked up to 27. This is what I was talking about. This is the real fucking move on the VIX. There's a trend line up there, 28 somewhere. It's a motherfucking trend line. Unreal. 225. New LOD. Divergence at the floor. Cleared everything. Crazy shroom. VIX spiked up crazy on this. VIX literally spiked up fucking like $3 on this shit. On the level breaking on SPX. 3/3 extension crazy on QQQ. We're gonna look at QQQ on the 5-minute here. It's gonna look nasty as fuck. Holy fuck. Look at the 3/3 extension today. It looks so fucking nasty today with it. QQQ is down 1.78%. SPY is down 1.65% right now. Today is a bloody Friday. Black Friday continuation extension. This last 4 fucking weeks. Every single Thursday, Friday. Pushing it crazy lower. Quadruple witching into March 22. Oh my god. I want to print it. I want to print it 3K today. Oh my god. Oh my god. The contract that I sold earlier for $8,000 is at $9,030. So I guess I missed out on 1K more. But I'm up for $1,800 almost today. So that would have been a 2.8K day. But all is well. Life is good.
Of course, the S&P pacing for the fourth down week and the longest losing streak. Of course, the S&P pacing for the fourth down week and the longest losing streak since March. A lot has been made, guys, about, we're 3 weeks into the war in the Middle East. The S&P hasn't moved that much, considering all the geopolitical headlines that we have been seeing. What do you think is the reason for that? And do you think that there is something that would create a bigger drawdown in the S&P?
Yeah, I want to see how we come out of the weekend or finish the week here with the triple witching. I'd like to see the market hold ground, not really extend itself below the 200-day moving average that we broke yesterday. The Qs also closed below the 200-day moving average. There's a lot going on with the money flows, and I think that's really what one of the big issues is here. And the war, the Hormuz blockage, it's really moved. It's put a halt on money flows, and I think that's
why is the chat so quiet? Love Basketball said, "Let's go." Like, why is the chat so quiet? Who was happy about that LOD break? Who was sad about that LOD break? Who didn't care about that LOD break? Let's see some emotions. Like, what the? It's so silent. What the fuck is going on right now? It is so silent. All right, everybody's just quiet, silent. Like, let's say something. Come on, like, why? Someone said surprised. Oh my god.
On top of the private credit fears, is compounded things right now. Now, I do think that there is some things to hang your head on. I mean, there's been good earnings. About 73% were beats. Information technology stood out. Energy has stood out.
I'm a little bit pissed too. Like, I'm a little bit sad because I missed out on 1K Core U2. But I mean, it is what it is. Like, I'm happy for what happened. I'm kind of like surprised too, and I'm kind of like scared. I'm also like, that's how I am right now. Like, I don't know, but it's silent as shit. Don't let the candles silence us. Or fuck the candles. Don't let the candles silence us. We silence the candles. Jason said Goku to the max. Damn. Don't say that, Jason. Don't say that, Jason, now that we're at the floor, man. Jason scaring me, bro. Where's Uncle Piccolo? Right. Where's that Uncle Piccolo? I don't know if we can tune us out with pickles. Where's that pickle Rick shit? Oh my lord. This actually is some Super Saiyan fucking move on QQQ though. Like, what the fuck is this red? Just straight. What the fuck is this? I feel FOMO on 0DT too, but like, I mean, what can I do? Like, this shit is literally like a 10K fucking day. From like a 1K 0DT or some bullshit, but what the fuck can I do? Like, I don't even know. Maybe like premiums.
At the end of the day, it's going to continue to be a stock picker's market. I know that sounds cliche, but there's names that have been just bludgeoned this year that have brought out some opportunity at this point. But there's also names that some downside risk across the market broadly and sectors if things that we're seeing right now with the war and the money flows persist.
Yeah, and energy, the key bright spot in today's market, that sector up about 1.1%. And Steve, I'm curious, so we've talked a lot about geopolitics, a lot about the private credit fears, and then there's also some tightening happening. We were expecting a slew of rate cuts. Now, at least in the market, it's pricing in, potentially even a hike at this point in time, as you have the backdrop of fears about inflation, oil, and what geopolitics could do there. What do you make of that notion, and do you think that the equity market is reacting, in sympathy with that?
First, I want to go back to your first question.
There were so many times where I could have targeted the bottom of
the
the purple.
market's not off, the SP's not off that much.
Looking back, kind of FOMO, but it is whatever.
Index investor only. But if you're a stock investor, depending upon your portfolio, there's been significant carnage. Correction territory. And even more. So you can take a look at some of the larger cap tech names. There's Meta that's down significantly. Caterpillar's down significantly. Caterpillar was at, arguably, and I said this before, maybe overvalued, but it would grow into the valuation. The point is that narrative doesn't apply if you invest in stocks.
We are almost at 90 likes, folks. Thank you so much. Please hit the like button if you have not already. We have like 13 people that can hit the like.
If you look at when the markets had big moves, it's been because of global easing. right? Accommodative monetary policy everywhere. Now we're looking at the other way. So there's some real concerns here. If you take a look at what's happened to the yield curve, we're seeing a flattening of it. So look, you can use stagflation, which I've been talking about for a few weeks, as a possibility. That'd be really scary for the market. That would be when you're losing jobs and inflation keeps going. So the Fed's sort of frozen because they can't help you on the job side by cutting rates because you've got inflation. So inflation is a real concern. The longer this goes on in terms of Strait of Hormuz closed,
Jason said, is this considered a crash or correction?
Which I think we'd all
This
been
is
expecting
considered as a
coming
fucking
into
pullback,
the market,
turning
now
into
it's
a
decidedly
fear
a
of
downward
the market
skew.
correction.
So I still
fear
don't
of
see
a crash. So
why you'd want to put money in here.
JP Morgan said
into the
earlier in the
market
news we
these
saw,
levels.
right?
And
This is
I've
JP
been
Morgan's word,
consistent with
not
that
me.
because it's
JP
catching a
Morgan
falling
said
knife.
there's
So
chances
I
of a
just say
recession
this.
is
So we're,
30%.
you know,
They were not saying that shit 3 weeks ago. They were saying
not
fucking
getting
up,
short
up.
had been
They
the
were saying
right thing
8,000
to do
SPX.
because
1
while
month ago, I
the
remember.
war was going on, because
So,
at any moment in time, Trump
we'll
can
see.
declare victory
But all I
and
know
say
is
we're done pulling out. Now with the Strait of
entire
Hormuz,
world
it
is
has
now
another
50%
complication.
thinking
And that complication is
crash or
not just
correction.
opening the strait,
I don't
but still leaving
it's changing
Iran in a position where they can do this again.
Right.
So
But it's
until you
changing,
really
is all I'm
eradicate the threat for all future times, you know, for
Fear
now and
index is
beyond,
rising.
you really can't pull out. So
changing.
that keeps us there longer. It may put boots on the ground, and none of that is good for the market.
Well, it's interesting, Bryn, because Pippa Stevens was on last hour, and she was saying that the futures market is implying, at least for oil, that this war won't last very long, that it's actually trading $20 below today's prices for crude. So, you know, how do you think about the various markets and the likelihood of a protracted war in the Middle East, which is something that actually David Solomon addressed in his annual shareholder letter today as it pertains to what it means for deal activity? There's just so much up in the air with regard to the war and what it means for various markets. Which one do you put the most stock into in terms of its likelihood of predicting the length of this war?
This shit literally gives me feelings of fucking last week.
I think oil prices, whether it's in the future spot,
I'm waiting until Monday, no matter what. I'm not gonna fucking go bull here or fucking bear here. I don't give a fuck into next week, but I am honestly, genuinely, my mind. I don't want Nvidia below 180 yet because I want to play next week. I'm scared. It's a gap above on Nvidia. I don't know. They're showing crazy bearish today. That's all I fucking know.
Because of these inflationary fears, yields are going
higher.
Purple box. And so, I mean, to me, the big catalyst is oil prices, which to Steve's point on Iran, this is not Venezuela. This is Iran. I think this is existential for the leadership in Iran.
You know what discount says? All right, let's talk about this shit. You know what really happened intraday? 1220 rejected into 1210, right? Bounced algo range, rejected into 1215, right? And 1215 what? Bounced to 1220. What does that count as? This is what I mean by an extension cycle to extend the 3/3 to create a cycle on top of the cycle that exists to confuse, trap, and fuck up candle chasing, candle looking only, bull versus bear only, non-logical, illogical, bullshitting things out there. That's what I mean. This is what I mean by cycle. This is literally what I mean by cycle extension. Like sometimes I say, oh, this could be an extension cycle. Oh, a little bit higher. Oh, extension cycle a little bit lower. But this is literally what I mean. They are extending the 3/3 cycle. Let's literally draw. This is what I did back in time. Right? What is this cycle? It's a bullish cycle from 11:30, 1/3, 2/3, 3/3 into 12. 12 to 12:05 is the 3/3. They reject it, try to fake out, and they extend the 3/3. What does that really show us now? It shows us 12:05 is the 1/3, 2/3. Now they extend the 3/3 cycle, and they use the 3/3 cycle to trap. They did it in the morning, 9:45 yesterday. I actually think it happened today. Now, let's see. 9:45 in the morning. This is, yeah. They did it at 9:45 in the morning. HOD divergence. Divergence hope being used as an entire day to cook off fucking bulls using setup. Shawnee says 675 to 648 in 3 days is crazy. Yeah, this shit is literally last year. This is literally last year. Market moving $10, $15 every day. True BNF moment because market was raging for a month. If anybody remembers, QQQ was at 595, 600, 605, 595, 600, 595, 600, 6010, 605, 600 for a month and a half. I was talking about that on my market update video. I was talking about that while it was happening. I said QQQ is fucking range bound for a month and a half here. They're building massive fucking liquidity for something crazy. I kept playing the QQQ top to the bottom of the box. I did not do anything further than that. That would have cooked me. What did they do into quadruple? They cooked the shit out of QQQ and SPX and NVIDIA. Right? I'm sorry, but I'm going to look at this on a daily chart. Like, I have to. This is something that has happened. Something that was happening. That I caught on what happened. That's all it is. Oh my god. Oh my god. Yours said QQQ has been ranging since October. Nah. That's just something easy to say in hindsight, but QQQ was ranging exactly from February 5th to March 15th. I'm not even looking at the chart, and I could literally say the numbers because that's what I watched every single day. Wow. They're going crazy. They're going crazy today. And I want to look at QQQ chart. Alright, there you go. Somebody tell me when that is. Alright, let me move my video. What day does that say? February 13th. Okay. What day is that? March 16th. March 17th. Can somebody do the calculations here? How long is that? 1 month. One month. Sorry, let me look at this in 1 month. One month. We were here in the middle. That's 30 days. February 5th. I literally said February 5th exactly, right? February 5th. March 17th. That's a month and a half. I've been saying this shit on my live stream forever. I've been saying it every fucking day on my live stream. Every single fucking day. I said it every fucking day of February. I said it every day of March. I said it every single market update video. But now here we are, after it has happened. So that's what I mean. Very easy to catch on when things happen. Very, very hard to catch on while it's happening. Through the setups, through the candles, through all the bullshit news or what news? What news was that? Oh, what news was that yesterday? Oh my god, what news was that? Remember yesterday? Right? Remember yesterday? I said, oh, they pushed up and gap filled. Right? So, at the end of the day, it's been like this. At the end of the day, it will be like this throughout history. At the end of the day, I'm okay with who I'm at, who I am. At the end of the day, God has my back, and human history persists, and human history says that this is always going to be how it is.
And continues to pop
so
up.
God did on
and
that
so I do
news.
think this has cured us for a while. In terms of the markets, the U.S. can obviously handle this exponentially better than any other country because we have so much oil and natural gas just domestically. And so when it comes down to like the global impact, I think that's why you'll continue to see emerging markets, international come down, because we know they're much more sensitive. They're all importers of oil because they said they were bad and we're going to go do windmills and solar panels, which don't really work, as we're seeing. And so I just think the jury's still out. I will say, you know, there's a good adage, nothing good happens under the 200-day. And with the NASDAQ and the S&P both just slightly below that, we really do need to catch a bid there, because I just think that puts that technical pressure where you're just going to have this continued pressure of how far do we go under the 200-day. So I think the volatility is here to stay, and it looks like oil prices are here to stay higher as well, which is not positive for the markets in the short term.
Yeah, technical elements, fundamental elements. Bill, I'm curious, what's a safe haven play in this environment? Obviously, investors don't like bonds. Gold is selling off here. Is there a place where you can kind of feel protected in this environment?
Yeah, metals have had a really tough week, and that's part of the where when global trade is taking place, where assets are getting parked, and there's been a push away from using the U.S. assets, U.S. as a place to park those assets amid the trade. Now the trade that has pushed it towards gold, and we've seen the trade really tighten. We're not seeing anything happen with passage to the Straits of Hormuz. So gold has been selling off really really sharply. I still like the case for gold. There's some technical damage there, but really it's come to an old-fashioned just cash at the moment. If you know, because I think if you have cash, opportunity is going to present itself. And in a time like this, you know, we're not overweight cash from the way we look at it. We have about 4.5% cash in our main portfolios. Typically, with some of this going on, we would have closer to 8 to 10% cash, but we've used, and that's where we were about a month ago. We used that cash to buy software at levels lower than where it is now, like ServiceNow, CrowdStrike, Microsoft, Oracle. And so I think there's opportunity that's going to present itself. And I think having cash over the next couple of months, you're going to find those opportunities, and that might really be the best way to be parking it at the moment, because there is risk in bonds, and we keep our duration around 5 years, not more than 7, because there is risk in the inflationary environment. If inflation, we saw the PPI data. We've seen what the CPI is sort of bubbling a little bit, and if we continue to see the global trade locked up and supply chain disruptions, inflation is going to continue to pick up, and that's going to hurt your bond portfolio. So right now, it may just be cash being the best place to park your money.
Steve, you mentioned stagflation, the S word.
Yep.
And I'm curious, against that backdrop, how much further does the market need to fall for it to be a buying opportunity en masse? I ask this because Bank of America's Michael Hartnett writing, you know, global markets need to fall another 3 to 5% to trigger a big buy. Do you think it needs to fall more than that, or does that make sense to you?
Again, I don't know what that means, global markets, because I'm a stock investor, right? If I hedge, or like right now I'm hedged with some Qs, nowhere near enough short some Qs, but to me, I just don't know.
QQQ is down 2%.
I don't know what to do with a statement like that, right? So, and when it's safe to buy really depends upon your time frame. So there's no doubt in my mind, if you buy, or little doubt in my mind, I should say, that if you buy now, a year from now, with the right companies, not the ones that are still trading on dreams, you'll be in pretty good shape. So those will be higher than they are right now.
What does that mean, right companies, not the ones trading on dreams?
Well, you know, I think there are some that still have inflated valuations. I'm not going to go through them, but there's some that are clearly some more wind has come out of the sails in those. So momentum's pretty much dead now across the board. And if I look at my screen, I've just got a few that are green tickers, and I don't even know why they are. But I'd say that you can also buy stocks that have been through the wars, that because of idiosyncratic events that they've gotten crushed, Netflix being one. So, but then again, I look at Paramount, and Paramount, even though that's taking a pretty big hit, I'm actually short small Paramount for a trading position, because to me it's still overvalued with 7 times, 7 turns of debt on it. So the bottom line is, you can buy now, never buy with impunity, but if your time frame's a year, 2 years, 3 years, 5 years, you're going to do pretty well. But if you're going to be anxious and worry about it, wait a little bit.
Well, that's the craziest quad witching that I've witnessed in my life.
All right, so shares of super microcomputer losing about 1/3 of their value. It's because
this is the most insane quad witching I've ever witnessed in my life.
Hot air dryers, secret cameras, and maybe the worst alleged criminal activity. I mean, Christina Partsinevelos with the story in today's Tech Check.
Down to
this was not maybe the highest grade potential criminal activity we've ever seen. Just throwing that out there.
Oh, yeah, but they got away with it with millions of dollars, and that's because there was a web of lies, dummy servers, and to your point, a blow dryer involved, or maybe many blow dryers. That's the alleged scheme federal prosecutors laid out just last night, charging 3 people tied to server maker Supermicro, including the co-founder you're seeing on your screen and board member Wally Liao, with conspiring to illegally divert billions of AI servers to China in, of course, violation of U.S. export controls. Supermicro, for those who don't know, builds high-performance servers, which include NVIDIA's most advanced chips. Prosecutors say this scheme routed servers through a Southeast Asian middleman, repackaged in unmarked boxes, and then shipped them to China. That's what you're seeing on your screen right now. Defendants staged thousands of fake, non-working servers just in case there was inspections. So those are the fake ones you're seeing on your screen. Also caught on surveillance camera, using a blow dryer to swap labels and serial numbers. That's the red thing that you're seeing in the woman's hand on the right-hand side. $510 million worth of servers were diverted in a single 6-week window just last spring. NVIDIA is not accused of any wrongdoing. Supermicro says it's not named as a defendant, but analysts, of course, are pointing to the company's 2018 delisting over accounting issues, where that same co-founder stepped down, but then he was rehired. EY's surprise auditor resignation just in 2024 is reasons to question just how deep the compliance failures go, and whether the current CEO, Charles Liang, also seen on your screen with Jensen Huang, the CEO of NVIDIA, just a few days ago, knew more than the company is letting on. Raymond James said the stock will suffer from a reputational discount over its reporting credibility, and that's why you're seeing shares down so dramatically right now. Dell, on the other hand, is up almost 5% because it's flagged as the most immediate beneficiary of Supermicro's customer relationships. Brian, take it.
1.99%. This is what they're ultimately doing. The fucking margin is going to be fucking cold. Wall Street bet's gonna be fucking crazy today. 250. Holy crap, huh? Prediction markets. Is the stock market gonna crash in 2026? Holy shh. This is nuts. Oh my god, it would have been like a fucking 9K day. Oh my god, there's no fucking way. Oh, hell nah. Hell nah. Yeah, it's fine. Oh my god. Fuck. Maybe I shouldn't have let go. Fuck. Damn, that's crazy. I had a 365 core you put today at market open and 300. I had a 365 fucking put at market open, 300. Some historical shit going on. Or you. Never in Korean stock market history has the ETF or the market moved this fucking crazy and this much with this much volume and liquidity and fucking so much shit at the top. I don't even think Korea even did this in 2008, 2007, 2015, 2020. I don't even think so. Not like this. First time in human history. Not like this. Human history. I literally just played human history. 380 to 320 fucking 6. MACD volume just started bearish on Korea. Man, this shit's about to roll into next week, and I'm gonna be pissed off. But it is what it is. Hopefully it doesn't roll. Hopefully Korea bounces next week after Monday or Tuesday or something. I'm gonna be pissed off. If each contract at like 10K, I'm gonna be so pissed.
The war that America and Israel launched on Iran is just about ready to end its third week, and it shows no signs of slowing down, and in fact, it's intensifying. We're seeing continued attacks on energy infrastructure across the Gulf Arab states. Today we saw an oil refinery in Kuwait get hit repeatedly by drones. Meanwhile, we're continuing to hear more threats from Iran itself. The top military spokesman there went out and issued a statement warning that Iran's enemies would not be safe on beaches or recreational areas anywhere around the world. This is a threat that analysts had been warning about, that Iran could return to using militant attacks abroad in areas anywhere in the world to try to advance its goals in coming out on top in this war. We also heard from a Revolutionary Guard spokesman. He tried to counter what Israeli Prime Minister Benjamin Netanyahu said about Iran no longer being able to build the ballistic missiles it's using to target Israel and the wider Middle East. But that spokesman was later killed in a morning airstrike, showing just how Israel is
I'm gonna leave it like
to
that. I'll
target
come back
top
to
officials within
SMCI
Iran's
in a month.
theocracy, trying to weaken it, trying to weaken those also who are in forces that
Quite
suppressed
possibly the fucking
nationwide
Bear Stearns
protests back in
2.0
January.
of
We heard another statement
2026.
from the Supreme Leader, Mojtaba Khamenei, today,
Oh,
but
okay.
again,
SMCI
he did
is
not
so
appear in
dumb.
a photograph
I
or a
remember seeing
video,
this shit at
continuing to
45
raise
last year.
speculation about his condition after the Israelis and the Americans have said he likely has been wounded in this war.
Forget the headlines for a minute, because what matters right now is where the money is actually going. Joining me to break that down is Mo Hagbin, Managing Director at ProShares. Mo, great to have you back at the desk.
Thanks for having me.
So stocks are lower this week. We've had a lot of volatility tied to the war in Iran, also the spike in oil prices that we've been seeing. When you take a look at flows, do you think that real fear is getting priced in, or is this just repositioning?
Yeah, sure. I mean, I
Power
think
hour
we start
starting
by
in
thinking
5
about
minutes.
where the economy was pre-war, right? And my view is we were actually in a pretty good place. Fundamentally, the labor market was softer, but not
ranging
really
and going
stressed.
lower again into
If you think about
255
inflation, it was
trying.
largely under control. Core inflation, maybe services were a bit sticky, but overall, break-evens and expectations were that inflation was coming down. Fast forward to the conflict, and really, I think what's happened is investors looking at that situation and trying to assess whether this is going to be a prolonged issue or not. And to your point, I think it has had some effect on flows. So when I look at pre-war flows and post-war flows, what I see is much more defensiveness in the flows into ETFs. So for example, equity ETFs had a record start to the year. More recently, we see fixed income ETFs actually leading the charge. And within fixed income, the shorter duration products getting more flows than the intermediate and the long. The one thing that's surprising, Carolyn, is commodities.
It's all right.
You would expect, given the price of oil and what's going on, that there'd be a significant amount of interest or flows into that category. We've actually seen the opposite. Commodities led all of 2025 and to start the year, but they've actually had outflows since the conflict broke out.
Even despite oil being up, I mean, it's down technically 3% this week, but it's still trading just below $100 a barrel. 2%. So why do you think that is?
Well, I think it's because there's not clarity around whether these elevated prices will persist. And I think that's a really important factor for investors right now. Think about the short term versus the long term. The short term, obviously, there's supply disruption. The Strait of Hormuz is effectively blocked, or at least very difficult to go through. We have to understand that's mostly supply to Asia, mostly supply to China, South Korea, Japan. It's not really a U.S. issue, but it will put pressure on global energy prices. God is good all the time. God is good all the time. God is good all the time. More interesting, and I don't hear a lot of people talking about it.
God is good all the time.
If Iran resolves itself in a shorter period of time and reintegrates back into the global economy, that actually is going to have the opposite effect on energy prices. That will bring energy prices down. Iran has roughly 10% of the world reserves in oil, 18% in natural gas. If that supply comes back online, you could see energy prices go the other way. So I think that's a little bit of the conflict here. Are you bullish energy at this level, or are you actually thinking about the longer term and saying, this level of energy prices is probably not sustainable and it's going to come down?
This shit is not sustainable. When is it going to bounce? This shit is not sustainable.
They're just turning more cautious. So, I mean, I guess what's the takeaway then? It's not that it seems like every day the headlines are downbeat, but then you take a look at the S&P 500 and it's still pretty close to all-time highs, you know, despite seeing some red on the screen. So what is the takeaway? Is this a market that you think potentially should be lower given the headlines?
It's a good question. I think we're all watching the developments and thinking about whether this is a regional issue that's short horizon, or is it going to be more of a global issue that's longer duration. I think the base case right now is this is a regional issue and probably does not have a long length to it. I think the conflict potentially de-escalates and energy prices cannot sustain these levels. Just sticking on that for a second. You know, this $100 oil price is a psychological threshold. I think it's a macro threshold, but it's not really the level that I think creates a recessionary environment. So if it's short-lived, I think the growth picture globally started at a really, really strong place, and this could just be another wall of worry that investors need to climb, as they have several other things, like we saw with the tariff announcements, like we saw with the Venezuela situation. This could be another one of those.
Okay, and on that note, one thing that also could be surprising, if this is short-lived, is just the fact that the safety trade doesn't seem to be trading like you would expect on a week that rate cut
just close the fucking power hour.
And oil is still
honestly,
higher,
I can't wait till
and an inflationary print came in hot.
Right.
We're not seeing money pile into gold.
Right.
In fact, gold's down almost 10% this week.
That's right.
Is the safety trade broken? What's going on?
Well, I think the safety trade might have moved, right? So where gold historically was maybe somewhere people went for safety or even longer duration bonds, like think about TLT or some of these other longer duration products. I think diversification means something different now, and it's good for investors to start thinking about alternatives to those safety trades. So real assets. Think about infrastructure. Infrastructure is up 10% on the year, right? The markets are down slightly, but infrastructure's up. So how do you actually build diversification? It hasn't been a popular word for a while. You know, people have always looked at that as maybe a penalty because markets were doing so well, and if I wasn't invested in the S&P 500, well, I was going to underperform. I think people are rethinking that. People are saying, with what's going on around the world, how can I be more tactical? How can I be more nimble? And are there other ways to diversify outside of just long duration bonds and gold?
Where is the real money going right now? You mentioned fixed income, but within equities, it's not going into energy. We know that. It certainly doesn't seem like it's going into the AI trade right now, although maybe your data shows something different. Sure. Where is it going?
So equity flows are about 80% off of the monthly pace we were seeing before the conflict started. And what I see is actually very small amount of that is going in the broad-based indices, and a lot is going into more narrow sector and subsector strategies, more thematic and smart beta strategies. And I think it's actually reflective of the environment. Broad-based exposure has concentration. You obviously have sector biases there, and people are becoming a bit more discerning and a bit more precise about what exposures they want in the portfolio and looking for ways to move away from the broad-based index.
So talk about some of those themes and some of those sectors that are in favor right now.
Some bullish trying, RSI trying to go up from some bearish territory. Factor exposures, so think mid-cap and value. They were actually starting to get a little bit of a run even before this, and I think that's continuing. AI, still actually attractive, but it depends on how. Within the AI trade, I think now there's winners and losers, so people are thinking about it more granularly.
Arjun said, "My name is Mr. Block." I got you. Yeah, you requested to join the other
I think the commodity
community.
Piece is surprising, right? You know, you would expect that, given the year that commodities had in flows, and even the way it started the year, with some of the energy shock that we've seen, wouldn't you expect more flows to go there? Which we've seen the opposite. It's actually outflows in the broader commodity products.
Well, and if oil stays high and there's recession implications, you wouldn't expect to see money going into small cap and mid cap because that area would be hit hardest. So would you say that sentiment is actually
I just sent you a message.
Okay?
Yep.
I think so. I think if you look at where the market has had the most reaction, it's been in the treasury market, it's been in commodities, it's been in the dollar, but credit spreads and equities have been fairly calm. To your point, the broad-based index is still off maybe 5% from an all-time high. We aren't seeing the market pricing in a prolonged conflict or a situation where this shock would lead to a growth shock, which would lead to a recession.
But is the market right or wrong is the big question.
My view is that at the current moment
5 minutes
that we're talking,
crazy over
there is
what even is this shit?
Pretty good chance that this becomes something the economy can absorb. Right? Assuming it doesn't escalate from here and become more of a global issue, this is something the economy can absorb. It was on a very, very strong footing before the war broke out. And globally, there's a lot of good developments as it relates to production and productivity gains, labor market. I think this is priced correctly by the market, where credit spreads and equities are looking past the short-term conflict and thinking about the long-term
3 p.m. rejecting from 302 into 305.
So then where does the market go from here? You make the case that it can move higher from here.
I think we can make the case that it moves higher from here. It depends on your horizon, right? If you ask me, this year, can the market end higher this year from where it started? Absolutely.
It just stayed bearish all day long.
Is that your base case?
That's my base case.
Okay. All right, we like to speed things up for the end of our interviews. Before we get to our rapid fire this or that, I would love to give you one word, and you give us one word to characterize that theme.
Okay.
Sentiment.
Mixed.
Economy.
Healthy.
Markets.
Nervous.
Risk.
Defensive.
Positioning.
Defensive.
All right, time for our rapid fire game of this or that. Your first time playing, are you ready?
I'm ready.
Flows, real de-risking or just rotation?
Rotation.
Retail, still buying dips or
Bears
starting
are
to pull
trying
back?
to 305. Time is
Dip
305.
buyers, still in control or getting more selective?
It might just algo range here.
Still in control.
I drew the algo range here on
buy
purpose.
it or avoid it?
Algo range being used even now at the floor.
Sell volatility.
Credit markets, calm or starting to crack?
Public credit markets fairly calm. Pockets of private credit, not so much. That wasn't a word, by the way.
Safety trade, broken or paused?
Moving.
Bitcoin or gold?
Bitcoin.
Bitcoin or cash?
Cash.
Is it better if I enlarge the chart, guys? This looks so much better.
Broadening out.
AI trade, reloading or rolling over?
Bearish is fucked. I'm about to break the floor again, almost.
Small caps, catch-up trade or value trap?
Value trap.
LOD
Fed,
is
done cutting or more on the way?
More on the way.
I think QQQ breaking LOD or something.
Even despite your strong economic projections?
I think we still have at least one cut this year.
Time is 3:10 and 10 seconds.
I guess that the Fed did say that. Oil, back to 80 or pushing toward 150?
Back to 80.
Sentiment, max pessimism or secretly bullish?
Secretly bullish.
Risk, broad market problem or just pockets of weakness?
Pockets of weakness.
Inflation, a real comeback or just an energy spike?
Energy spike.
And not this or that, but quick answers. One asset class sending a misleading signal right now?
Energy miners.
What's quietly seeing inflows that no one is talking about yet?
Which is SPY down 1.77% here.
Dividend growers.
And finally, something we didn't talk about, election risk. Is it priced in or have we not seen anything yet?
Priced in.
All right, we'll leave it there. Mo, always appreciate your insights. Thanks so much for playing.
Great to be here.
Appreciate it. That's Mo Hagvin, Managing Director at ProShares.
Damn. Still, bears are heavy. There's not even 3 p.m. can bounce it. Like, what the fuck is this? What the fuck is this? Come on. Let's get an end of the day presidential live stream. Come on, market. I want to see a presidential live stream.
Global rates, the global bond sell-off. We kind of understand what's going on here, but are we entering, Matt, in your view, a new era when it comes to the global bond trade?
We're not overly concerned about it, particularly from a U.S. perspective, right? If you think about it, what Japan is going through now with the BOJ being a little bit behind the curve, catching inflation, we've been through that. We got through that 5 years ago. The best way to look at it's real yields, right? Inflation-adjusted yields. Not exactly, but approaching 2% on 10s, approaching 2.75, getting close to 3 on 30s. That looks great relative to the rest of the globe, right? Rest of the globe, you got Germany probably 75 basis points on 10s. You got Japan 35 to 50 basis points. Our real yields look quite attractive here. So if there is more of a sell-off, expect it more sort of in the developed markets around the world, not as much in the U.S.
I'm thinking if they pop,
already
they may pop to this level, which is
to higher inflation. Now, I'm not saying there's not more upside
all
here.
All of it? Like how do you factor in the war? Are you like, we've been trying to assess what we got from Fed Chair Jay Powell yesterday about kind of looking through the energy shock. But time will tell, right? Whether or not this is a longer problem.
But time will definitely tell whether this is more of a problem. You can look at it sort of either way. Right? We were joking before. You could look at it that, energy prices are inflationary. Spending on AI CapEx
if they bounce it,
is
they can bounce it up here.
We haven't hit the PC target in 5 years.
There, but I mean,
can't hide rates, right? You got to hold steady. Or you can look at it a different way. You could say, actually, productivity is going to come through and it's going to lead to higher growth. You saw that in the S&P. They ticked up a little bit in terms of their expectation for growth. You could say, actually, AI is going to be slightly disinflationary. And you can say, gasoline prices, energy prices up over the short term. Much like we talked about tariffs last year doesn't necessarily lead to economy-wide inflation. It's inflationary pressure, but you need spending on everything else at the same level and those higher prices to generate it. So we're not overly concerned about long-term inflation and near-term spike in energy prices.
Which of those two views do you think is right?
It's a Rorschach test. You'll learn.
I mean, those are two totally
right.
Yeah, and look, it's
you're going to learn more about me from that answer than you're going to learn about what's going to happen in the economy.
Sounds like a man trained in the liberal arts, but truly, I mean, which one is more likely?
It's a tough place to be too.
So I'm being flippant, but I mean this because you could be a policymaker on the FOMC, and you could have a principled view, depending on which mandate you think is which is more important. Is it maximum employment or is it price stability? So the question to me is not as much what is the right answer or what is my answer. What is the Fed chairman's view? What does he think?
Which Fed chairman?
Assuming, and by the way, I think Powell obviously is a professional, did a wonderful job yesterday. He is setting up the next Fed chairman, if there is a next Fed chairman near term. He's setting him up to be able to do whatever he wants.
Wait, I think it's even wild that you even said if there's a new Fed chairman.
In the near term, it's possible. Chair Powell said himself yesterday that he's unlikely to step down if there is not a resolution to the legal challenges. So it's certainly possible, as he said yesterday, that he stays on pro tem. But let's assume we work through this.
At some point.
We work through this, and Kevin Warsh gets appointed and nominated. The real question is, what's his view? His view's been clear. He believes, and we've talked about this at Chief Investment Office with their CIO, Chris Heisey. This feels a lot like the mid-'90s in a lot of ways. We had a doubling of the Fed funds rate from 3 to 6 in '94. People worried about, yield curve inverted or recession's coming. Everyone nervous. Didn't happen. Greenspan correctly pivoted. We had the longest recession at that point in economic history, and tech took us through. It feels very much like that now. That we've had that bond bear market from the hike in rates. We might get a productivity boom. And folks, let's break it down here, right? This 2% inflation target, it is not based on U.S. financial history. It's got zero, zip, niente, nada.
But it's still a target.
But it is a target for now. They haven't hit it in 5 years. The average inflation rate in the U.S. and CPI has been calculated is 3.3%. So there's nothing to be overly concerned about, except for the target on a 3% inflation rate. Nominal GDP, the stock market, the economy, corporate profits, spending, income, they all do fine at 3% inflation. So it's really a choice for the Fed to make. And again, as I'll say it again, Powell's a professional and he's setting up a new chair to be able to position how he wants. He's not thumbing the scale in any way.
Well, so how does a new Fed chair, how does a Kevin Warsh as Fed chair want to see things progress?
7,000
do you see the rate path differing if this was indeed the second to last meeting that Fed Chair Powell presides over?
Our belief for now is that you're probably going to get another 2 cuts this year, right? We saw how candidate Warsh presented himself. And again, he's giving that story that looks much like the mid-'90s.
I should post that on Reddit. That's what I've been saying
is going
for like
to be
productivity
enhancing and will allow further U.S. economic growth that's slightly different. That is the '90s parallel. So to your question is whether that's right or not, you're not going to learn near term, but that's his view. And so we expect him to at least try and deliver 1 rate cut before the midterm elections. That's November. So we've got June, July, and September to deliver 1 rate cut, right? So expect 1, and then maybe another one before that.
But if everything is so good,
Down 50K. Everything was
well, but you sounded like earnings. You talked about a lot of good things that were going good. Why do we need a rate cut?
I said in an inflation environment of 3%, all those things are still fine. I'm not saying the economy right now is fine. The economy right now has issues.
Right.
The slow growth job market is a significant issue that might need a rate cut or 2 to address. Again, but that's not when do you really worry about an economy? Not when job growth slows. When people started getting fired, right? And we're not seeing that unemployment claims. We're still ticking around at 200, 250.
Low fire.
So in the again, when people start to lose their jobs or afraid their wife's going to lose their job or their brother, then people retrench. We're not seeing firings, right? We are seeing slow job growth.
Dow 50K.
So it's not necessary for the Fed to move a lot in either direction.
But do people retrench if they think gas is going to be $1 more a gallon than it's been for months?
Absolutely. If it goes up and stays there, but that's not what the oil market's telling us. It's telling us the first.
I remember. I never forget. Day 1 Iran shit happened. I said something fucking changed. It's very, very important too. Watch what happens in the market going into the next couple of weeks. Couple of weeks have passed.
So we're watching gold, silver, copper, futures, all they've to the downside. But you know what's happening next? You saw gold go above 5,600, and folks have been looking to precious metals overall as a safe haven or a place that could see growth. We're joined by David Strzeski, CEO of Sound Planning Group, and Ben McMillan, CIO of IDX Digital Assets. And I'm glad you're both here. David, I know you've come on. You were actually looking even more so at silver, I think, last time than gold. You had looked at gold a lot in the past, but that had run up, and then you sort of were switching to silver. But that was, I don't know how long ago that was. Where do you stand now and why?
You know, this is an opportunity right now in the metals market. When you see prices come down like $1,000, like you just mentioned, in gold, silver's about $50 below its all-time high. This is a massive opportunity. I'm a long-term buyer. And I also care about math. And so if we just even understand where the gold to silver ratio is, how many ounces of silver does it cost for 1 ounce of gold? We're looking at a little better than 60 ounces of silver for 1 ounce of gold. Well, in 2025, the production rate, the actual supply and demand, was 7.5 ounces of silver yielded for every 1 ounce of gold. So how in the world are we sitting at a price ratio of 60 to 1? And so the math is the math. This is a thesis that is early right now and coming out. And so I believe that silver very specifically is the most undervalued asset in the entire world. And as the nations continue to spend and continue to buy gold, I just think that this is going to be a catalyst to see much higher highs than what we've seen so far.
Look, I mean, to your point, we saw gold down about 10% this week. Silver's down about 15%. Ben, what say you? Is there opportunity here in this group?
Yeah, absolutely. I mean, I would frankly underscore everything David just said. This is, you know, we're looking at this as almost a generational buy the dip opportunity for our clients. We're telling them across the board, take advantage of this. There's a couple of things I would add too. When we look at silver in particular, you know, there's a huge industrial use case, which I think is, you know, part of what was getting priced in really in the last couple of quarters, that parabolic move in silver. A lot of that was demand driven, looking at this AI build out. What's interesting is silver has kind of become an AI adjacent trade. When you look at all the demand for these data centers, you know, silver is a superconductor. And you know, you're even seeing deals like, you know, Samsung is striking deals with silver mines directly to make sure they get the physical throughput. So again, this is definitely a buy the dip opportunity. You know, the big question, of course, with gold is it's supposed to have this geopolitical risk premium. Why isn't that showing? The short answer is, you know, war in Iran is you know, impacting 20% of the oil flowing through the Strait of Hormuz. That's increasing inflation expectations. That's increasing interest rates. And so you're seeing, you know, an asset class that already had a phenomenal run. There was some profit taking. There was a lot of leverage embedded. You know, now you're seeing inflation expectations kind of pull that back a little bit, but all of that is transitory. When you look at the structural, as David said, the structural long-term thesis for both of these metals is very much intact.
And when you think about the Industrial Revolution and the metals that we need to build, but how much do you put, you know, we think about generations and maybe investing in this for the long term, David, how much allocation are you putting into what you said silver is a great investment now? Are you putting a big amount in there?
I personally do, and I think that it's important to recognize that when we have the AI tech trade that's run so hard, done so well, that this is a great time to evaluate what are the PE multiples at right now relative to gold and silver miners. If we look at the trend of what's actually happened, so I'm a guy that follows macros, I look at the math, we have a structural loss of about 200 million ounces on an annualized basis, and we're running out of silver very specifically. If you want to electrify the future, you've got to have these metal miners working. And so the most important thing to understand here is that the price of input of what does it cost to produce these metals has not gone up that much. Maybe diesel's a little bit more expensive, Caterpillar machines are a little bit more expensive, but the value of these assets have gone up so much more. So I think it's important to take a very serious look at this, and I think that 60-40 portfolios have not really done a great job of allocating into this specific industry because they've not understood it, they've been more tech heavy, etc. And so I personally believe that, you know, these specific sectors in metals and metal miners are going to probably be the leaders in our economy for the next 3, 5, and even 10 years into the future as the 21st century is absolutely here. AI will pay whatever price that it it takes. Data centers will pay whatever price that it takes to continue to go forward. And so I'm personally very bullish. This is the most bullish category for me because the math backs it up.
All right. And then, Ben, you were also saying here, I mean, the stagflation story, if we run into that, if the Fed's behind the curve when it comes to inflation, that people will run to gold. That was something you noted. But I'll say that you have the structural case. You talked about central banks' interest, the record debt that we have here in the U.S., but also that the big banks have up arrows for their targets, right?
Yeah, I mean, I always go back to, look at COVID. During the COVID regime, the United States printed roughly 80% of all U.S. dollars in existence. And when you see a step up in the monetary base like that, the central banks voted with their dollars. They were selling treasuries, and they roughly doubled their purchases of gold after COVID, and that's continued. They haven't really slowed down. And again, that's part of this kind of beginning of the end of dollar hegemony. There's a lot of confluence of factors surrounding that. China in particular is talking about starting to denominate oil in something other than US dollar, moving to potentially a gold-backed currency. We're still sitting on not only just record debt, but record deficits. War doesn't help that, irrespective of where you fall on the spectrum there. And so this, again, when you look at the kind of, what David said, the math is the math. That's exactly what we've been telling clients, is there's no way out of this. There is no way to solve for this other than, meaningfully higher gold prices and silver prices in the future.
I mean, we are sort of ending near session lows here. Is there opportunity quickly, David Strycewski, in the entire market? Your final summation.
Yeah, absolutely. I think that gold's going to $10,000 very quickly. I think that you'll see that gold to silver ratio quickly go down to 50 to 1, 40 to 1, 30 to 1. Remember, it's 7.5 to 1 by real production. But if it goes to 30 to 1, you're looking at better than $300 silver right now. And again, AI will pay whatever the infrastructure price is. Lockheed Martin pays whatever the price is. They're going to make missiles, etc. And so the math is the math. This is an opportunity right now. Right. And I think it's a gift for your viewers to actually even understand a great segment like this.
Ben, you were talking about the de-dollarization accelerating. You do deal in digital assets. You're looking at gold and silver and all that. Your final quick thought where the opportunity is.
Yeah, I mean, I would underscore everything David said, and I would emphasize the miners. That's a part of this ecosystem that is largely kind of under the radar for a lot of investors, especially a lot of the 60/40 investors. And we would really emphasize looking at not just precious metals and not just silver and gold and silver, but also the gold and silver miners. Because they're the ones who are. That's where the rubber meets the road. There's a premium on physical that is not going away anytime soon. The one thing that we haven't talked about is there's a lot of paper contracts that aren't backed by physical, and you started to see some kind of weird behavior on the different exchanges. I
watched two with a friend and one by myself.
To help short sellers, cover so they don't have to deliver the physical. So when you buy into the miners, you're inherently buying into the physical. So again, this is what we think this is a generational buying opportunity for clients.
All right. Thank you both, Ben McMillan and David Strycewski. Thank you for being with us.
Thank you. Oh my god. Oh my god. They done did it. 2.11%. Time is... Holy fuck. That's the time. Time is holy fuck. There's no way. People around the world are getting jaw dropped right now. People around the world are getting jaw dropped on right now. Oh my god, there's no way. How much did they fucking go lower? 200 EMA busted down today. 200 EMA busted down today. Today was the 200 EMA test. My market update video said 200 EMA in all caps. Bearish consolidation. And today is Friday, the last day of the week. And we are at below 200 EMA. Market tested the 200 EMA this week. Goddamn.
What has darkened the picture in the...
Jason said boring movie I just watched now. How did you watch it just now when it's out today? And it started only playing at 2 p.m. How is it that you watched it and the release date is today? Explain. If not, you're just saying things. How did you watch it when the movie's 2 hours long and it came out
the last
today?
couple of days here,
I don't
Christopher,
understand.
that's brought you and the likes of so many others to this conclusion?
Every one of them.
Well, thanks, Joe. Great to be with you. And, you know, maybe it's Christopher Waller.
How do I know? Because I got the last seat.
The facts change. I change my mind. What do you do? When I was on with your colleague, Kelly Lyons, a few weeks ago, it really did seem like this was going to be a fairly focused operation, that the Navy on the U.S. side would have no trouble at all defeating the Navy on the Iranian side. But I think what was not clear to me, and maybe should have been clear, but is certainly clear now, is that Iran will continue to fight on even after having suffered immense military losses. The political leadership
movie release
still
date is
seems
literally
to be in place,
March 20th
still
today.
seems to be unrepentant and unwilling to negotiate.
My girlfriend slept the whole
And
movie.
we've
So you're
seen,
lying.
you know, currently and through history, where a less able military force is able to harass and undermine the goals of a much more able military force. And if it's in a narrow strait of water with a lot of oil going back and forth, this thing could go on for a long time.
A long time, indeed, as the White House prepares to ask for $200 billion. And this report on potentially occupying Karg Island might require another 2 to 4 weeks. It's interesting. We just saw a tweet from one of our colleagues in London who's also a little bit concerned about all of this. I don't know if we can find that tweet from Javier Blas once again here, James, because it's pretty important here when we consider the hardware that's being sent to the region. It could take another month or so to try to pulverize the Iranian coast to prepare it or to prepare Karg Island for troops to occupy the region. Javier Blas on Twitter, thank you, James, with a photograph retweeting warship cam, Christopher, the USS Boxer just leaving San Diego for the Middle East, considering she only left 2 days ago. She will not be near the Persian Gulf until mid-April. If the reinforcements are intended to reopen the Strait of Hormuz, the oil market faces a very long wait, Christopher. This is why you're worried, right?
Well, it's that, but it's also just the recent history of the Houthi attacks on shipping through the Gulf. You'll recall the U.S. Navy did a whole lot to try and take out their positions and reduce their capabilities, but it's really only a diplomatic agreement with them to stand down that has kept shipping going up until this recent war. And so if the Iranians don't want to stand down, or at least some parts of them want to continue to harass shipping, it will be a passage that will have risk attached to it for the foreseeable future. And maybe the Navy can escort ships through. Maybe there will be a resumption of that traffic, but it won't be the traffic that we had before. It won't be with the same risks that we've had before. And that all has to get priced in. The one thing I would just say quickly about the price of oil today, I think most people are still thinking within the next 2 or 3 weeks, there will be flows of oil open up again. And that may be the base case that we should all accept.
Fear gauges to the max.
There is this
market is going lower and lower and lower.
Where we're stuck with a pattern of much less oil getting through at a much higher risk, which will keep this price of oil much higher for a longer time until, of course, there's a global recession, which will bring demand down and bring the price back down. So it never stays at $150 for too long, but that would be the worst possible outcome from an economic point of view.
Some crazy ass number, dude.
And of course, it comes through on the consumer end with $3.91 gas today. That's the average, the national average, according to AAA. All the while, Christopher Smart, Russia is cashing checks, making money here thanks to looser sanctions. And now feeling emboldened by what it's watching, and many believe that China is the biggest winner in the end. How about you?
Well, I think those are the unintended consequences of a war like this, where Russia not only benefits from the higher oil price, it benefits from Patriot and defense equipment that would be going to Ukraine or might be going to Ukraine, now being diverted to the Middle East for the foreseeable future. And it I think, feels like perhaps it has less reason to be pushed into a quick ceasefire with Donald Trump and the White House tied up and distracted elsewhere. I think from China's perspective, China has very large oil reserves, large coal and clean energy sources, which will help cushion the blow from lost oil from the Gulf. Meanwhile, again, it's not such bad news for China's perspective that all of these naval assets in the South China Sea have been diverted to the Middle East.
IWM at the
and if and
daily
when
200.
the
Dude,
summit does get back on the calendar, when Donald Trump does go to Beijing to negotiate whatever the future trading relationship with China, I think Xi Jinping will feel like he's got a few extra cards in his hand
I want to look at IWM
against a president who really will be looking for a diplomatic victory of some sort and a trade deal of some sort, and probably will have to pay a little bit more, a little bit of a higher price for it when he gets to China.
Wow.
What are you making of this market here? I know it's triple witching, but the VIX is close to 26. Christopher, obviously stocks are lower, and I'm seeing that day after day, but we're also seeing metals fall out of bed. Gold is lower.
Crazy.
The miners are down. And you've got interest rates ticking higher. The 10 years at 4.37 basically right now.
Okay, Mr. Block, you're getting
of
removed
this
from the group
sell
because you
everything
requested to
moment
join
that
the
we
alert
appear to
room.
be in?
Sorry, that's on you.
You know, I think as soon as you get headlines around U.S. troops deploying for any kind of land action in Iran and reinforcements coming from halfway around the world to help out in a few weeks or months' time, you start really wondering about the scenario that I and others bought into at the very beginning of this conflict. And even that, you know, our hope and expectation that it might start dwindling down in the next couple of weeks, you know, you start looking at those scenarios where it's months or even more of a conflict. And that's the kind of uncertainty that hits consumer confidence, consumer sentiment. And, you know, you point out the gasoline prices. We're coming into the U.S. driving season. That's always the big hit on U.S. spending. And so I think that's the beginning of what's being priced in there. On the Treasury side, of course, it's probably worries about, you know, inflation and some of these other pressures where the Fed has never been able to get back towards its 2% target, has been struggling to get back to its 2% target.
I don't know why people request to join the alert room when they have no interest. You're getting removed, though, because you don't listen. I'm talking to people that do that because there's been 50 people. All I ask is people have some sort of sense, you know, when I'm asking and asking every day. It's just nonsense.
It's great to see you, and I want to go back a couple of weeks from when you talked to us because you got a lot of people talking here in the newsroom as you described a millennia-old empire,
2.18 now,
right? And the prospect of toppling the Ayatollah. Every simulation you said the military has done is that if you took out the Ayatollah, you empower the IRGC. I know that you're a sage, Jen, but I could also ask you if we've simply forgotten some of the lessons of the past.
First of all, Joe, thanks for having me back. It's great to see you. You know, this is a circumstance in which I wish I had not been right, but I do think that that is, in fact, what we are seeing. A lot of attention is, of course, being paid to the lines of succession, particularly as various regime figures are killed in U.S. and Israeli strikes. But particularly with the naming of Khamenei, excuse me, you know, whatever state he may be in, all reports are that this was an installation more or less by the IRGC. So I do think we're seeing that consolidation of power.
2.2%.
What do you think of the talk of troops on Karg Island, occupy that position and use it as leverage to reopen the strait? Is this something that could work?
Holy shit.
I mean, certainly not on its own. As Secretary Panetta said, I think that, you know, you would have to secure parts of the Iranian border itself in order along the Gulf, in order to, or along the Strait, in order to really secure passage. I would note that the reason, one of the many reasons that this has not been undertaken in the past, despite decades of, I think, U.S. administrations, Israeli governments wanting to dislodge dislodge this regime is precisely for this reason, because the ability of Iran to disrupt the strait has been well known, and always seen as, no pun intended, but the nuclear option. And that does seem to be where we are at now, and getting it back open is proving, I think, to be every bit as difficult as everyone feared.
Boy, so the secretary also talked about what would be required to keep the strait open, the number of troops involved, and we've already started to pulverize their military capability in that area. General Dan Kane said A-10 Warthogs are at it. We've got Apache helicopters at it. If this continued for some more time, another month even, would that be an easier exercise, or is it simply just not acceptable to be wrong once? If you have an errant attack coming off a speedboat that hits a cargo vessel, then all of this is for naught.
Exactly. It's not just about air or land superiority. It's the fact that it doesn't take a lot for Iran to continue to disrupt, whether it's drones, whether it's mines, exactly as you say, whether it's a speedboat passing by. And so now that this has been...
And someone said, "Hey bro, why did you remove me? I didn't do anything wrong. I was watching your live stream on YouTube." First of all, brother, the live stream is only for people that have been active for a long time on the live stream. And I asked numerous of times, today included, to not join the group and to immediately request to join the alert room with no sort of interest whatsoever. Those type of people are the type of people to channel how to begin with, right? You did not want to listen. You requested to join the other group 7 times. I sent you an invite. You requested to join the alert room immediately. You got removed. It is how it is. QQQ is down 2.38%. Move on. QQQ is down 2.38%. SPY is down 2.23% at 645. I think it's down like $10 or $12 now on SPY. $13 down today. I'm gonna make a phone call real quick. Guys, I hear the death rattle coming from my computer. It's going drrr, 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 drrr. I'm gonna go buy a computer today. It's time. It is in pain. It's in pain. crazy. I could literally hear it rattle, rattle, rattle. I was wondering what it was. I think it's my fucking computer. Oh wait, you know what? It's my fan. Oh, okay, that scared the shit out of me. My fan was leaning on my desk. Okay, never mind. It's good. Yeah, what a crazy day. Look at that purple box. I said they're building some sort of liquidity like crazy for something. What a day. Yeah, no, I thought it was my computer fan going on, but it's not. Yeah, who does? Okay, let's see in chat. Who remembers the purple box? Right. Who remembers the purple box? I do. We were there for 3 hours. Right. Ah! Who remembers? Yeah, and people talking crazy getting server muted too, bro. We might see biggest correction 20%. What? Take it slow. Take it slow. Bulls are trying, but it is so... It was so fucked today. There's a lot of bears here, so...
That's specific to the equity market. Certainly we're seeing in other markets,
energy,
whether it's bonds or gold or Bitcoin, that there is some kind of reaction to the news. But then, you know, for equity markets, they're pricing in real-time information, but they're also forward-looking. So trying to kind of understand what's the second and third order impact of this very severe shock is going to be harder, right? So I think, you know, there could be two scenarios. One is the market is just telling us, we just don't know. You know, does anybody really know? And we'll wait and see because we've been burnt before.
Both of you guys got a 5 and 10 minute break respectively because both of you guys are saying some crazy ass shit. So.
Markets have absorbed geopolitical
I don't want
shocks,
my new people coming into the channel and seeing some crazy ass shit in chat, being scared of running away.
Global pandemics, it just moves on and it continues to go up.
So personally
you know,
biased.
That could be a second scenario.
I care about reality.
But
reality
I think overall,
says reality
we should always be asking,
about
is it
what might happen, what people are thinking could happen. Reality actually cares about what is going on.
Potentially, because if you look
every
this
day,
time,
what is in front of
the U.S. on
the
the one
actual
hand, you have
life
the U.S.
that exists.
You know, we have oil now, right?
Yep.
So it's less dependent on global oil. But on the other hand, we're trying to isolate ourselves more from global impact. So we're isolating ourselves, which is what we intended to, but then the rest of the world is realigning itself and potentially realigning towards China. So, you know, you have all these factors to play with, and then you have that markets just return 11% every year.
Right. You know, it's interesting. I mean, when we see, I guess we're all learning together kind of the choke points and the importance of the oil coming out of the Mideast. Less important to the U.S., as you mentioned, because the U.S. has now, over the last 15 years, become energy independent. But boy, a lot of the rest of the world, Asia in particular, some parts of Latin America really dependent upon that flow of oil. And that kind of brings into the global economic slowdown concerns, which in fact then will impact the U.S.
Right.
You know, it's tough to kind of think through that.
There's definitely this chain reaction. You know, it's not just about oil, it's about food, it's about, you know, how
fertilizer.
Energy,
We've seen fertilizer prices spike
and
just this week.
Every single industry needs energy to support it. We also have AI energy use, you know, so all of this will have material impacts the longer, you know, oil is at 100 or 150. But, you know, you mentioned emerging markets. You know, it's interesting because we're looking at that space as an opportunity because, you know, emerging markets have proven themselves quite resilient. You know, they've been through a lot of shocks before and they've managed to pivot very quickly. They're coming out of this, you know, with the better fiscal resilience, also better than developed markets. You know, so we see this also as an opportunity. Yes, there's volatility and there's uncertainty, but certainly there's a lot of opportunities in this space, and not all emerging markets are the same. You know, you look at Latin America, which is more commodity exporters. They're doing really well. You know, I look at countries like Brazil, interest rate at 15%. You know, there's going to be political uncertainty, but they're managing very well through all of this uncertainty. And then even emerging markets, we had Korea, single worst, you know, drawdown in its history, but year to date, it's still up 30%. You know, emerging markets still performing better year to date than the rest of the world.
You mentioned emerging markets, but you also mentioned gold in your notes. So that's another place for opportunity you see, value?
Yeah, so I mean, similar to how we're seeing all of these other asset classes that have these huge ramp up, you know, huge momentum, you're going to see some pullback. It's risk off, right? And gold doesn't seem to be acting like it's hedged for a risk off situation, but you have to think about the ramp up it had with all of this liquidity coming into the market. So we're seeing some of the marginal investors taking money out, you know, taking profitability. But if you look at the long-term trend line, it's still the you know, best performing asset class over 20 years, still up 1 year, still up year to date.
You say 2 cents, yet, you know, the other guy, and, you know, you sometimes, it seems like you want it to be we cents. If you say my cent and do that, I don't know, kind of counterintuitive, but it's okay. Thank you so much for hitting the like button. You know, it's all that matters. We got a lot of people that left without hitting the like button.
Now and penetrating deeper into Iranian airspace to hunt and
but
kill
yeah, I mean,
since the A-10 Warthog is now in the fight across the southern flank and is hunting and killing fast attack watercraft in the Straits of Hormuz. In addition, AH-64 Apaches have joined the fight on the southern flank, and they continue to work on the southern side, and that includes some of our allies who are using Apaches to handle one-way attack drones.
All right, what General Kane is talking about there are the weapons of war, and they've been initiated in this fight. The A-10 Warthog. They've been trying to retire this plane for 20 years, and she keeps coming back because she flies slow.
I understand,
but she can take it and she can
but I mean, do you
maneuver
really?
into different areas, all right? Deployed for 50 years. It's the only U.S. aircraft designed solely for close air support during the Iraq War and during Afghanistan. That was a tank hunter during that Iraq War. This is the Apache helicopter, can fly up to 170 miles an hour. What that might tell a military observer is that if you're flying helicopters in the Warthog going after missile sites and gunboats on behalf of the Iranians, you feel pretty good about your air cover, and you feel pretty good about not taking a lot of fire from the ground. And with that, let's go on over here to the map and show you the area of concern. It has been topic one all week, right? The Strait of Hormuz, at its widest point, it's only 24 miles wide, right? This is the choke point. You've been following the news. You know, maybe get one or two big tankers through there a day. They used to get 100 a day on average, so that is a major point of concern. We showed you this map yesterday. I want to point your focus here again to the southern coastline of Iran. It continues to take a lot of hits. That's the focus right now on behalf of the Americans and the Israelis. What else do we have here? There's a lot on this map, okay? These are the targets of energy on behalf of Israel, Saudi Arabia.
Look at this. Turning bullish.
Haifa yesterday. There was an Iranian
sorry,
drone
volume
that
is
went
bullish.
after a refinery in Saudi
trying
Arabia.
to come up to
you know what's going on in Kuwait, Qatar, the industrial city there, and also these gas facilities in the UAE.
There's 9 minutes left.
That's just the ones that were able to fit on the map.
Could happen in 9
so you got
minutes.
7
Things have already
nations right now
closed
that
off
signed
at
that document
3:45.
yesterday. They appear to have a partial commitment.
I
on
guess
behalf
they
of the
could.
US
I mean,
and Israel.
next week.
We'll see where
right?
that relationship
I honestly
goes.
think
Retired Vice Admiral Mark Fox, former Deputy Commander of CENTCOM, is with me now. And sir, great to have you on. Thank you for your time. What would you say? What does it take to solve this?
Market update video coming Sunday or Saturday night,
special
folks.
operators came up with an alliteration of find,
Keep your eye out
fix,
for that.
finish. Find the target, fix it, and then finish it. So the first part of that equation is you need to have what I would refer to as a godlike awareness of what's going on. You got to have an absolute 24/7, 365 absolute awareness of where things are and what's moving. That's the find. The fix is you want to make sure that you're going to an absolute 24/7, what I would refer to as a godlike awareness of what's going on. You got to have an absolute what I would refer to as a godlike awareness of what's going on. You got to have an absolute 24/7, 365 absolute awareness of where things are and what's moving. That's the find. Finish.
Sounds
Find
like
the target,
cycle.
fix it, and then finish it. So the first part of that equation is you need to have what I would refer to as a godlike awareness of what's going on. You got to have an absolute 24/7, 365 absolute awareness of where things are and what's moving. That's the find. The fix is you want to make sure that you're going after a legitimate target.
So logical. Okay.
I wouldn't be at all surprised that in some inland places that they would set up targets. They would be launching weapons from kindergartens or from mosques or something, trying to induce some sort of an international disaster in terms of putting ordnance in an innocent
market going bullish. If it goes to this pink line, honestly, it's healthy to see. I would not be surprised.
Innocent people.
I'm not saying it's going to, but it would be.
And then finish
it's going to pull back to somewhere
you're
here.
now putting lethal ordnance on
way
target
better to see than this fucking shit. Already went
so
2.3 something percent today.
We have been very
2.25% on QQQ. So
with this campaign,
let's see a good
we
little
need to stay
recovery
with
for
it.
the next
and now,
3
as
minutes
you hear
and
with
close
the
it
introduction
somewhere.
of the Warthog, the A10, and the AH-64, those are very, very good weapon systems designed to finish and to create the conditions now for innocent passage through the Strait of Hormuz with warships and commercial ships.
We have not talked about the Apache, the Warthog, until yesterday and again today, and you just heard the details on that. You know it as well as anyone, but there could be hundreds of targets in the Strait of Hormuz. I mean, we could be at it for a while, sir.
Yeah, this will take time. This is not a simple problem, but it is a solvable military problem. They are not producing more weapons. And in fact, we are destroying the places where the weapons are stored, the mines, the missiles, and then there's an attrition of the ones that they expend. They're not replacing that. So we have to be very patient and very deliberate. One thing that I would note is I have not seen or heard any reports of mines in the water. That's a separate problem. But to date, all I've heard is that there have been the slow drones and the cruise missiles and that sort of thing that have been attacking ships. So they have not been able to put mines in the water.
Nice and calm recovery.
Really good.
I'd love to see it.
One last question here for
Time
you,
is
Admiral.
3:55 for
two,
3, 4 more minutes to 3:50.
What's not, what's been accomplished,
Nice
and what is
calm.
yet to be. What's your biggest concern?
How much time do we have? How patient can we be? If we have the time, and time is the enemy, but it's also something that we have to be patient enough to accomplish this. So I think it's a matter of.
I'm not in this shit, but this is actually nice to see visually.
The economic pressure on one
today,
side of
finally.
the strait being more or less interdicted. The strait is not clogged. It's just a matter of the people who go through there don't want to accept the risk.
Yeah, confidence.
There have been ships that have gone through the Strait of Hormuz, but there's time of the pressure on the economy on one side and the time that it takes to accomplish.
Somewhere here.
Well said. Mark Fox, retired Vice Admiral, thank you for coming on, sir.
This is, I could close here too, but I mean, it could even rise here in 3 minutes.
Like and subscribe for all the Fox News latest on YouTube and catch full shows streaming now on Fox One.
Beautiful cycle. It's a beautiful cycle is what I see. After a beautiful day.
The difference between them and us is they had a Navy 2 weeks ago. Their radar is all gone. Their leaders are all gone.
Time is 3:55. Looks beautiful.
The next set of leaders are mostly gone. And now
they can even close it here and then go back up until Monday or come back down. I don't know, but it looks nice.
An additional 3 warships
it looked
and more than
nice.
2,000 additional Marines to help
I like it health-wise.
Regime. I'm
Now
John Roberts in
the
Washington.
market needs to close.
But a lot of news to get through.
We did.
2 minutes left.
So
3:59.
So one official
3:59
confirmed
is
the USS
3:55. The last actual 5-minute increment of the market before 4 p.m. close.
Are bound for the Middle
market
East.
is closing in between the LOD and the HOD, and the HOD is 9:30, I think, or like 9:45 on SPY, 9:30 on QQQ, and LOD is 3:40. SPY and QQQ together. There is no divergence at the floor.
But NATO won't do it.
Complete coverage for you right now. A retired U.S. Air Force Brigadier General John Tykert breaks down the latest moves in the Middle East.
But first to our Lucas Tomlinson. He's live in Dubai, where we're hearing
U.S.
word
deploying
that
additional 3 warships and 2.5K Marines.
That's right. Good afternoon, John. While the Muslim world celebrates Eid al-Fitr, marking the end of the holy month of Ramadan, a period of joyous celebrations here in the Emirates and throughout the Muslim world, the UAE announcing that it has busted a major terrorist cell funded by Iran and Hezbollah, according to authorities. We've asked some officials here on the ground to comment. They will not decline to offer specifics. Here's a mugshot of those 5 gentlemen.
is here in 49
John,
seconds.
Over 500,000 Iranians live here in the Emirates. Perhaps not all planning to participate in Eid celebrations, perhaps disrupt them. Now, the Pentagon says A-10 Warthogs are now engaging targets along Iran's southern coastline in an attempt to open up the Strait of Hormuz. The A-10 is a 50-year-old aircraft, a favorite of American ground forces for decades in Iraq and Afghanistan for its distinctive 30-millimeter cannon and sound when it fires nearly 4,000 rounds of depleted uranium a minute. Can also
everyone
carry
clap it up
IR
for the market, folks.
as well. Those are air-to-ground
right,
missiles.
everybody clap,
the
clap,
Air
clap,
Force
clap,
has been
clap,
trying
clap,
to
clap.
scrap the A-10 for years. Congress won't let them. Apache helicopter gunships are also engaging, and that also has a 30-millimeter chain gun on board and can fire Hellfire missiles as well, John. Now, despite more than 8,000 American airstrikes on Iran, a country more than twice the size of Texas, attacks on energy
watch the market update
facilities
video
throughout the
if you
Middle
can
East
when I post it on
continue.
Sunday.
Early this morning, multiple Iranian
If you're not in
drones
the WhatsApp
hitting
group,
a Kuwaiti oil
have the
refinery,
notifications
causing
on,
a partial shutdown.
I think we'll be
Drone
set.
attacks on Saudi Arabia continue, as well as here in the Emirates.
Clap, 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 clap.
Satellite imagery
Market is
showing
closing in
an
39
Iranian
seconds.
ballistic missile factory destroyed after U.S. jets bombed.
Oh my God! I can't believe we went down 2.25% intraday.
A little closer to home, John, as you mentioned, back in San Diego, the
2%.
USS
After it passed 2%, it was just
the 11th
waterfall.
Marine Expeditionary Unit, the pride of the Pacific, bringing more than 2,000 Marines to the Middle East. It will take about a month to arrive.
10 seconds.
Iran holding the Strait of
Market bell
Hormuz
is
hostage right
ringing.
now, perhaps these Marines give the president a little more leverage.
Market bell. You guys ready for the market bell? 5, 4, 3, 2, 1. Ding 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 ding. Ding 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 ding. Have a good day, everybody. What a amazing and God bless day. Bye-bye. What an amazing day.